Good morning, everyone, and welcome to Traders Corner's February special Leap Day Investor Summit. My name is Rob Anthony, and I want to thank you for joining us today on Leap Day. With a presidential election, the escalating Israel-Hamas conflict, and high interest rates and inflation rates, 2024 promises to create some great trading opportunities. On our panel today, we've handpicked 8 professional trading experts of the highest caliber, and they've agreed to share their most consistent and profitable trading strategies with us today in a free online educational forum. Today's show is packed with great information and special discounted offers, so let's get started. So let's leap right into our first presenter, who's been a trader and trading educator for over 4 decades. He has over 1 million views of his 4-minute drills for traders found on YouTube. He's a commodity specialist for PaineWebber and has managed extremely large trading accounts as a commodity trading advisor. Here to present the psychology of prop trading through the 3 mechanical adjustments to get funded is Mr. Norman Hallett of The Disciplined Trader. Welcome back to Traders Corner, Norm.
Thank you, Rob. As they used to say, let's get this party started. Is my showing? I think that was during the disco time. Get the party started. Psychology of prop trading. I'm looking for a screen share button. Is it here? I don't see it.
I'm looking for it too, and I had problems from my desktop, which is usually how I assign it. And I'm looking for it on the iPad because I got to be on the iPad today.
All right, check your time. Take your time. Oh, I see it now. Show my screen.
There you go.
As long as that's all I got to show. Okay. I'm going to blow it up. Thank you, Rob. I appreciate it. I appreciate everybody that's here today. I want to just get an idea of who is prop trading. How many of us are prop trading here that are attending this extravaganza? Can you give me a little bit of love in the chat here? Just let me know if you're prop trading now, or whether you're considering it, or whether you've been doing it and been blowing out accounts. Give me some indication so that I can twist and turn my presentation correctly. Just a couple of different. Okay. All right, I'm going to get into what I call the psychology of prop trading, because when you prop trade, for those that are unfamiliar with prop trading or have just heard a little bit about it, I'm just looking at some of the comments here. I really appreciate it. Let's look here. Thinking, doing, the thing I want to do. Prop trading, I think, is like manna from heaven if you understand the structure and what's going on. Prop trading is it's a situation where they will actually give you 90% of the profit that you earn by trading their money. But why do they do that? The reason is because they have an evaluation stage before they give you the money that has fees involved. Not a lot of fees. I'll show you a little bit of that in a second. But generally, they're almost negligible compared to the kind of money that you made. In fact, the first $1,000 that I asked for already covered all the costs 2 or 3 times of getting into the game, so to speak. The psychology of prop trading. So why, is it real? Is it true? Why would they do it? In fact, they pay me, and they would pay you, of course, 100% of the first 25,000 that you earn. So that's great too. And then 90% after that. Why do they do that? Because they know that 90% of traders will likely not pass the evaluation stage, even though it's not any harder than being a successful trader on your own, other than watching a few of the rules of which I'll talk about. But the idea of prop trading is real. There are some twists that you need to know, but nothing that should prevent you from reaping the benefits of prop trading. So let me get into the prop trading arena here with you in the psychology of prop trading, because really the psychology issue is an issue that all traders, prop traders or not, need to approach with fervent desire. Most do it part-time or not at all, and that's really why most traders are struggling. So let me get into it here. The psychology of prop trading. There are three major changes that you need to make. Let's reduce this now because I have seen the chat, and this month, and this is the last day of the month, this is an extra day that I am honoring my late dog Riley, who passed over the Rainbow Bridge at 16 years old, and he is, I'm sure, having a good time up there because he was a good guy, and that's his friend who is still with us here, also a 12-year-old dog. What they did was just say hi to every motorcycle, truck, and bicycle and jogger that runs past. We have an electric fence, so they can't really, not that they would do anything, but they are wagging their tails and barking at the same time. Anyway, a lot of the money, that the profit that, in fact, when we give as a firm, it generally goes to pet and issues, and we like something called Windhorse, which is up in northern Florida. Windhorse, why can't I remember? Not Windhorse Stadium, but it looks like they save horses up there. Anyway, so look up Windhorse if you're into it. What I'll be covering today is who I am, the red line and the green line. I want to show you what that means. The three major changes that your trading plan needs to make, I believe, to ease the way, to kind of grease the way through that evaluation stage, which I'll show you that some people pass it in a day. In fact, they're having a special right now with Apex, the premier firm that I think you may want to start with. They have passing your evaluation in one day. So your alternative is a trading plan with everything built in, and I'm going to show you, I'm going to give you an offer for the trading plan that we offer traders that have been massaged with the three elements that I'm going to talk to you about today, and traders are using for the last year and doing very, very well with prop trading. So I'll show you that at the end if you're interested, where we can do it together in that alternative that I'll be showing you. I work with you directly, and you'd think that it would be very, very expensive to be working with one-on-one, even with anybody that has experience doing this, but I've made it very doable for you if you'd like. Anyway, I graduated from the University of Cincinnati. I studied as I had my degree in mathematics. During that period of time, I worked at a place called the Prime and Wine Restaurant in Cincinnati, Ohio. Anybody from Cincinnati knows the place. It was a salad bar restaurant, but I realized that, and I was assistant manager after a while. After I graduated, I continued to work there, and I realized that the money was in drinks and not in food. So I took a job with a place called American Events Corporation and opened the first and second and third Park Avenue Club Disco. This was in the late 70s, literally. We were supposed to be a competitor to Studio 54. Never quite made it. We charged like we were. At that time, it was $1,000 a year to belong. We had the dancing women and the dancing guys, and we had the dance floor, the lit up dance floor, and everything was great. It was a great business. Loved it for about a year and a half. But after that, I said, hey, I don't think so. Running these nightclubs, hiring and moving on to the next one and opening, just too much action, too much action for me. And I guess in many different senses, you know, as a young guy, but that was, but I learned about business. I learned about entrepreneurship, and I said, what can I do with my math degree? Maybe I should use that. I love trading. I love the idea of trading. I love the idea of gold. My brother was a Harry Brown he loved Harry Brown, who was one of the first gold bugs. And so I got into it. So I drove from Wisconsin all the way to San Francisco, where my brother was, and I took a job with an option firm that was selling gold and silver options. My first trading experience was that I would work there 2 weeks, made a sale, and I walked in in the third week, and here's what I saw. The place was empty. There was a plant in the corner. I took that plant, put it in my car. I was actually chased by the landlord who said they owed him rent, and I told him, hey, they owe me money too, and they wound up, he said, go ahead and take the plant. You're in worse shape than I am. And so I took the plan and I went on, but I love the business. I love the idea of talking about gold and silver and helping people to navigate simple buy and sell, call and put options. So I took a job with one of the largest option firms in the country, and within about 18 months, I was the regional sales manager and the regional VP all at the same time. So I was responsible for making sure that the 63 brokers under my umbrella were doing the right thing by they all had their own trading systems and trading plans. And when they weren't doing well, they weren't making money for their people, they would come into my office and I would take a look at what their trading plan was. And inevitably, I would have my red pen out and start just, you don't need this, you don't need this. Complex trading plans, I find, for the vast majority of people, even professionals, don't work nearly as well as simplicity that's tested to work and easy to follow. Too many hoops, not good. So I wrote several books. One is still I think this one is still available on Amazon. In fact, books have been written about me, about inspirational quotes. When I go to the Traders Expo, they always have me up first to generate energy in the crowd, like you're hearing right now out of my voice. I'm very into this because I've had my personal success. I've helped others to have personal success way before the idea of prop trading. And the prop trading, the idea of trading somebody else's money, has a tendency to lower the emotional bar, which not all the way, but enough so that a lot of people who struggle with their own trading, especially with small accounts, $5,000, $10,000 type accounts, are doing very well with prop trading with my guidance. And I'd really like to help you to do that. Let's talk about what some of that guidance is in case I never see you again. At least I want to give you some content here so that you can adjust your own, adjust your own trading plan. All right, let's get into it. The red line: staying out of trouble is easier than getting. Staying out of trouble is easier than getting out of trouble. We used to say, I'd rather be out of a position wishing I was in than in a position wishing I was out. I'm going to talk today about qualifying for a $50,000 account. Even though you can qualify for 50, 150, 300. I suggest that anybody that's approaching prop trading start out with a $50,000 account. It's small enough. The target to get funded is very reasonable. In the case of using Apex, you're talking about making $3,000 on a $50,000 test account before you lose $2,500. That $2,500 drawdown line, the red line, that 25, I call it the red line, follows you. In other words, if you're at 51,000, then all of a sudden, instead of 47.5, which let's start from the beginning, a $50,000 account, 2,500 below that would be 47.5, right? You don't want to breach that. But as you gain, that line follows you. It's a little bit more detailed than that, but that's the basic idea. If you reach 51,000, then then that line becomes 48.5. So it follows you all the way to your goal of $3,000 or 53,000. Once you get to 53,000 and $1, all of a sudden you get the email next day, the congratulations, and now you're funded for a $50,000 account, which has a few different rules, even easier, even more open as far as trading that money. Won't go through all of that today, other than to point out that the red line is something that plagues traders that are doing this. In other words, if they have a couple of losing trades and all of a sudden they're only $1,500 or $1,000 away from the red line, they start to dry up their enthusiasm. They try to get a little scared. They miss trades. They revenge trade. Things happen when there's a red line that you're focusing on too much and not the right way. So you want to stay above that red line, and I've given you some example as this. You want to stay. My tip here and it's not one of the official 3 tips that I want to give you. You want to stay fully aware of the red line. You know, when I was with the nightclubs and so on, and even though it was great and there were a lot of fringe benefits, they didn't pay me a lot. I think I was making $30,000 a year at the time. Maybe that was good money back in the late 70s, early 80s. But you know, I was a big spender too, and you know, when you owe money and the letters come in your mailbox, I didn't like to even go over there. And at first, I would get the mail and put it on my desk in my apartment, and I wouldn't open it. Then I just stopped going to the mailbox and getting it, because I just didn't want to see what I wasn't able to pay. I didn't want to see what could be in front of me in bad news. That kind of thing can happen to you when you're trading anything. But especially in this, you want to keep going with the same. You can adjust your position size. I'm going to show you some of those things that you want to do as you approach the red line. If that happens to you, it may not be a straight line up as you trade and qualify, but as you get into it, I want to just make this point that you want to be aware of the red line. In fact, I now have 10 funded accounts totaling $800,000 to trade. There's a reason to have multiple accounts. We'll get into that some other time. But I want to say that that it is a doable thing, and what I do before I start every day is to see where I am in the red line in all those accounts. I want, the more you are aware of something, the more you can handle it. Okay, so this is one thing that I find the traders do when I'm working with them one-on-one. So I want you to stay away from that. I won't get into this more than to say the P&L measure versus the OTE. Why is it open trade equity? Geez, okay, thanks, Norman. I'm thanking myself for remembering. Oh, yes, this is a world of letters. Open trade equity. I won't get into that other than to say they measure, a lot of firms, including Apex, measures your drawdown based on your open trade equity, not your offsetting of trades, not your P&L. In other words, if you, in my example, if you started at $50,000, you had an open position and it was profitable by $1,000, and it came back down and you closed it out at break even, still at $50,000. That $1,000 you gave away is going to be counted against your drawdown. So all of a sudden it's not 2,500, now it's only 1,500. So you need an approach to grab profits when you have it while you're trading. So it may be a change. I've never been a scalper, but now I am partially a scalper. I'm going to show you what I do, and you can implement it in your trading plan, or you can work with me one-on-one, and we can do this together. So major drawdown, but you can turn it around and make it an asset, as you can generally with anything that looks bad, that you analyze and that you can understand how to approach it and either neutralize the ill, or actually take advantage of it, which I'd like to do better. I'd rather do the second, even though the first one is okay. And the green line, of course, is the line that is the $3,000 line, the one that you want to get to in order to be funded. You want to get over that, and then they'll fund you. But I noticed that traders, when they get very close to that, when they're at 52,500 or 52,800, they get tight. They don't want to give back. They don't want to give back anything. They're so close, and they wind up backtracking, doing some things, getting nervous, and actually receding rather than crossing the finish line. Again, there are some things to do. I'm going to show you how to not allow the green line to get you, so that you can cross the finish line and make it happen for yourself. Okay, let's get into are you ready for the mechanical adjustment? I'm going to take a look at the chat real fast. I just want to make sure that you're engaged with me. Are we ready to go here? Are we ready to get these 3 mechanical adjustments that you'll need to do? Just give me a yes in the chat, and I'll be forever your allow option spreads. No, Apex, as most of these prop firms, are strictly futures. There are some firms that do options. I'm not aware of them. I know there may be 1 or 2 that I've run across, but they didn't look like the kind of firm that I would like to do a business with. So you'll have to, what I say here, as far as I'm sure the angles and whatever, if you do find an option firm prop trading, most of them are stopping that and going directly to futures, because it works not only for the trader, but it works for the company. It's much easier to track and adjust. And you know, they are looking for traders who are consistently profitable in the long term, and that's what I'd like you to be. And that's, I'm sure, part of why you're doing all of this. All right, the first mechanical adjustment, based on some of the things that I've mentioned to you, the first mechanical adjustment is the psychological dilemma of when the market starts my way. You put on a position based on a tested trigger. You got to have a tested trigger that you know will give you what you want, maybe 2/3 of the time initially. When the market starts your way, shall I take the low-hanging fruit, or shall you let it run? This happens with all traders, especially new ones or struggling traders. This could be the dream trade. It gives you a nice pop when you first get in. Maybe this could be it. And you know, should I take what God gave me, or should I let this thing run? It looks pretty good. Well, there is a way to put that dilemma aside, and you want to build the mechanical solution is to build the distance from the red line via scalp and runner combo. In other words, you want to always take on two positions, okay? And you want to always put on two positions, and if it's a big risk, depending on how you measure your risk parameter, you can just reduce your position sizing, or use some of these micro contracts that are now available. I mean, a micro, not only the micro indexes, but the micro gold is only 10 ounces of gold, not 100. So there are ways of taking advantage of what in your measure would be too large a risk by downsizing as far as the position sizing is concerned, a very underutilized situation. But if you look at, you want to build that distance from the red line. What I mean by scalp and runner is the first position that you put on needs to be you need to always put on two positions. One is a scalp, one is a runner. This way you get both worlds. And what I do is I will take a look at a particular, this is one of our loaded gun triggers, okay? I won't go into what we use a couple of moving averages, basically one, and we use a defensive moving average so that we don't get twisted around. It keeps us out of false breakouts and so on. But in this particular case, let's say this was a trigger, okay? And you wanted to buy two positions right here. I always wait in my systems. I wait for the market to close. You'd be surprised what happens in the last few seconds of a candle. So I wait, and then the first, or I try to be the first click on the new candle. Okay, so if this was a trigger and I want to get in, I buy two here. As the market moves higher, now what I do then is I measure the, in this particular case, I measure the body of this, and I project that body higher. Usually a good trigger that has a nice pop will give you a movement very close, if not exceeding, to the, in this particular case, this particular extension candle. So I would be putting my limit sell in right in here. I'd measure the body, extend that here, and I put in my limit sell right here. And then I would put a stop in to sell both of my positions down here in below the two, one of the two, or whichever the lower of the two, in whatever formation I'm using to trigger. And in any event, I've got my stop down here. I've got my limit up here to sell one of my two, and the market starts moving. Well, as soon as it hits my limit, and I take that scalp, I move my stop to break even on the remaining position. And in this case, I would have been broken even. So on a trade where a lot of traders would be hoping for more and watching watching their demise, what you want, because you're at least probably expecting a move to challenge this high and it never really got there. You're hoping for more and it never got there. You're either going to be break even or losing. I put some money in the bank, because when I do that, all of a sudden that increases my distance from the red line. So you're always scalping. It is a nice pad, gives you that pad, and it solves the dilemma of, should I just take a profit or should I just let this thing run? So that's my first adjustment to you, that you need to start scalping. Take multiple contracts on entrance and scale out at the, and if you take multiple contracts, like 3 or 4, you can scale out. Take your first scalp, and then as it approaches here, if it were to continue, you take your second, and so on. So there are ways to take peel off as you're going, okay? But you want to continue to put money in the bank and stay away from that red line. This is a prime approach when you're looking to pass your evaluation and then move on. So you need a system that does that. Second mechanical adjustment would be increasing the increased cortisol level, and that's your stress hormone level as you near the red line. You can do two things. I mean, once in a while, you're going to get into a situation, especially in the beginning, if you're a newer trader, whatever, you're going to maybe have a couple of losses in a row, or you get close to the red line. There's two ways of handling it if your stress goes up. Now you'll have a solution so you can keep that stress under control. You can either take on smaller positions. In other words, if you have a trading plan that 60 or 65 or 70% of the time gives you positive results, then over time you're going to do well. Yes, maybe those losses came in, or you made some mistakes in your trading, and now you're at a certain position. If you follow your plan, and it's a good one, just start to reduce your position size. Take on 4 micro S&Ps or 4 micro NASDAQ rather than taking on a large position. Build your way back using the power of your tested trading plan. That's one way to do it. So as soon as I get to about $1,250, in other words, if I'm halfway to my red line, if that happens, then I will start to reduce. I don't want to get very close. The mental and emotional issues are what you want to stay away from. And I've learned how to do this. I can teach you how to do it. It was really where we started our business 20 years ago, helping traders with the mental and emotional. But I'm a trader at heart. I couldn't help. So about 5 years ago, I started again. I used to write trading plans for professional traders, as you saw. And then after, I was just doing it for professional traders after I left that large option firm. But there are a lot of ways of doing this, and I've got a few that are applicable here to pass your prop trading. So use micros and minis to build back. The other way is to reset. If you get too close to the red line, if you're within $500 of the red line, then you've got to bring back the account. You've got to come back up to even. So you got to make $2,000. I mean, if it's a $2,500 red line and you've lost $2,000 in your trading and you're only $500 away, you've got to make $2,000, and then you got to then make the $3,000. So now you got to make $5,000 in order to get funded. Sometimes it's better to reset. And Apex is always having sales right now. To begin at $50,000 account, it's only about $35 a month, and you won't need more than a month or two, okay, as you learn how to do this. $35 a month to test, that's not a lot of money. They post $167 a month, but they're always having sales. And so you got to measure, is it worth just closing that $50,000 account and opening a new one for right now $45, or should I reset for right now it's $40? So there's really no comparison here, but sometimes there's a difference. Reset, and then in the same day that account will reset, and all of a sudden now you're back to $50,000, and you did that by spending an extra $40. So you have a couple of choices. Build your way back, which I would suggest actually for most new traders. They don't have a reset button when you get funded. So to become a better trader, you want to learn how to build yourself back, because in those 10 accounts that I'm trading, I have in a couple of them I have had some losses, and therefore I know how to build myself back. You need to do that too. So I would suggest that you do that first. Learn how to reset, achieve that $2,000 back to break even, pat yourself on the back, and know that's going to help you when you're funded. Or you can reset and start funding and get funded and see what that feels like. So you've got the choice. There's no bad start. You can start from scratch and pay the reset fee. It's either $80 or $100, but right now, as always, they seem to have sales. And now it's $40, half of that. So do the math. If the reset fee is low, be aggressive. The experience of building your way back will help you to get funded. Okay, we are about 59. Let's see, I started 10:30. We got about 15 minutes, so let's breeze through this. The psychological dilemma of I'm close to passing and I don't want to lose ground. My suggestion to you is to, again, when you get close to that green line, is to trade 2 qualifying accounts at the same time. Start with 2 $50,000 accounts. Trade one a little more strongly than you trade the other. Okay. Initially trade them the same with your usual trading techniques, and when you get close to qualifying, trade them a little bit differently. I like to use the same contract with different exposure. In other words, you're taking the same signal that's been tested that you like in your trading plan, same contract, different exposure. Or you can use different contracts with the same usual technique. You want to go small? No, stick with what you got there. In other words, stick with your plan, but trade one a little bit stronger than the other. This way, if you do have a loss or two at that moment in time, you're not pulling yourself away very far from one of them. And yes, maybe you are on the other, but that's all part of the general process anyway. I want you to cross that finish line and not have and not have all the angst. So I'm saying to you, I have found the best way to do it, and I've coached people on this, and they love this idea of starting with two. I mean, you're not talking about an expensive thing to get started, as I'm mentioning to you. So I want to guide you through this so that you can get funded, and then I want to show you how to actually put money in your bank. And I've got somebody that actually did that. They had money in the bank within 3 weeks. They actually passed within 2 days. I'm going to show you some of that. But all right, those are the 3 mechanical adjustments that I hope you enjoyed that. I want to take just the last 10 or 15 minutes here to reach out to you and say, rather than do this yourself, it's really nice to have somebody that's done it for himself or herself, in this case, himself, and have others that have done it. We meet every last Wednesday of the month. We met yesterday, and just all these people that are talking about how the qualifying, and they just qualified for 5 accounts. They they just got their first check. Then somebody just requested money for the first time from 2 of their accounts. It's so great. That synergy is what drives you. It drives you. It drives me, as you can see. And it doesn't drive me crazy. It drives me joyful, and everybody is supporting everybody else. We're in this together, okay? So here's what and here's what they give you when you pass. As soon as you get funded, they give you these things, and I just wanted to show. I also passed with a firm called Top Step when I first started, then moved over to Apex. That's what that looks like, and actually, this is what it looks like right here when you make your first. Back in May was the first time I asked for money. I asked for $1,000, and they send you a certificate of payment. I don't know why they do it. They're constantly, patting you on the back. And what they want me to do is to brag about them, like I am, and letting you know that there's opportunity there, and I'm taking advantage of the opportunity. And so, and of course, so the second month I asked for $2,000 and so on and so forth. They always send you this. Actually, this is the one I have posted on my wall. Remember, I told you I was in the restaurant business. I used to post the first dollar. So that was my first thing. That was my first withdrawal. And in fact, when I got the money, I called the bank and I said, "Hey, is this for real? Can I spend this money?" "Yeah, it's just as good as any other money I have there." I couldn't believe that they were doing this, and that I could help people to do this now that I was successful back in May with the first. With the first payment. So I want to show you how to do it. Okay. So let's move on and make this happen for you. Oh, and I've just passed a couple more since I made that slide. All right. First of all, I'm not going to go through this, but if you're interested in my comparison of the different prop firms and why I arrived at Apex and Top Step, but mostly Apex, just email me at admin@thedisciplinedtrader.com. And by emailing me here, just say, "Hey, send me the study." And I will gladly just reply and send you this study. But here's what it looks like. Again, let you write that down, admin@thedisciplinedtrader.com. Here's what one looks like. I chose Apex because I wanted a firm that was there for a long time, and I wanted one that was paying out increasing amounts over time. I wanted one that was growing. Well, they've been around for a few years, which is rare in some of these firms. A lot of them are popping up right now. They just passed $100 million in payouts, Apex. They have a high rating on Trustpilot, which is good. They trade. They have traders from 150 different countries, and they actually just the last 3 months they paid out 39 million. So it just goes to show you that over 2 years, 100 million, since I think that figure is 2002 and 2003, 100 million. But the last 90 days have been over 30 million. That shows you the growth in payouts. So this is real. It's happening. Let's do this together. I'm doing it. My people are doing it. Let's you and I do it. As you can see, that $50,000 account that Apex offers in this study, it's $167. Like I say, they usually have 70, 80, or 90% off. When they have 90% off, it's only $16.70. Here are the parameters that I talked about. Anyway, if you want to see that, if you want to see the study again, go ahead and here's the admin at the Disciplined Trader. Just write me. All right. And I want to give you, what I want to do is hand you over my simple trading plan. It's called Loaded Gun. It's been around now for about 3 years and recently adjusted for this prop trading phenomenon. It gives you the core Loaded Gun trading plan, which are videos, all the rules that fit on one sheet of paper. Remember I said simple. This is a simple, when you look at it, managing it and keeping your profit is not complicated, but it's just another thing. Everything is simple and clear. This is why people are winning. Okay, I'm going to give you the core Loaded Gun trading plan. In fact, there's only one video, and it's about an hour long that teaches you entire thing. So this is not a complicated thing. This is why I urge you to do this. Okay, and there are 7 videos of what I call nuances. Remember I said the importance of the mental and emotional game. All of this I'm giving you today is countering a lot of that mental and emotional angst of any trader, but especially prop traders. Okay, there are currently 7 nuances. These nuances are ways, are optional things that you can do that only increase your risk marginally, just a few ticks usually, but fit you as an individual. In other words, if you're somebody who is impatient and wanting to trade all the time, there's a nuance for you. If you're somebody who is more patient and wants to have something, another confirmation, I've got a little nuance for you, but not much. I don't like to complicate things. There are nuances for all that really help traders to stick to the plan and lower the core. Nobody does this but us. These are built-in things that you can opt to put into your trading plan to fit you, so that you have an easier time and more accurate time running even this simple trading plan. Okay, and we have the monthly get-togethers, which I mentioned, told you a little bit about yesterday. If you don't make it live, where we share experiences, then you can get the recordings, and I think there's about 25 recordings right now when you log in. So I want to give you the first bonus. I want to work with you on this. This is the way I found everybody gets the fastest start. Unlimited one-on-one coaching sessions for 90 days. Okay, as soon as you invest in a Loaded Gun simple trading plan, you're going to get an email with a calendar link where you'll be able to schedule a personalized one-on-one walkthrough with me. And I usually talk a lot more slowly, but this is an hour presentation, then I'm squeezing it to 45 minutes. So I can slow down and we can get to know each other. I'm going to proceed to learn about your trading background and advise you how to get a quick start with your new purchase. Now, as you perfect your running of the plan, I'm going to be there if you need me, as many one-on-ones as you want to pass your evaluation. You have the group meetings, you can email me, and sometimes if it doesn't rate a meeting in your eyes, then just shoot, hey, I have a question about this, shoot me an email, I get right back to you. People are astounded that I get back to them within minutes, but I'm always watching that for my people, okay? I want you to do this so that you can brag and we can all do more business. The more people we get to pass, the more exciting this is going to be for everybody. So I'm gonna be there if you need me, okay? I'm gonna be there with you every step of the way. So to tell you the truth, most people don't have more than 1 or 2 sessions with me, and that's fine. But if you're a person that wants to stay on top of it in your way and you want to meet every other week or every week, it's fine with me. I have no problem with it. Okay, we're going to discuss the application for you and your type and the kind of person that you are, but using the same trading plan. Okay, so now some people take the Loaded Gun trading plan, most of it, 90% use it as is. There are some 10% of professional traders who have worked with me and who are in this just because they know who I am from years ago and have this program and have taken some of these elements that I've shown you and more and put it in their own plans, and they still come to the meetings and we all have a good time. Okay, so I want unlimited one-on-one. Let me hold your hand and let's do this together. Okay, the magic of one-on-one coaching, I won't go through this, confidentiality, tailored returns. The most important thing is the accountability, I think. If I want to know that and I want you to look at the videos, and then I want to get together with you. In the first meeting, I'm not going to test your understanding. I'm going to describe an obvious trade, a couple of them, and I'm going to ask you what you have questions about, what you don't understand, and so on. Well, you need to be accountable. And then maybe I'm going to say, let's meet 2 weeks from now. I want to see what you're doing, know what you're doing. I want you to get this down. It's a simple trading plan, but to be accountable, even to a simple trading plan, makes a world of difference. I'm going to be there for you, okay? Just this week, Mike wrote and said, I passed the Apex $100,000 evaluation in 4 days, trading loaded gun. Mostly scalping, but a few runners brought it home for me. I call them scalpers and runner. I explained to you the two position thing that we do. I still have a few trading days left to finish to make $6,000 in 4 days this week. Great trading plan. Thanks so much. A part-time trader. So Mike trades in the morning before he goes to work. Here's another one from Sandra, who's addressing Tisha and I, because Tisha works on it with our mental part also. I'm making some progress now. I really credit your guidance and your voices in my head. Now I have 3 funded accounts with Apex. This was a struggling trader. With Apex, I requested my first small payout from 2 of those accounts yesterday. She requested $500, which is the minimum from 2 of her. So all of a sudden, that $1,000 paid for everything that up to that point that she was, and now she's going on. I'll probably be talking to her tomorrow about it. But she's a terrific trader, and didn't even know it. Okay, just needed the right trading plan. And this week, just this week, Ken wrote and said, please share with your wife that since funding my first Apex $50,000 account, which is the one I suggest that you start with, last Thursday, and 5 more 2 days later, this Tuesday, on those 10 funded accounts, he had a profit of $21,025, real money, all trading the NASDAQ, and working on 5 more to get funded too. God has richly blessed me. Ken is let's just say Ken is he's an up guy. I mean, you think I talk fast. Ken is a type A. I really try to slow down when I trade, and when I work, I do. But yeah, Ken never slows down, and boy, he's got some great results. So congratulations to Ken. And yesterday, and I just clipped this from an email. Tiffany wrote me and said, sure thing, almost passed the first day. It was 37,500, but then lost my footing. She made a mistake, but got back on the horse. And today took the $75,000 account to the 79.5. You need 4,500 in the $75,000 account, and now she's funded for that and more since that was just yesterday. Okay, and she's working on something today. So just we're all doing this together. So let's consider that. I want to give you a second bonus. And that second bonus is it's a done for you setup. Apex and Top Steps, they have a more advanced setup. You have to have the, of course, NinjaTrader, something like that, and you have to have the data feed. And to set that up can be a problem. I want to set that up for you. I'm going to connect you with my young genius who'll jump into your computer and set everything up for you. So I want to set up the data feed and trading platform. So all you have to do, just tell me, I just opened an account with Apex. Fine, I'll send my guy over. He'll set everything up, and all you got to do is start trading. Okay, here's somebody that actually paid $150, which is fine and very reasonable. He said, all in all, it really went well. Brady is obviously skilled. His cursor darted back and forth without explanation. I ended up feeling like I had gotten a bargain. I'm giving this to you, okay, because I don't want you to be, I'm a technophobe. If you're a technophobe, it took me a week to set it up. It's going to take you 15 minutes, okay? So here's my offer to you. The entire get funded offer, loaded gun simple trading plan. You get the core, which as I said, is the simple trading plan. You saw all those people that I pounded to be more simple so they could be successful. You got the nuances to adjust it, any tweaks to yourself, which people really love that idea. And we have the monthly get-togethers. I'm giving you the bonus of the unlimited 90 days and the hands-on setup. But I'm also giving you a guarantee. I'm so confident that following the loaded gun simple trading plan is going to result in you getting funded by your prop firm so that you're using their money and not yours and still receive 90% of the profit. Just share your trading experience with me, that you followed the simple rules, it didn't work for you, and I will refund your purchase plus $500 for your trouble. That's my guarantee, and there's no guarantee like that. So you get everything I talked about, the simple trading plan, the 90 days of coaching, unlimited, as many chances. I'm going to set it all up for you. It's normally 52. It's posted right now. That's the value. It's posted right now on our site for $24.97. Right now, I'm going to give you 50% off for $12.47. Let's get started with this. Just go to theirmoneyyourprofit.com and use the coupon code Riley. Okay, theirmoneyyourprofit.com. Use the coupon code Riley, and let's work together And when you get to the page, there's a chat button. I'll be on that chat button if you want to talk. If you go to theirmoneyyourprofit.com, if you have any questions, since we didn't have time here, I'll answer any questions there on the chat. But I think I've been fairly clear. Let's do this together, and you've got my guarantee, and we'll make it happen. There's a limit of 4 traders right now because I just took on 2 more the other day. So I really, it's a lot of my time, but I really want to help you to do this. It's very exciting. Okay, it is 11:15. We have the next fabulous presenter up, but I wanted to make sure that if you're thinking about prop trading and you want to be in a community of prop traders and those that are succeeding and have me help you to be one of those that succeed, let's get going on this. Okay, thank you. Appreciate it, Rob.
Thank you, Norman. Congrats on your success as a prop trader. Great information. And I see you've done your due diligence as usual. Norman, it's always great to have you on Traders Corner. Over 1 million views on YouTube, ladies and gentlemen. This is Mr. Norman Hallett. You can find him at thedisciplinetrader.com. I did put his other link in the chat. I'll put that in the chat too. But if you're interested in being mentored by a professional with 40 plus years experience who can pass a prop trading evaluation with ease, look no further. You can learn more by clicking one of the links in the box. Thanks again, Norman. It's always a pleasure having you. Happy leap year day.
Thank you, sir. Remember, everybody, to use the coupon code Riley. Okay. Thank you, everybody, and thank you, Rob.
Thank you, Norm. Have a great weekend.
You too.
Ladies and gentlemen, we've got a great lineup today of seasoned trading professionals. And if you trade options or want to learn more about options, then you'll want to listen very carefully to our next presenter because he was just inducted into the Traders Hall of Fame way back in 2007. You've probably seen him appear on CNBC, Fox News, Bloomberg Television. He's the founder of BigTrends.com, which provides investors with specific real-time stock and option strategies and investment education to profit from significant market trends. Here to present how low-priced options traders has been hitting up to 200% is Mr. Price Headley of BigTrends.com. Welcome back to Traders Corner, Price.
Thank you, Rob. Appreciate you having me. Everything coming through loud and clear?
Loud and clear. I got your splash screen up. You look good.
Hey, Price, just saying hi to you, Price. It's Norman.
Norm, it's great to hear your voice, and I love listening to what you had to share. It looks awesome what you were talking about.
Great to see you. All right, Price, be well, my friend.
All the best to you. Thanks, Norm. All right, Rob, we're going to get it rolling. Great to have everybody with us. We got, as you know, lots of great speakers. You just heard Norm. I'm thrilled to be sharing what I've been doing in the options markets, and I know we got a lot more great speakers to come. You know, one of the things that most of my big trends community is looking for, of course, not just big gains, but also low dollars at risk. And so one of the things that's really been ideal is actually, it's been a big shift for me in my trading experience over my 34 years of options trading, is that I used to trade the much more conservative options, but I've gotten more aggressive because you can actually control your risk very quickly with these cheap options. And then you can, of course, as you get good at it, you can add to it, you can build on it, you can buy.
Price, I think you accidentally muted yourself.
Thank you, Rob. I'm not sure what happened there. That's odd. Okay. Well, anyway, we'll start over here. Great to be with you, Rob. Thanks for having me. And definitely, you know, we're going to walk folks through how I've been hitting up to triples on our low price options strategy we call Home Run Options Trader. Just a quick reminder that everything that I share with you in today's presentation is intended for illustrative purposes only. Should not be considered specific advisory recommendations here. As you know, stock and options trading have large potential rewards, but also large potential risk. The past performance of any trading system or method is not necessarily indicative of its future results. Do see our terms of use on our BigTrends.com homepage for more information here. So with that understood, if you don't know me, I've been trading options for over 34 years. I caught the trading bug while I was a student at Duke University. Upon graduating from there, I became an analyst at the nation's largest options newsletter at the time in the 90s. And then in 1999, started my own firm, BigTrends.com, now on our 25th year. blessed to serve many tens of thousands of folks, and including I see some familiar names in here today. So bottom line though is my philosophy is you've got to have a system. You've got to have a method to the madness. You got to then be able to turn what seems like the chaos of market movement into an orderly methodology that you can say, this is where I take money out of the markets on a regular basis. There's always going to be a risk in any trade you make. You're going to have wins, you're going to have losses. I'm not ever saying you can't be perfect in any trading strategy. Anybody tells you they are, you should not walk but run away. But I want to walk you through how I do things and control risk, but still get tremendous leverage with options. That's the original attraction of options, finding that ability to make many multiples on what your investment is. And in this case, doing it for $100 or less per contract. We call this home run options trader, where you can hit doubles and triples pretty easily, and get the occasional even gap even bigger than that to clear the bases. But the principle of this is that this is something where you have to find the right structure, the right setup. When you're buying these more aggressive options, you need speed. I have a need for speed of movement here, and the reality is we're going to walk you through a bunch of success stories, chart examples, what's worked, what hasn't, talk about how we manage not just winners but also how we manage losers, and then give you an opportunity to take advantage of our newest trading strategy called Home Run Options Trader that our Big Trends community just recently found out about, and I'm sharing with the good folks here at Traders Corner today. So I'm glad you're a part of that with me today. Let's start by looking at a chart. A chart's worth 1,000 words, as we know, and this is a winning trade example. We'll show you how the strategy works, but more importantly, talk about the philosophy. One of the big philosophies that I've found in 3.5 decades of options trading is that sometimes the conventional wisdom, it can not just get you in trouble, but it actually can cost you a lot of missed opportunities. And the conventional wisdom I want to try to basically break down and break apart today is the idea that if something goes overbought, you shouldn't buy it. Okay, that's not necessarily right. In fact, my best wins to the upside have happened when we get something going overbought on, not in this case, not just one indicator here, but actually two indicators setting up to say both of them are going overbought together. That's not when I sell. It's actually when I want to buy. Why would I buy something that's quote unquote overbought? Because most overbought indicators and oscillators basically are keyed around the thought that, sure, if it's a trading range, if it's a choppy environment, overbought, oversold traditionally will work quite well. But when something's going into a big institutional accumulation phase, where guess what, the big money that, let's face it, you and I don't drive the markets, the big money institutions do. That's what you want to see, is that they are going to start plowing their money in, and it's almost like they're not going to stop. They're not going to take their foot off the gas pedal. They're going to keep buying every dip and looking for opportunities to keep building their position. Why? Because they've got insight that says that, you know what, this stock should have good earnings, good news, was products, management, you name the reasons, upgrade coming, whatever they know. I assume that somebody knows more than I do. Okay, I think that's served me really well to stay in the game for 35 years and counting, because I believe that my job is just to follow when the institutions are starting to hit the gas pedal and starting to get more aggressive and accelerate, right? And so what we do when both of these indications break out here, and we'll walk you through both of these techniques. In fact, I'm going to give you a little bit of an overview. I can't give you the parameters, but I'm going to give you what the indicators are. You can follow along at home here. It's called CCI, the Commodity Channel Index, and Larry Williams' percent range or percent R indicator here in this bottom panel here. So both of those indicators are classic kind of overbought, oversold, but when they go both overbought at the same hourly close, these are hourly 60-minute charts here. And when they both happen to break out together, we're buying the call. Okay, we're betting that this stock's going up. CVS Pharmacy was trading around $75. This is back here in the last couple of months. But the idea is that, look, it's breaking out there. First of notice, we caught this first big leg up here. You see that leg up here amounted to about a 3-point move, 75 to 78 or 78.5. All that happened that same trading day. We got onto this position and wrote it up into the close and said, you know what, we're selling the first half of our position when we can get a double. Now, this is a key fundamental principle of mine. If I can double anything, I don't care if you trade equities, options, ETFs, futures, Forex, Bitcoin, pick your poison, pick your vehicle. It doesn't matter to me. But if you can double something, I'm a big believer you should sell half of it at a double. And I've seen this countless times in my trading and investing career, that when you can sell half of something at a double, it frees you. It frees you psychologically and financially, right? If you put $1,000 into a trade, you sell half at a double, you get your original $1,000 back, your original risk capital back. Get a double, whatever you put in when you take half your contracts off at that point, right? We paid 97 cents. That's $97 of stock. So if we're putting up to $1,000, that would mean we would get 10 contracts for a total of $970 and control 1,000 shares worth of stock. 1,000 shares would be worth 75 grand. We're controlling $75,000 worth of stock for $970, under $1,000. So when you sell half of it at that double, 101% in this case, and in this case, it happened very quickly, right? I don't care if it happens an hour later or many days later, as long as I can get the double on the first half, I take that first half off the table. You've not only freed yourself financially to say now you have the quote unquote profit objective that we all feel in trades going, uh-oh, is this one going to slip away? Is this trade going to work out? Is it not going to work out? The idea is that, look, we want to free ourselves emotionally and psychologically, not just financially, to let the trade run. So notice what's happening on these indicators as it goes overbought, and it keeps making higher and higher highs. And also, by the way, you can see mostly higher and higher lows here, right? We're continuing to trend up here. And so we're not much is happening after we sell the first half at a double. It's grinding a little bit higher, but we're looking for a triple, a 200% gain on the second half of our trade with this strategy. And we have these points, I call them retest points, where we're getting percent R will tend to show them first, where you're seeing those retest points triggered. Actually, CCI gave you one here as well when it tested back under its overbought threshold. As long as those retest support points don't get violated, we keep holding the trade. So that retest is important to tell us, is this stock still staying strong? Is it still getting the buy the dip type of accumulation from institutions, or is it starting to now get unwound the other direction, right? So we hang in there at that support near about 78.5, 78 3/4, and then it rockets up on the second leg up here to about 81, almost 80 3/4. And now our second half's being sold. Remember, we sold the first half out at about $2. And then the second half sold out at about $3. That's a 204% gain on our original 97 cent per contract, times 100 shares per contract means $97 to control 100 shares of stock on one option contract. We're selling that at now $300, up at 204%. So you see the first half out at a double, second half out at a triple, you average about 150% or a $1,480 profit on your 10 contracts. And how long did that take? From one Tuesday to the following Tuesday, right, with a holiday in there. Point being that, look, we're looking at a nice way to look at a chance to take 1,000, turn it into 1,000 or $1,500 in a week or so. It doesn't always happen that way. Sometimes we'll get stopped out. Sometimes we'll get, a smaller profit objective. If it doesn't get on up to it, I'll share with you how we manage that. But when you go back and look at the past, obviously the past doesn't guarantee the future, and any of these charts or any of these broader trade examples, but when we add up all of our winners and losers before commissions, before subscription investment, if you started with just a $5,000 account, looking back to the beginning of 2021, again, I can't guarantee the future, but the idea is that looking back at the past, we generated a $12,486 total gross profit, adding up all of our wins and losses, putting in no more than $1,000 a trade with no compounding. Okay, that's another important point. If I compounded it, sure, I could show it bigger. We're saying, look, you could take a $5,000 account up to about $17,500 gross. And again, commissions have come down dramatically, right? If you're putting in $1,000 a trade, we're buying never more than about $100 per contract. You could typically get about 10 contracts or a bit more into each new trade recommendation that we make. So the idea is that we're going to continue to roll these over and look for these chances to get quick doubles, take those risk-free trades, turn them into the chance to then turn the rest of it into a triple, and that's going to stack up into home run opportunities for your portfolio. But you say, how was this performance achieved? Again, look at some other examples here. Here's a great fresh kickoff of a second leg of a trend. You see Caterpillar had given a first kind of a leg of a trend back here, and it didn't do a whole lot in that first leg, but our system picked it up for the second big leg up here, right there in the middle of the day on a, you can see in this case, a mid-December Wednesday, where we're buying into the out of the money calls. Remember, stock's just breaking out. You say, this doesn't look like that much of a breakout on the chart, but remember, we're following the chart structure. And by the way, they both have to break out together on that same hourly close, meaning that they were both below their threshold values, and now they're crossing above their threshold values at the same hourly close. If one crosses above on this current hour and one crosses above the next hour, no dice. It's got to be of a power that says they're both giving us fresh breakouts together. We call this double confirmation, right? If one indicator is good, two effective indicators is more than twice as good from our point of view, because the idea is we need that confidence, that conviction, that weeding out of the kind of questionable signals, and that will help to not only improve the quality of the trades that you make, it'll also help to improve your confidence in taking each new trade. We call them out through real-time email alerts. They can come up at the end of any hour, and we look at the 10:30. We just passed the 11:30 hour trades an hour ago. Our brand new but looking at opportunities here to say we want to focus ourselves on the best of the best. Okay, so Caterpillar starts to move up that first day, middle of that first day. We're not taking profits yet, but then we get the big gap up the next day. You can see the stock has gone up here into the upper 270s from our entry point, which was in the 262.5 range. So we've rallied about 15 points. In percentages, that's what, about a 6% gain on the stock, and we're taking 107% on the first half target of a double, right? So you look at this, okay, first half target was a double. Obviously, if we paid 53 cents, that was a pretty cheap option, right? 53 cents means we were controlling, for every 100 shares of stock you could have bought in Caterpillar would have cost you over 26 grand. We're controlling $26,000 plus worth of stock for just $53 on each one of those contracts. So in this case, think of how many contracts you could get on $1,000. We're pushing up into the neighborhood of about 18 or so contracts. So in terms of how much stock you're controlling, you're pushing up into controlling nearly $500,000 worth of Caterpillar stock when you buy $1,000 worth of options. Can you see the leverage potential of that? Yes, it's tremendous in the theoretical 500 to 1 range. Now, of course, this one ended up where we needed about a 6% move to get a 107% gain in the option. So it proved to be more like about 17 or 18 to 1 leverage on the first half of that trade. But you can see then it just keeps trending. The second phase up, that next day from a Wednesday entry to a Thursday, by the end of the day, we're up to as high as 285. So look at how much to get our 201% second half of our trade booked. You can see it was a situation where we saw that we had it at a, what is that, another 10-point move was about another 4%. So we made up to about a 9% move up in the stock, maybe not even quite that much, maybe 8%. 8 or 9% move in the stock ends up with a 201% gain in those options. So beauty of that is that we look at this type of situation and say, we can't guarantee that in the future. The next time we trade Caterpillar or any home run options trader name, we can't guarantee if it's a win or a loss. But I can tell you that we're looking at this structure of the markets, this pattern for trading opportunity, and saying, okay, let's talk about a downside trade. What do you do for bearish put trades, right? We're only buying options with this strategy. We're not trying to sell premium. We're not trying to do spreads, keeping it really, really simple. So when you look at this, you say, okay, here we go. We're getting a bearish setup where both of these are crossing under their quote unquote oversold threshold. Should you buy an oversold market? Certainly not according to this system. You can see we're getting that signal into the hourly close here. This is Zillow, ticker symbol Z. Zillow.com, as you know, the leading online real estate listing service out there as a publicly traded stock. Well, you say, okay, guess what? we had to buy the almost 10% or so out of the money 45 strike puts. This was happening in a mid-September entry point, going out to the mid-October expiration. We usually have about a month to go before these options would expire. You can see here that what we're catching is a first quick wave down from 50.5 down to about 49. Then it bounces back against us. Should we get out on that bounce back? Question mark? No. There's the first tool here, the %R, gives us what we call a classic retest. It says that should be resistance. We'll call that the R for resistance here, and say it does indeed hold that resistance. We don't get an hourly close above that. And then on the next leg down here, you see as it pops down to about 40. Of our trade for 100% gain. You say, how's heat? We're able to cash out of that first half. Is that possible to put to a dollar contract? It's because the time value gets valued more richly as target. We've gone from 5.5 points away from the 45 strike. Remember, on a put option, that's a right to sell the stock at 45. That right gets more and more valuable as you get further and further down on the stock. So we've gone from 5.5 points away from the strike price to now only 3 points away, right? We've made a quick 2.5 points closer to the strike price. That means that you're not losing much time value, what's called theta in the options pricing model, and therefore you're picking up more effective time values. You get closer and closer to the strike price. Now in this example, you see it never got to our strike price. The low is 46 and out of the first piece. We're not at 100% gain anymore. Both of the indicators here, we catch that kind of a breakout here. Both of the indicators are staying overbought. We're saying this is the kind of situation that we want to stay with to the upside. That's the big breakthrough here on this methodology and this awareness I want you to have, is that steady breakout phase here can really be where you see the big acceleration in price action as we basically kind of break the indicators, if you will, out of their normal, what usually works in a trading range that overbought will tell you it's the top. It doesn't work anymore, folks, in a big uptrend. Overbought keeps getting more and more overbought. We want to stay with those trends and let it keep running. When you look at closing trades that are negative after the first full trading day, this is going to be where we exit trades that are not working, okay? So from this perspective, we say, okay, and I see some of you saying we've got a bad connection. We may have some sound breaking up and down, and I apologize for that. If we do have that where it's not picking up on the recording, we'll seek to get you another presentation we did on this home run strategy. So all you need to do here, I'm going to give you a dedicated email to reach us. And so I apologize I know that can make for a tricky watching experience and might be an issue on our end. I'm being told, so I apologize for that. Let me just remind you where you can go to make a request. Send an email to clientcare@bigtrends.com. Ask for a home run trader free presentation. We'll send you a recording of that if it doesn't come up on the archive here. Okay, so bottom line is that apologize for that, but I do want to, if we do or come back online here, I want to keep going to share with you because it's worked so well. I hate for you to miss out on potential new opportunities that we've got for you here. We never want to get stuck in a slow moving trade. We give these trades one full trading day to breathe. So if I got on in the middle of today, I would look at where are we by the end of the day, the last hour of trading tomorrow. Okay, so if we've got a situation where the last hour tomorrow, we're not in a profitable situation, the stock has moved against us, and we really graded off the stock more than what we paid for the option. If the stock's working, we want to give it a chance to keep working. If the structure of those indicators is still looking very positively bullish or badly bearish, want to give it a chance to keep working. If it's not working, we say get out of the trade at the end of the next trading day. So here's one that we did have to close out. This was a bull trade we made on MGM Resorts, the casino operator. You can see we bought it middle of one day. It ends up gapping against us, and by the end of that first full day in the trade the next day, we're saying we're down on the stock, right? It was at about 45.7. We're now at about 44.6. We're down by about $1. So it gives you a flavor for, you know what, okay, we lose about $1 on this. We end up losing about 34% on the options. A 10 contract trade lost $330. That will happen. It could be bigger or it could be smaller than that. But the idea is that if it's not working, that's our rule for getting out of the trade. This is why we say never overcommit your capital. Always take a kind of a slow and steady wins the race approach with this. And that will help you to be a lot more kind of stable in your trade experience. It will also help you to not get stuck holding the proverbial bag, right? We don't want to hold trades that aren't working. The trades that are working right away are your best trades. Those are the ones you want to keep hanging on to, folks. You don't want to put yourself in a position where you hold and hope on losers. You want to hold on to winners. That's why when we get a double target, we don't take the profit at all of the profit at 100%. Some people will come back to me and say, oh, I took a 30 or 50% gain and felt smart doing it. And then I'm like kicking myself that it went on to 100 and 200% target. So the idea is that when you're on the winners, give yourself a chance to keep riding. When you're on losers, you want to be exiting losers more quickly and holding winners more on a longer basis than what you're used to, right? Because that's the secret to trend trading success. So here's one that really launched very quickly for us. This was Best Buy, ticker BBY. You know, the bricks and mortar electronics and other retailer. Bottom line here is that you can see Best Buy, we were getting into the monthly 75 strike calls right there as it kicked off on a Friday morning. And that first hour close is what we wait for. So our first entry point would not come until about 10:30 a.m. Eastern time, right? We don't try to buy right off the open. Typically, we try to say, wait and see what happens at the first hour. Only time maybe if we got a buy signal right at the end of the prior day that we didn't have time to get into, we could get in at the next morning's open. That's the only time I would get in off of an open. We're trading about $72. We're buying about $3 out of the money. 75 straight calls. You know, again, 100 shares of stock would cost you about $7,200. We're controlling $7,200 worth of stock for about $79, almost 100 to 1, more like, well, I guess 90 to 1 type of a leverage ratio. Theoretically, and you can see that we catch just a steady run to the upside where it just launches that day, and then the next trading morning, it went from a Friday to a Monday morning. Stock had this big bar surge here, and you can see at that point somewhere around 74.5, just near the strike price, we're seeing that 79 cents turn into about $1.60, right just above our double target. We're taking that out on the first half of the trade. And then you can see it pauses on us after we sell the first half. This is why it's selling the first half. And then when it pauses on you, say, look, it's going right into kind of classic retest mode. We see a couple of retests on the indicators here. These retests are holding right into that mid to late day support after that pullback the day before it kicked back up to our profit target. It got up to about 75.5. Now it's only gone about a half point in the money here. And yet our 75 straight call is now worth somewhere in the neighborhood of about $2.40 or $2.50, right? 240-ish. So think about that. We're only half point in the money, but we're trading for almost 2.5. That means they're still holding about $2 a time. Remember, the at the money or near the money options are the ones that hold the most time value. So from that perspective, we say, okay, look, that's out at that point. Whether it keeps going or not, I really don't care anymore. My philosophy is let's go ahead and take that profit and take advantage of that, okay? So if you want to get real-time trade alerts when these trades trigger, and again, I apologize if some of that was cutting out on you, and if you need a little more time to evaluate it, we can send you another recording of a recent home run introductory offer webinar I did recently for our Big Trends community. But bottom line is that we've got a great special for you as part of the Traders Corner educational sessions here today. And so if you bought this off my website to buy home run options trades, we would put out in the neighborhood of about 6 to 8 trades a month. And our subscribers would gladly pay $297 a month, knowing that they could make, in any one trade, could make them typically, when both targets are achieved at a double and a triple and $1,000 invested, you'd be expecting about a $1,500 profit off of one trade hitting both of its target objectives, right? So to make $1,500 to invest 300 to make 1,500, is that worth it doing? For us, we hear a lot of people say, yeah, it's a bargain. But if you buy 3 months of this, then you'd be spending $891. Again, one winning trade could easily pay for the normal 3 months, but I'm going to slash that down for you here. And I'm going to give you some extra educational bonuses. So you're not going to pay $891. You're not going to pay $988 here when we add in the educational bonuses, which includes a strategy session I did to get a kickoff for you to understand the strategy even better. That's a good hour of education there. And my weekly video training on what's worked for home run options traders. My settings and rule sheets that give you exactly the parameters you need to follow along on your end. Although you don't have to follow the markets all day, every day. We do the work for you. We'll give you real-time emails, and you can also get real-time smartphone update via WhatsApp technology at no additional charge from us. Bottom line is that you also get a dedicated email address to reach me and my fellow research analysts if you've got a question about any trade we called out. So the idea here is that would cost you typically, that'd be worth well over $1,000, frankly, but I'm slashing it down for you here today. When you get 3 months of trade alerts with all those bonus resources, I'm all about education and all about support. You've got to have that support as a trader to know you're in the right spot at the right time. Instead of paying almost $1,000 until midnight tonight, I'm going to mark it down to just $297. That's like buying 3 months for the price of 1 month. Okay, it's like getting 3 times your money's worth here today when you lock it in before midnight tonight. That's why I said, if you need some more time to evaluate with another recording from us, let us know via our client care at bigtrends.com email. You can also reach us at 800 Big Trends toll free. But the idea is that there's the link that you go to take advantage of that. It's members.bigtrends.com/intro. And the idea of that is that it's an introductory offer, right? Instead of having to spend almost $900, we're having to spend just under $300 to try it out for not 1 month, for the next 3 months to really take true advantage of this. So again, the idea is that when you go to that link, our order pages are incredibly simple. I'm a big believer in the keep it simple philosophy. The KISS principle has served me well over time. Say, look, we want to focus on, okay, all discounts have been taken here. We've taken $891 normal investment down to just $297 to get you not 1 month's access for that normal $297, but actually 3 times as much, 3 months, the next 90 days worth of access. Consider it a leap day special, right? We're going to look to leap you forward, not just in your trading opportunities, but in your understanding of a unconventional wisdom, which is, like I said, the biggest lesson today that I want you to take from my 35 years of trading experience is that overbought is not necessarily a bad thing. If you've been thinking that overbought's a bad thing, you've been missing tons of opportunities. tons of opportunities where the institutions are pouring on the gas here. Go back to the order page in a second, but I want to remind you what that's done for us in our home run options trader, looking back to the beginning of 2021 through today's leap year date here, February 29th of 24. A $5,000 portfolio would have grown to $17,486. That's gross. Got to take your commissions and a subscription investment out. But you know what? That's not compounded. We can compound it and show it a lot bigger. So the idea of this is that, look, we're here to share with you what's worked for me by a new philosophy of trading and trend trading success, which is that find those strong overbought breakouts when they break out on not one but two indicators at the same time. Those are the ones that tell you something unusual is happening, something different is happening. This isn't just your old bouncing back and forth market anymore. This is a major launch up or a major breakdown to the downside that we can profit from with home run options trader call and put purchases. As I said, past performance never guarantees future results. Future results will vary, but the idea is that we're here to help guide you every step of the way. We never leave you hanging on every trade. Let's do a quick FAQ. What type of options strategy is used? It's simple buying of a call or a put. Now, if you're a smaller lot trader, one of the things that's great about buying options for $100 or less is that you could typically buy as little as 2 contracts to execute this strategy the way we do it. 2 contracts would cost you up to and no more than $200 per trade that we call it out for you. So you could try and start really small, because if you buy 2 contracts, you can target to sell one of them when it doubles and the other one if and when it triples, right? So the idea is that we'll guide you through whether you trade 2 contracts or 200 contracts. The idea is that you're going to get that same guidance and quality of real-time research from us here at Big Trend. So the idea is that it's going to keep it really simple, and you can keep your costs down to get started here onto each new trade, and then let the system prove it to you. Don't just take my word for it. The system will tell the tale for you, especially over a 90-day period that I'm giving you here to evaluate this as an introductory offer. What's our recommended average entry price? Like I said, no more than $100 or $100 a contract, but if you averaged out all the past years, trailing 12 months worth of home run options trader, we call it HOT service trades, 79 cents or $79 per entry on average. Okay, so how many trades we receive a month on average? We would say up to 8 new trades per month. We would say a minimum of 6, up to 8 new trades each and every month. When are the new hot trades sent? Typically anytime actually between 11:30 a.m. and 2:30 p.m. So we kind of focus in that sweet spot so that we're not getting too late in the trading day and also not too early in the day. How long will you be in a trade? Typically 2 days, 2 trading days, up to about 10 trading days. A lot of times about a week, like you saw in some of my prior examples, is a fairly typical success profile that trades will take about a week, but maybe up to 2 weeks to play out. That's why we want to buy about a month out in time to do that. How you get the trade alerts? We'll send them out to you real time via email. And like I said, also you can get the alerts via WhatsApp as a smartphone update, as an additional kind of a making sure you're getting the alerts as timely as possible. What are the included educational gifts I'm giving you here today? When you sign up for this 3-month special, it's like buying 1 month you're getting 3 months for the price of typical 1 month 30-day subscription. You're getting 90-day subscription, that same low rate. You get also my home run options trader strategy session, access to that to review it as many times as you want. My home run options trader settings and rule sheets. So I'll walk you through exactly what are the parameters for those core indicators. How do we manage trades that are working? How do we get out of trades that aren't working? It'll refresh all that for you. I also will give you the weekly video training updates. Every Monday, you'll get in your member site access. You get a new weekly video training from me. Say, here's what's happening in the past week in home run options trades. Here's what we're looking for in the next week. Here's what we're looking for in the markets here over the next week. You also get my analyst team and myself's dedicated email address. We've got a question for my research team, you know exactly where to reach out, say, hey, what's happening with this trade? What's going on here? How does it work? So that's what we'll guide you through. So from that perspective, again, a reminder of just what one winning trade can accomplish for you, right? If you're putting in up to $1,000 invested, this was an example with CVS that we started out with, where it made that first target very quickly. Remember, the first target is sell half at a double. Once you get a double, you have a proverbial risk-free trade. Even if the other half went to nothing, you cannot lose on that trade if you take your first half out at 100% gain or more. So the idea here is we paid 97 cents. We're exiting the first half out at just about $2, and you can see that's getting our risk capital and your risk capital back on that trade. Then that gives us the freedom financially and psychologically, assuming the charts are still holding up, we say we're here to hang in there, keep riding, keep looking for that next leg up, and we got it about a week later. And on the next Tuesday, we got our next leg up, and it made a 204% profit on that second half of our position. So that's where we ring the register on the rest of the trade. So it's just two halves. One target is it a double, the rest of our target at a triple. And on 10 contracts invested for $970 invested, we made a profit of $1,480 before commissions, right? Even if you paid $1 a contract per commission, per trade. So if you did 10 contracts, it'd be $10 in, $10 out. Round trip, you shouldn't pay more than $20 in commissions. And what happens is that once you start to get more active, you should be contacting your broker and lobbying to get your commissions down into the 50 to 60 cents a contract range, so you keep even more of what you're making on these trades. So like I said, this package, total package value would have been $988 or more when you look at 3 months of the home run option trades, plus all the educational bonuses with the strategy session, with the rule sheets, so you learn the ins and outs of the system, and the ongoing support from me and my analyst team. All that is, in my opinion, worth well over $1,000, but you're getting it today for just $297. So the bottom line here is that it's something you don't want to sleep on, though, because we've only got it out there through midnight. Now, again, I want to show you real quickly what that order page looks like so you don't miss out on that. So let me actually pop that back up here just real quick so I can show you what that looks like. So when you pop this order page up, here's what you'll see. It's a real simple order page, and you see our contact order information is all right here on the top right. If you've got questions, you can call us toll free. If you can't remember that number, it's 1-800-BIG-TRENDS, but it's 1-800-244-8736. It's spelled out 1-800-BIG-TRENDS, right? So the idea here is that you can also email us anytime you got a question. If you're having trouble getting your order through, should work on all the major browsers. It's a secure page. Again, we're on our 25th year doing business here for our bigtrends.com community. So bottom line is that, look, email us, call us if you've got any questions, but the discounts have already been taken. Instead of paying $891 plus all the educational bonuses, you're getting it marked down already for getting 3 months, the next 90 days worth of home run options trader trades and ongoing educational bonuses for just $297. Like I said, one trade that hits its profit target objectives on $1,000 invested has the opportunity to make $1,500 or so in profit before commission. So the idea is that, look, $297, you're talking about a virtual 5-bagger opportunity on one trade that hits both of its alerts for your $297 invested. We'll also control risk. That's a lot of people. I see a lot of other services that just throw a lot of stuff out there, only talk about their winners and don't talk about that they're taking big losses or total losses on their losing trades. We don't want to take any total losses. It could happen, but the reality is,
Testing 1 2 1 2.
If we get out of these trades here by the end of the next day that aren't working, bottom line is that it'll guide you through how that works. So I'm going to go ahead and wrap it up here and say, okay, take advantage of this offer. I'll hand it back over to Rob. I apologize for our internet issues. That was on our side, I believe, not Rob. So sorry about that, Rob, and everybody. That's why I said also contact us through that either 800 Big Trends or through the client care at bigtrends.com email. We'll send you out a free home run options trader presentation as well in case this one doesn't capture well because of some of our internet issues. Thank you for your patience, and thank you, Rob, as always, for having me.
Hey, thank you, Price. And just to say, it happened 3-4 times more toward the beginning of your presentation, and after the 5 to 10 minute mark, you were just absolutely fine. But
Thank
I
you.
know I love trading those low-priced options because they have such a great upside, and you can hit those big, ridiculous winners. And,
Yes.
your risk is so very limited to what you put in and where you put your stop if you do. But
Absolutely.
holding for 48 hours or less seems like a great plan. Your technical analysis is always spot on, and we always love having you on the show. Ladies and gentlemen,
Thanks, Rob.
25 years in business absolutely speaks for itself. And if you want to learn more about trading low-priced options that have been consistently hitting up to 200% and being out of your position within 48 hours or less with amazing precision, you can find Price's special offer link in the chat box. I apologize, I spelled it wrong the first time. I did put it back in. You can always find him at www.bigtrends.com. Thanks so much again, Price. Happy Leap Day. We hope to have you back on Traders Corner. I wish you a great weekend, my friend.
Thanks, Rob. All the best. Take care.
Not a problem. Well, ladies and gentlemen, that keeps us leaping right into our next presenter, who we heard did a little bit of a sound test. And he is an expert trader of the news. He actually got started studying at the Berklee College of Music and the Boston Conservatory. He began trading stocks in 2001 and learned the art of futures trading. He's been trading for over 20 years and is now considered an expert teacher and trader of the news. Here to present new 10-Minute Trades Pro membership is Mr. Lee Goldstein of 10-Minute Trades. Welcome back to Traders Corner, Lee.
Hi, Rob. Can you hear me okay?
I can. You sound like you got a little bit of a gargle in your throat, though.
Yeah, I've got a little bit of a cold here, so I apologize. I thought I was sending that test out to myself.
It's going around to all of us in the Northeast, my friend.
I need control of the screens because I don't have a way to, right now you didn't give me, you know what I mean.
Excuse me. Let me
That's
go
okay.
hit the button for that.
No problem.
Lee, make presenter, yes.
There we go. Thanks.
And
Give
let
me
give
1
you the
second,
questions box,
everybody.
too. All right, I got your screen. It looks like you got somewhat of a minimized PowerPoint presentation in it.
Yes, you can see my screens, right?
Yep, we're looking at your
Okay.
desktop. That's a lot of icons.
Oh, okay. Bear with me. Sorry.
There we go.
Okay. All right, I've got the screens, I've got the people, so I'm ready to go. 2 more seconds. So I want to welcome everybody. I'm Lee Goldstein from 10-Minute Trades. And forgive my throat, but I don't know what happens when you become a grandparent. Even though I'm only like 40 years old, sometimes you just catch everything that the kids have, and that's what's going on. So I apologize for my voice. So I will answer every question that anybody asks during the presentation. If I don't get to it at the moment and I'm speaking, I promise I will answer any of your questions before I finish. So feel free to ask away while I'm speaking, and I will get into everything that you asked before I leave. So as I said, I'm Lee Goldstein, the trading director. If you stick around for my whole presentation, I have a really nice free gift for everybody. I'm going to talk about our new pro membership, talk a little bit about what 10-Minute Trades does and the way that we do it, because we have a very unique way of trading and we're different than a lot of the other companies, and we offer something that actually works really well in conjunction with any other company that you want to trade with. So it's great to think of us as your main trading system or your part-time trading system, or the system that you use when you trade those great low-cost options. It works. We work with everyone, and we're a great add-on, especially. So I just want to let everyone know that you can use us in all different ways that you want. Like I said, I'm the trading director for 10-Minute Trades. Please don't forget it's possible to lose money trading futures. Trade carefully and read the disclosures so you know what you're doing. It's very important to trade money that you can afford to lose. Don't trade your mortgage money. So we have a special methodology of trading. We trade appointment-based trading. That's the style of trading that we take. And when I say appointment-based trading, very simply, we create a weekly schedule. We send that weekly schedule to our members, and then we meet in our trade room and we teach our members how to use our software to take these eventful trades. And I'm going to get into how we find these trades, why these trades work, why they move markets. This is this week's schedule, just to give you an example. So we were in our trader, and by the way, you can get our free schedule just by going to our website, www.10minutetrades.com, and you can sign up for our free video, how to find your own 10-minute trades, and we will automatically send you our free schedule. So look, I see a question already that I have to answer because it's the most common question that traders always ask. What's your P&L? So I don't have a P&L because I don't trade every single news event known to man. So you don't want to think of our P&L as somebody that has a specific number of trades that they take, and that's their P&L. We trade events. Every event has its own P&L, and that's how we trade. So for instance, today, we traded Chicago PMI, all right? You see it's got this little red FMT next to it. That's short for family money trade. Chicago PMI has been above 75% wins in the past 8 months. So that's been 8 trades over 75% winners. That's the current P&L on Chicago PMI. Most of our trades, most of our events, and not every single one, because we do a lot of different things. We trade earnings with futures. We trade jobs reports. We trade GDP reports. So I just feel like I have to address this important question. The P&L of Chicago PMI, it's not quote unquote a P&L. It's a setup that shows you on our daily trade report that we send to our members how this particular event has done the last 6 times that we traded it. This is how we determine whether or not we want to take a trade. I'm sorry for that. This particular event has had quite a lot of winning trades over the past 6 months. It was a winner in July. It was a winner in August. It got stopped in September, and it won October, November, and January. Also, we traded it today. Why don't I show you today's trade? I just left that trade room. And look, not every trade has a winning P&L. The trades that don't have great performance are the trades that we warn members to be ultra careful about. The thing about news trading is different than other forms of trading. Lots of people used to say, don't trade the news, it's too dangerous. Not true. You have to have the right tools to trade the news. And the right tools are good software to help you trade the news and good setups so that you know how to use the software to set the trades up. This particular event this morning, we traded it with gold. We know something that most other people do not know about this particular trade. We know that Chicago PMI is not actually a trade that takes place at 9:45. If you look at the calendars of events, and this is the way we find our trades at 10-minute trades. So let me backtrack because I'm all over the place. We trade fast-moving market events that we know are going to move the market because we have studied these events, some of them for years, okay? So we know that these events are going to move the futures markets. We're trading futures using the NinjaTrader platform with our software that installs into NinjaTrader. We study events by going to a calendar such as Forex Factory, for instance, or we might go to Financial Juice, for instance, or we might go to investing.com, for instance. Those are our 3 favorite economic news event calendars, okay? Those calendars show you, and once you learn how to understand these calendars, they're very simple. Investing.com has a methodology where they show you stars. The more stars that an event has, the more impact that event has on the market after that news is announced. Financial Juice, they have a color-coded system that they use, but they're unique in that they also have a talking squawk box. Really cool feature. If you subscribe to their pro version, you'll be able to hear the news in your headset. And then Forex Factory also has a system. They use colored file folders, red for more impactful than yellow, and then medium impact orange. But here's the interesting thing. Once you learn the secrets, once you learn the smart things about trading news, it's like I was saying, you'll learn things that other people don't know. We discovered something special about Chicago PMI. The calendar says that that is a 9:45 event and that it took place today at 9:45. It's a little bit hard to see that. Trust me, that's what it says. We know for a fact, because we've studied that event, we know for a fact that that event did not take place at 9:45. Well, I should say this, it took place at 9:45, but it actually took place at 9:42 because the subscribers to the data of that report, there's a private group of subscribers that get the data 3 minutes early, and it's the subscribers that actually move the markets on Chicago PMI. We trade that report at 9:42, and at 9:45 we looked for a second trade. This morning, if you notice, my clock here is on 9:42. I'm in the market long gold. We triggered our orders with our software, putting the orders on the chart, these little X's. The news came out, it made gold push up. It just missed hitting my first 8-tick target by 1 tick. And it was a very strange, very, there was a big news report this morning, the PCE price index. That caused the gold market to get very bullish, and actually the ES market got very bullish after that as well. I had some concern that maybe gold would be muted on the Chicago PMI trade because of the move that we saw in the market because of earlier news. Sometimes a trade might be muted. So I took a quicker little target. Instead of 8 ticks, I think I took 5 ticks, and then I moved my stop automatically. Actually, our software moved my stop automatically to break even -3, and then I just started trailing a little bit as the Chicago PMI trade started working. And it's interesting that Price, the gentleman before me, said something interesting, that on an options trade you could have multiple positions, and one of the positions can be profitable, and then no matter what happens in the trade, you can wind up with a profit. And that's also very true of news trades. It's sometimes easier to make money trading multiple contracts than it is trading one. Because when you trade multiple contracts, and this is true of options or stocks, multiple shares, when you have multiple positions, when you hit that first target, which takes out one position, you can move your stop to protect your profit so that no matter what happens in the rest of the trade, you don't have to lose money. That brings up a lot of other trade management questions and issues, but suffice it to say that it can be a very effective way of protecting profits, especially on fast-moving events. But Chicago PMI this morning was a profitable trade. I think that has been 7 out of the last 8, including the holiday Christmas trade, December 29th. And you could see that this pushed up, hit our first target with a little bit of help, but then it went up. And it actually ultimately hit the high of the day, but I was actually getting ready to trade the 9:45 part of the trade. So missed the high, but we made just under $200 in a couple of seconds on that Chicago PMI trade. We also had a natural gas setup today. Natural gas, and it's interesting, again, the gentleman who asked, what's your P&L? Natural gas is its own separate animal. So natural gas is an instrument and an event that we've been trading for years. And right now, natural gas is on watch. Okay, but something interesting happened today, and it brought up an interesting, fascinating communication in our trade room. We were talking about, if you look at our daily market report, and this is a report that we call the DMM. Our service consists of 3 special items that are subscribed to, and they obviously have a subscription price. And the 4th item is our free schedule. 10minutetrades.com, get our free video, how to find your own 10-minute trades. Bingo, you can have our free schedule. But we have 3 items that our members pay for. The DMM, the Daily Market Mover, that's this report here, access to our trade room, and access to our software. All of those things make up our Pro membership, which I'm going to talk about today. Part of the Pro membership, we send out our Daily Market Mover the day before the event takes place. So yesterday, you received our trade report on natural gas. When you look at the report, on the middle part of the page, on many of our reports, not all of them, get the full treatment because not all of the setups are as stable as natural gas, because the markets are very volatile these days, and especially with the Fed raising and lowering interest rates, doing the things that the Fed does. There are events that are changing every month or every 3 months. So sometimes we don't have the same level of research showing what the trade did with today's setup. We still have testing, and we still have lots of information that we bring to the trade room about the event, so that we're never trading an event randomly or just like a coin flip. And we have a joke in the trade room, or we have a trade that we call a coin toss. A coin toss trade is a trade that's 50-50. You know, it could go either way because that's what the testing's like. Some trades currently are a coin toss. Natural gas is worse than a coin toss. You can see it. If you would have traded it the last 6 weeks in a row, you only would have had 1 winner. But we wouldn't have been recommending that you trade it today or last week, or probably not the week before, because we know that natural gas has gone into a mode where it's not trading well. So we still often have trade rooms. We teach our members about trading natural gas. We teach them about what it's like to trade natural gas. We have a secondary trade after the news comes out on many trades, but in particular, today we didn't recommend trading natural gas. But I explained to our members that I have a trade that I don't always recommend, but I call it a probability trade. Because if you think about it, excuse me, what we're doing here is we're always trading probabilities. No matter what system you're using, everybody's doing their research and they're trying to take the best trade that has the best probability. You know, it's not gambling, we're trading probabilities. So there is some meaning when I say to my members, you know, we've been trading natural gas for years. It hasn't had a good trade hardly at all in a month and a half. I'm going to take today's trade because I think there's a probability this trade's going to work, just because it's been so lousy. I would not recommend that most people try to build their account up on a probability trade because it's anecdotal. I don't think that we've done enough testing. We haven't pulled up all these reports that have 4 and 5 bad trades in a row. It's hard to find them anyway, because most of our reports don't do that poorly, or we wouldn't trade those events. The point I'm making is you can occasionally take a probability trade and it'll pay you. It's probably not our main focus on the type of trade that I would take. I would rather trade natural gas with live real money or in my prop account, which you can do, by the way. You can trade news in prop accounts as long as the company supports news trading. Just as a heads up, Apex does not. Top Step does. So you can trade news, but as I was saying, I would want to trade not so much a probability trade, only one winner in the last 6. I would like to trade when natural gas has 4 winners in the last 6. But here's the funny thing, just to show what natural gas did today. The probability trade was a work of art. Now, I did not take it live for full transparency. You'll see what's going to happen here. Our orders were on the chart at the beginning of this video. The news came out, and the natural gas news was that there was a lot less gas around than expected. That's why these reports work, okay? Why did these reports work? I could go through my slides and I can tell you why these reports work is because there is a forecast for all these news events. And if the forecast is very different than what's expected, then we get a very significant move in the market most of the time. There is no always in trading, at least for me. It's not always one way and it's not never another. Those are 2 words I don't use in trading, always and never, because the day that you say always is the day the market will do what always was not supposed to be. Most of the time when there is less gas around, the price will go up like it did today. It'll hit both our targets and that probability trade will pay you. The trade that I was going to take was a reversal trade after the news. The news result was extremely bullish today. And, again, full transparency, I actually made a mistake. And I don't know what I was thinking. Instead of hitting my short button, I turned off my trade for a second and did not take the reversal. You could see that natural gas was making a new high after the news. It was about 1 minute and 11 seconds after the news. And then that reversal, and it can be risky to take reversals just when they're making new highs, because if you're a trader and you've been doing this for a while, you know that you don't always know when that new high is done making another new high or another new high or even another new high after that. It's very possible you could get 10 new highs before you get a reversal. Excuse me, I'm really sorry. Today, it wasn't that way. If I would have gotten in where I had meant to, we had a big enough stop to survive the little boost it made. It went up about 20 ticks or so. And then natural gas made a really nice reversal. We study a lot of these instruments, and we see this kind of move so often in some of the instruments that we trade. And that's why in our software, we have a setup that lets us easily take advantage of a change in direction after the news. We call it our reversal setup, and it just puts a couple of buttons on the chart that allow us at our discretion to go long or short instantly and enter the market. But our software has stops, targets, and a safe way to trade as if it was an ATM, an automated trade management program, because our software essentially is an automated trade management program. Okay, so today, natural gas, a great probability trade. What we did, we made a weekly schedule. Just to recap, made a weekly schedule. We met in the trade room to trade natural gas, to trade Chicago PMI, to trade this morning's PCE price index, which we had a losing trade on, unfortunately. Not every trade's a winner. We make an appointment with the market. We know which instruments we're going to trade. We know which events we're going to trade. And then we spend roughly about 40 minutes in our trade room for most events, discussing how to set it up, watching the previous history of the event, and then we move on to the next event. So why appointment-based trades? I hate sitting in the market for hours at a time. I'm not going to do it. I don't know anybody that wants to sit in the market. I don't like sitting waiting for setups for hours at a time. I want to be in the market as little as possible because I think everybody knows the longer you spend in the market, the greater the opportunity to screw up or to lose your trade. The less you're in the market, the better. Most trading and waiting for trading is boring. You sit around waiting and waiting. Everything else is very subjective compared to the way that we trade. I don't need to look at Elliott waves. I don't really look at candlestick patterns very much. We don't look at Fibonacci's or Ichimoku clouds. But I will say this, we do look at some support and resistance. I do like Fibonacci's. I think they're one of my favorite indicators. Most indicators are lagging. They don't keep up with the market anyway. They're fine for trend trading. You know, they're fine for slow moving trading, but most indicators don't keep up with news event trading the way that we trade. So you don't need that kind of deep analysis. Most of the time, it doesn't matter what the analysis is because those news events, they function in a vacuum. Now, it's not always this way because remember, it's never always, but most of the time, when that natural gas trade comes out, it doesn't care that much what natural gas has been doing all evening or all morning. The news is going to create a significant move in natural gas almost every single week. And then if it's not a huge difference in what was expected, natural gas will go back to doing what it was doing. Sometimes the news is so impactful that it changes the market and the market creates a new trend or the market starts falling, right? So that's the importance of news trading. And that's why your indicators are not always valuable for the type of trading we do. They're great for after the news trading. They're great to analyze what might happen before the event. Maybe an area of support or resistance can be a warning of something that might happen in the trade. Because let's be honest, highs of the day, lows of the day, those levels are extremely important and they act as magnets. And we actually have a brand new software update. It's actually probably going to be a brand new strategy that we're going to offer. That's magnet trading. And magnet trading is very news related because and it's also a form of trading that happens without news. These areas of support and resistance are so important, and so many people look at the same ones that they pull the price towards them, creating trading opportunities. So that's something that I've been looking at for years, and we finally decided to put it into a strategy. But anyway, that's neither here nor there, but it does sometimes affect what happens after the trade. If you look at today's natural gas trade, we definitely use those areas of support and resistance to help us make a determination of areas we might be interested in for potential continuation or reversal trades. Today, natural gas, the high of the day, absolutely an area of interest, as would have been the low of the day, that red little line on the chart. So there are certain indicators or certain subjective things that we look at that I think are important, but most of them you don't have to spend time on because they're not going to come into play unless you're trading much longer time frames than we do. Okay, so you realize, if you realize you've learned so much that it's hard to believe. I've explained to you why our trades work, and it's because when the news is released, the result is different from the forecast. You've learned what causes that movement? You've learned that we can use futures, and I want to touch one more great thing. We discovered a fantastic way to trade earnings using all of these same methods. So we trade major stock, particularly tech earnings, using futures, and we make some really nice profits doing these trades. NVIDIA has been a very bothersome earnings trade to me for a very long time. Earnings are quarterly. We discovered a way to trade the NQ futures with NVIDIA, because when NVIDIA releases their earnings, and we trade this way to trade Apple, I trade this way to trade Facebook, Amazon, Google, Netflix, Home Depot, Target, etc. We have a whole bunch of these earnings trades that we trade with futures, different futures, might be the YM, might be the NQ. NVIDIA has been a thorn in my side for the past year. So the past year means there were 4 fantastic opportunities for profit trading NVIDIA earnings. We had one very nice trade. We made about $500 trading NVIDIA earnings, but every other quarter, something happened. I couldn't tell when the earnings came out. I was confused because of the price action. They were late with their earnings, one quarter where they were 10 minutes late. So here's something interesting that you have to understand. Most normal news events, when I say normal, Fed statements, Fed minutes, US GDP, Australia GDP, those types of reports, most of those are highly regulated. Highly regulated in the sense that they're not allowed to release those reports early because of insider trading, and the governments of the various countries regulate those trades, particularly in the US, that's true. You notice, how often do you ever know what the US jobs report data is before the trade? In all the years I've been doing this, I don't think I've ever known that information. The data is kept highly confidential because of all the legal issues surrounding insider trading, etc. Now, of course, there are people that know that information. We're not going to talk politics here. And there are people that profit on it, but not us, not the regular normal people. And in a way, that's okay. We're not looking for get rich quick schemes. I mean, some people are, but the reality is get rich quick schemes don't exist. You got to have a good system. But NVIDIA and stock earnings are different. The companies aren't regulated. They don't have to release their stock earnings at 4:10 exactly. If they say they're going to release them at 4:10, they might be 4:12, they might be 4:05. And if that's the case, it makes it very tricky to trade the earnings. So we've studied hundreds of stocks we've looked at, and we find the best ones that are reliable about the times that they release their earnings. And NVIDIA has owed us for a while. And the last NVIDIA trade was last week. And I've been waiting. I've been telling our members, I can't wait for NVIDIA. If this is the only trade you trade it this week. This one, it's going to work because NVIDIA has given us nothing but trouble for a year. We have a bunch of tools that we use, as many of them as possible, free or very inexpensive, that we teach our members to use with us or on their own so they understand how to do what we're doing. I have a Thinkorswim Schwab account, okay, which also is a great options trading account for people that like options. But for a very small amount of money, you could keep $50 or $100 in your Thinkorswim account, and they give you data for stocks. They give you futures data. They're a great company. I highly recommend that everybody use them as a broker for data and studying. It's really helpful. I have $50 in my Thinkorswim account, and we use their charts to watch the stock earnings. So I know when NVIDIA earnings are coming out now, exactly when, and watch what happened. We're trading the NQ. I'm telling you, I knew this NVIDIA trade was going to be a winner. I didn't know it would be good, bad, medium, small, big. I knew they were going to be on time with their earnings. NVIDIA usually comes out with their earnings 4:20 and about 40 seconds. That's the norm. That's exactly what they did here. And interestingly, also, there was very, very little pre-trade volatility. So that boom, as soon as they released their earnings, there was a monstrous explosion in the price of the NQ. There it is. That trade lasted a nanosecond. When it was over, we had a $1,500 profit in NVIDIA. Every single person except one person in our trade room made a very nice profit on their NVIDIA trade. And that's what we teach our members to do in our trade room. We taught our members to trade Cisco. In November, we never traded Cisco before. We had a trade room. We watched the trade. We studied the trade. We had a setup. We saw Cisco explode, okay? We knew we had an opportunity for the next time that Cisco was going to trade their earnings, because look at this move. If Cisco affects the market this much, that's an opportunity. We want to study that opportunity, teach our members how to do it. One of our members sent me his Cisco trading video in February, just recently. He traded Cisco and he made a very nice profit using our software. Here's his trade. There's the orders, just like on my charts. The orders get filled. Cisco happens to trade on time when they say they're going to. And when his trade was over, it was about a 30-second trade. When his trade was over, and he traded it in his prop account, okay? He had a nice profit, over $200, trading Cisco. I want to show you some member screenshots because I've only got a little bit of time left. Here's a member, $675 worth of profits, trading two European reports that we trade overnight, 3 in the morning and 3:15 a.m. in the morning Eastern time and 3:30 in the morning, the German flash manufacturing and the French flash manufacturing. Our members are making money on these trades. $675, one of our members made. We made over $500 on these two trades. It was about 10 days ago that we were in our trade room at 3 in the morning. One of our members trading in Kenya made over $1,192 on the WASD grain report. That's a monthly trade we take every month. Now look, every month it's not a winner, but more often than not, it is a winner. It's currently a family money trade. That means that at least 6 out of 10 are winners, okay? At least 6 out of 10 are winners. We have trade after trade, many trades like that are doing great. Amazon earnings are at the top of our trading right now because their earnings trades have been fantastic. We know what time Amazon releases. We know if they're reliable or not. And in October, we made $805 on Amazon. I think it was the previous quarter, we made over $1,000 on Amazon. Apple, very reliable earnings trade. This week, forget earnings for a second. Core durable goods, a very popular US data report. We trade it with gold futures. We know when that report comes out. Most of our previous reports have been profitable with gold. It hit our first gold target. You could see it was a little bit slow. It wasn't a 1 second trade, but ultimately over $150 profit, 20 seconds in the market, trading gold. Just 2 little contracts, not trading large amounts of contracts. We also trade bond auctions, and we have unique ways of doing things. We trade, sometimes we'll use the YM on a bond auction, but I hope that I'm getting you interested in what we do. We have a free gift if you'd like a free week in our trade room. We have a free week in our trade room that I'd like to offer to anybody that would like to watch us. We also have a new pro membership for 24 bucks. You can be a full member for 30 days. Software access, trade room access, daily trade reports, those trade reports that I showed you, access to the trade reports also. Will include everything in our system that a person needs to trade events successfully. The only thing that you have to add is a NinjaTrader futures account and data, okay? These are the DMMs. For instance, today we had multiple trade rooms. We had PCE prices, we had Canada GDP, which we did not recommend trading today, Chicago PMI, which you saw us trade, natural gas, you saw today's movement in the market. And then this evening, we'll be back in our trade room. There's 2 Chinese news reports that we like to trade. So we'll be back in the trade room at 8 o'clock this evening. That's what we do. We trade these fantastic events and add to that a couple of dozen earnings trades during earnings season that are sometimes very, very nice winning trades. I've got fantastic, so many screens of our members. We always ask our members, hey, that was great trade that you had today. Send me your screenshot. So one of our members sends me a screenshot. I don't even trade the Swiss franc, and he traded Swiss. Now, this isn't the right screenshot. I'll send you the right one. This was his NQ trade on an earnings trade. But he sent me a screenshot trading the Swiss franc on the Swiss interest rate trade. He designed the trade using everything we taught him, and he made over 350 bucks last week trading Swiss CPI. So, or their bank rate statement. I forget which one it was, but he sent me the screenshot. Fantastic. That's our goal. Our goal is for you to send us screenshots showing that you're having winning trades, and it's even more awesome when you send us winning trades of events that you look for. We don't trade every single event. There's dozens that we don't trade. There's dozens we don't know about, right? There's always new events. So we're going to give you 30 days free, not free, sorry, 30 days for 24 bucks, a free week in our trade room. Let me just give you the quick lowdown on the slides here so I can give you the links. So give me half a second. We'll get cracking. I want to thank everybody just to give you an idea. So for 24 bucks, free a 30-day trial to our trade room, to our software, to our daily market movers, www.gotrade2024.com. That's our pro membership, www.gotrade2024.com, okay? 30 days for 24 bucks, then $97 a month to continue. Now, if you would like to get a free week in our trade room, let me give you the link to the password. It's free day, and here is the URL also. And just so you know, I've turned on that password now, so you can sneak into our trade room tonight. Here's the URL, okay? The password is free day. Let me see if I can make a little bit of a mess here, but I'll type this into the chat for you all.
Lee, not to
So
interrupt, but I
anybody?
did it for you.
Oh, did you do it for me? Okay.
Yes, sir.
Thank you, Rob. And then our link for our sale is www.gotrade2024.com, www.gotrade2024.com, to become a member for 30 days for just $24. If anybody has any questions, I think I have 1 minute, Rob, if I'm good. The internet speed, does it have to be very, very fast for those setups? So Clovis, a very good question. Obviously for trading, you want to have good internet speed no matter what. Obviously, yes, you want to have fast internet speed, but one of our most successful traders is trading in Kenya, and she's using Starlink. Starlink does not have ultra fast internet. Obviously, the faster the better, because you could get better fills possibly. There are other things though, besides just speed of the internet, that could affect the speed of whether you can trade events well. So it's important to keep that all in mind, that there's more than just one thing that matters, okay? Let me put up my final slide so everybody can see. Those are the important links, www.gotrade2024.com. Free week in the trade room, the password free day, F-R-E-E-D-A-Y. I don't see any other questions. Rob, thank you so much for inviting me. And I hope to see you soon. I think I'll be back in March. So I'm happy to be here again.
Thank you for being here, Lee. Every time I hear your presentation, I love it even more. And you know I love the idea of, trading by appointment, which is your other, call it criteria. But thank you for making such a generous offer to our audience today. Your pro
Thanks, Rob.
membership sounds like a great opportunity to learn more about trading the news at a pretty unbeatable price. I mean, you could barely get lunch for that. Ladies and gentlemen, no more sitting in front of the charts all day waiting for a setup. With Lee Goldstein of 10-Minute Trades, who is a seasoned expert at trading the news, you know exactly what time your opportunity will present itself, and within a few minutes, your trading session's over. You can learn more about his special offer by clicking one of the links I put in the chat box or going to 10minutetrades.com. Thank you so much, Lee, for being here, and happy Leap Day.
Thanks, Rob.
Have a great weekend.
See ya.
Oh, well, ladies and gentlemen, I mentioned at the top of the show, we had a great lineup. Our staff at Traders Corner sifts through hundreds of pro traders to bring you the most credible and qualified to participate on our shows, and our next presenter exceeds all of our standards. She has a BA in mathematics from the University of Southern California, an MS in information resource management from the Air Force Institute of Technology, and over 23 years experience studying the markets. She's the vice president and senior technical analyst at DecisionPoint.com, along with her father, Carl Swenlin. She launched the Decision Point daily blog in 2009 alongside Carl, and she also serves as a consulting technical analyst and the blog contributor at StockCharts.com. She's an active member of the CMT Association. Ladies and gentlemen, here to present Finding Pure Strength Using the Price Momentum Oscillator, PMO, is Erin Swenlin of DecisionPoint.com. Welcome back to Traders Corner, Erin.
Thank you. And just for the record, that wasn't me.
I'm sure you've got your tech helper or dad or someone else that may do things like that sitting around with you, and no judgment.
All right. Well, I guess we are kind of around lunchtime, so there you go. All
We're
right.
exactly after lunchtime, so you probably just had, your late coffee or a soda, a sandwich, a salad,
Yes.
whatever it is that you had decided for lunch.
All right. Let's go ahead and get this started. So you pretty much gave the title away for sure. Of course, I want you to do that. You talked about me, so I don't know that I need to get too into this, but I do have a bachelor's in mathematics from USC, Fight On, master's science and information resource management. I got that at the Air Force Institute of Technology. And I've been studying the markets, honestly, since I was in high school. My father is self-taught, Carl Swenlin, and he taught me a lot. I also went through the CMT program. through level 2, haven't done level 3. But anyway, I got a lot of information through that as well. I run decisionpoint.com. This is where I'd like you all to go and sign up for my free email list. Really easy to do, and I do not hit you up all the time on my free list. So don't worry, you're not going to get bombarded by emails, but do go to decisionpoint.com and you can sign up for my free email list right on the homepage. I also do work for stockcharts.com, and I'm on Stock Charts TV periodically. I've been a consulting technical analyst for them for over 14 years. And I do the Decision Point blog that is free on stockcharts.com. All right, so let's talk about the price momentum oscillator. I'm going to just give you a kind of some basics here, very basic. I don't want to get into too much detail on how we calculate it and all of that. If you want to find that out, you can find it in Chart School on stockcharts.com. Just look up the PMO there. So the PMO is basically a rate of change ratio. So it's very similar to the MACD in the way it acts. And it's very similar to the PPO, which is the normalized version of the MACD. And the difference, though, is they are constructed differently. The MACD is a difference between two moving averages. The PMO is calculated with average after average, smoothing after smoothing, and that is what gives us the rate of change ratio for the PMO. So now we're going to talk about what we're going to be looking for, which is pure strength. And this is not a really difficult concept, but I have a bunch of examples for you. I decided what I do is go through the Magnificent Seven. Everybody's curious what's going on with those. And I was going to point out, I will point out periods of pure strength, weakness, etc. But this is what we're looking for, is pure strength with the PMO. And the first thing you want is the PMO needs to be above the 0 line. And particularly on a crossover buy signal, that's your really pure strength right there. If you get that crossover buy where the PMO crosses above its signal line, that's where you really get the sweet spot. The PMO can be flat above the 0 line, and that is also pure strength. Maybe you don't think of it that way because the PMO is flat. What's going on? It's not rising. Maybe, you know, things aren't going so well. No, in actuality, things are going very well when the PMO is flat above the 0 line, and I'll discuss that a little bit later in our discussion on the charts themselves. And then finally, the distance of the PMO from the 0 line really determines how strong that strength is, if you will, or how weak it is. So that's what we're going to be looking at too, is how far away is the PMO from its 0 line. Pure weakness, this is kind of the flip side, right? So you have the PMO and it's below the 0 line on a crossover sell signal. You can't get much more weak than that. The PMO being flat beneath the 0 line, that's also bad. That tells you that there's lots of weakness. It's not disappearing. It's steady. So that's also a sign of pure weakness. And again, the distance to the 0 line is what's going to really determine the weakness or not. All right, let's see if I can share the right screen and we'll get to the next one. I don't want that one. Hang on. I'm going to have to switch to over here and see if I can't get, there we go. That's better. I want to make sure that this chart's as big as I can make it. All right, so as you can see here, this is the PMO down here. So this is the window we're going to be paying attention to most. Obviously price up here. I also have on balance volume on the chart, and you'll see volume as well. I think some of these charts are organized a little bit differently than this one, but it's going to give us the same information we need. I'm going to actually move this into an annotate tool because everything got kind of moved around here. There we go. All right, so let's start over here. This was easy, right? I said if you get a flat PMO above the zero line, particularly this far above the zero line, that's a sign of pure strength. That means this move is continuing on in a nice, it's not accelerating, right? The PMO isn't accelerating here, it's flat, but that means that the acceleration is even. It's the same acceleration. So think of it as, I often talk about the PMO being the representation of the accelerator on your car. And think about what you're doing to the accelerator when it's flat and when it's moving down, etc. So if you're moving up, if the PMO is moving up, you're pushing down on that accelerator. You're getting an accelerated price move. If the PMO flattens out, that means that the move is very steady in the uptrend that it is in, and that is a sign of pure strength, especially, like I said, when it's this far above the zero line. So think of the flat PMO as basically you kind of let up on the pedal just a little bit so that you coast. So you're just moving sideways, but you're coasting, you're still moving forward, you're still moving at that same acceleration, you're trying to keep it there. So that's what we would mark as that. When the PMO starts to take a turn for the worse, this is when you're letting up on the accelerator. This is also where you might be starting to put the brakes on when you hit the zero line. So these are the things you don't want to see. So there's our pure strength. Here's some pure weakness, and it's a little confusing because we do have this little crossover buy signal in the middle of this. But mainly, the PMO is somewhat flat, and it's beneath the zero line. So this is pure weakness. There's bad things going on. You could see with this PMO crossover sell signal back down here, that really signaled trouble for what was going on. Now we did get that buy signal, but notice that it failed pretty quickly and went back into decline. And that is a sign of weakness, pure weakness. Now you start to see us coming out of this. At first, when we get this particular buy signal, we're seeing diminishing weakness. But the minute it gets above the zero line, now you're talking about pure strength, and we're getting that PMO accelerating higher. You can see price accelerating higher. And even though the PMO is flattened, you're still getting more moves to the upside. Then you get this PMO sell signal. Now we're looking at diminishing strength. I don't look at it as weakness because we're above the zero line. So we're losing some strength, but it doesn't mean that we're going to fall apart just yet. So really what you can see during this diminishing strength period is price. Yes, it had the big move, but ultimately it moved mostly sideways. We didn't get much out of it. That's diminishing strength. Once we went below the zero line, which is where we are now on Apple, you're in pure weakness. So right now, Apple is showing pure weakness as far as the PMO goes. So be really careful with this particular Mag 7 stock. It's probably one of the worst looking ones out there right now. All right, let's go to Amazon. Now I have the big chart. There we go. So let's start from the left and move on to the right. Pure strength, flat PMO, rising PMO well above the zero line. PMO sell signal, PMO starting to decrease, the foot's coming off the accelerator, so we have diminishing strength. And I say diminishing strength, look what price did during that diminishing strength period. Didn't do much, didn't move, it moved mostly sideways, you didn't get a big decline out of it. That's diminishing strength. Next up, pure weakness. PMO goes below the zero line and stays beneath the zero line. That's pure weakness, and you can see exactly what was going on with price. PMO is really, it does lag in some cases, but if you look at it, the big picture and what it's been doing, you really get a good sign of what will happen. So I am very, very fond of my PMO. I think the MACD is great, don't get me wrong. The PPO does very similar reactions. You could probably still use these thresholds for the PPO as well. I know that the PMO is not on every charting platform. I know we're on quite a few. I believe we're on Thinkorswim, which is one of the big popular ones. And we have a special relationship with stockcharts.com. So you'll find all of our charts are from stockcharts.com. All right, back to the PMO. Here's pure strength. You can see moving right across, flat PMO, but it's well above the 0 line. And notice price during that strength period is moving up, moving up, moving up. Now we're seeing diminishing strength. So for Amazon right now, we are seeing diminishing strength because we did get that PMO sell signal, but it's diminishing strength. I don't know that we're looking at the beginning of a big time drop here. What I see is more likely some consolidation, probably staying above this area of gap support. So I think Amazon looks okay right now. Probably could see a little bit more upside seeing it today. Definitely better setup than Apple, that's for sure. All right, let's look at Google. All right, pure strength, pretty easy. There's the PMO crossover buy, really straight up move, foot pressing on the accelerator. And then we get this PMO sell signal. But this is diminishing strength. Diminishes, stays above the 0 line. We get the fake out here on that buy signal, but then it stays above the 0 line and we get the crossover buy, and that is pure strength. It goes into this period of pure strength right here where the PMO is flat and it just continues on. You can see the price moves up while that's going on. So that's a good sign as well. Now, back here, we're starting to see diminishing, we're seeing pure weakness. We get that PMO sell signal and it goes below the 0 line. That's pure weakness. You can tell that this isn't necessarily diminishing strength because it is so very close to the 0 line. You know things are a little bit unhappy there. It didn't save you from this big decline here, granted, but we did see that this is pure weakness coming in through here. And then we get diminishing weakness on this PMO buy signal, and we're getting more moving upward, but it doesn't sustain itself. It starts to fall back down. Then we start to see this period of pure strength arrive. There's your PMO buy signal above the 0 line, and it's moving upward. Accelerator press down to the floor here, and you can see the price is doing what we wanted to. We got the PMO sell signal back here in February, actually, yeah, February. And sorry, I have a dog barking in the background. I'm not going to be able to help with that very much right now. Let me mute and yell at him a little bit. I closed all the windows and he's still figuring out something to bark at. What are you going to do? Okay. So here's our diminishing strength on this PMO sell signal. PMO is moving downward, diminishing strength. Now we're at below the 0 line here for Google. That's a period now of pure weakness. It's coming through. So this does not look good for Google. You can also see that 20-day EMA getting ready to cross below the 50-day EMA. And just for a few other things to look at relative strength for Google right now. The group it's in is failing against the S&P. It is failing against the S&P, and it's failing against its group. This is relative strength of Google against its industry group of the internet. And you can see that that is diminishing as well. So we kind of knew this was diminishing strength, but when you start looking at a stochastics topping here, you can see the OBV starting to move lower. There were a couple of signs here that told us that, you know what, we might be past the diminishing strength period and moving into weakness. And that's exactly what's going on. And like I said, once we drop below the 0 line, now we're talking pure weakness. So be very careful with Google right now. Meta platforms. All right. Pure strength. Meta's just had a great year. What are you going to do? I mean, this has been pretty much straight up move. Right here, you had that period of pure strength where the PMO was just flat above the zero line, well above the zero line. You can see price moving up at that point. Then we saw this period of diminishing strength coming in, and that is right in here. And we really kept up with this. This was flat, but it's very close to the zero line. So I would still say diminishing strength here. And you can see price was very flat through this period while the PMO was above the zero line. Then we started to see a little bit of failure back here, but ultimately, once we got that buy signal above the zero line, we started into the pure strength move. And you can see from then on out, the PMO rising, price rising. Now we have a PMO sell signal that just came in on Meta platforms. So another Magnificent Seven stock that is really lining up negatively right now. But this is diminishing strength because the PMO is so far above the zero line right now. So this is diminishing strength. So similar to, I think it was Google, what we're looking at is gap support back here, probably will hold because we have diminishing strength, not weakness yet. And you can see even the stochastic staying right around 80. There are a lot of things to tell us that it isn't, this PMO sell signal is not the end of the world. So I would be prepared for a period of consolidation with Meta platforms based on what I'm seeing right now. Microsoft. Right here is pure strength going across. Right here at that PMO sell signal, that's where we have diminishing strength. And the PMO is moving downward this whole time. Price is moving sideways. It's not dropping like a rock. That's a sign of diminishing strength. But then we get this PMO top, which is very close to the zero line. And we start seeing stochastics falling. We start seeing other problems. This is a sign of pure weakness. You can see the PMO is really putting margin between it and its signal line. Not a great place to be. And you can see that we were starting to see this decline here. Then we had a period of diminishing weakness with these buy signals that came in, but it's diminishing weakness. We're still not really seeing much out of price. It's still moving mostly flat. But right here, the PMO gets above the zero line, right in there, and it does start to rise and get a little, put more distance between it and its signal line. And that was your sign of pure strength. And that's exactly what we got out of the move. Back here, PMO sell signal. This is what we just saw on Meta. Diminishing strength. What happened to price? We didn't get a big decline. We ended up with consolidation, moving sideways. Then we got that PMO buy signal to come in, and that's your pure strength as it moves upward, upward, upward. And now we have diminishing strength going on with Microsoft. So we have to prepare ourselves for a possible down move or more sideways movement, which is what I would vote for right now. All right, NVIDIA. Amazing that I even had a period of weakness on this chart. The NVIDIA has been nothing short of breathtaking as far as its move higher. But we did have a period where it didn't do a whole lot. And I never really thought about that because it just seems like all it does is go up. But really, when you look at the price chart, it did have a period of weakness back in here. So here's your diminishing strength, PMO sell signal, moving down, moving down, moving down. And what did price do? Sideways, sideways, sideways. Then we got that buy signal above the zero line, and we did get some upside. That was a period, it's above the zero line, so it should be considered pure strength coming in, but that failed very quickly. And that was the sign that no, we're actually moving into a period of diminishing strength and now pure weakness once it moved below the zero line. And then really it stayed beneath the zero line mostly during this period. and that was this week period where you can see price did stay mostly sideways. What happened though? We got that PMO crossover buy signal, diminishing weakness, price moved up for us, started to move back down. We got the sell signal, but we're still above the zero line, so we still are in a period of strength, if you will. Then we get the flattening here of the PMO above the zero line. That's pure strength, and it really came in strong right here with that buy signal. That was a really good sign. We've been seeing the PMO flat, not doing much, and then we got that buy signal, and it immediately put distance between it and its signal line, which told us we should expect more upside coming out of NVIDIA here. And that's exactly what we got. The PMO did get yanked lower on that big decline leading into earnings, but it immediately whipsawed back into a buy signal, and it currently is well above the zero line, and the PMO does look like it wants to continue higher, well above the zero line. So we're still in a period of pure strength for NVIDIA. So I still see NVIDIA having more upside potential right now. And you can see relative strength-wise looking really good here for NVIDIA. Definitely a leader, as we know, within the index. You can even see during this period, stochastic staying right above 80. That's another sign of pure strength. So you knew that you were in a period of pure strength at that time. All right, NVIDIA. Tesla. There's been some discussion that it might move to the Magnificent Six and that Tesla might be leaving the nomenclature anyway of the Magnificent Seven. Haven't heard the Magnificent Six yet, but you heard it here first if we do change into that. All right, so Tesla really not having the best year that we can see here. It's not been doing much. So let's see whether the PMO was telling us something here. So back here we had period of pure strength come in when the PMO crossed above the zero line, and boom, it did. We got really great rally out of it. Back here then the PMO started to flatten out, but that's okay. That's okay. We're still in a period of pure strength. It's back here where we get that sell signal. That's when the diminishing strength comes in. And then it starts to put distance between it and its signal line. Even though it hasn't reached the zero line, we can see already stochastics are falling, relative strength is starting to fail. Lots of problems going on in this little period of time that definitely told us we should expect more decline, and the pure weakness showed through. And it really stuck around, I would say, this whole time. I mean, the PMO did get above the zero line, but it was really wishy-washy the whole way through. And you can see during this period of pure weakness back in here, didn't do much. We got some diminishing weakness back here. So we started to see a little bit of flattening, a little bit of upside here once the PMO got above zero, but it pretty much failed very quickly. And you can see there's your diminishing weakness there, continuing in. There's diminishing weakness as we move higher. This is a little bit wrong, actually. I wouldn't call that diminishing weakness. That's diminishing strength because it's above the zero line. But it turned out to be a period of diminishing weakness. There you go. So what's going on with it now? Tesla actually looks pretty good, but we're in a period of diminishing weakness. We're still not in a period of strength yet. The PMO hasn't reached the zero line. So while I do see some upside potential here for Tesla, I think it's limited right now. I think it will be slow going. We might see some more upside here, but I would vote for a little bit more, maybe a melt up is a good way to look at it. Some consolidation with maybe a slight rising trend going in based on the PMO. All right, so that covers the Magnificent Seven. I want to take you over to my website really quickly here. Let's see, where are we going? There we go. Here's my home page. I have two reports that I do. The Decision Point Alert, which is going to give you, it's kind of your news source. I get you everything you need to know about the trend and condition of the market in that letter. You get everything from an in-depth look at the SPY to Bitcoin, the dollar, yields, gold miners, crude oil. I cover all of that in this report. It's very clear and concise. Doesn't take a rocket science to understand it. It's very easy to get through very quickly, and you'll know everything you need to know about the market if you read this every day. Decision point diamonds might be more up your alley because you're in a trading room here basically. And this is where I give out 10 stock picks, stock and ETF picks per week. I have an ETF day on Wednesday because I know not everybody likes to trade stocks. So I offer the ETF day on Wednesdays. I'm going to take you very quickly into one of my prior diamonds reports just to give you a sense of what we're talking about. There's pure strength using the PMO. So this is a decision point diamonds report. I will talk about whatever is interesting me at the time. If there's something, I run scans to give me these stock symbols, and I'll talk about what the themes might be. Am I getting a lot of industrials? Am I seeing banks? I talk about that in the lead-in, but then I give you your diamonds in the rough. These are the 4 I gave out on Tuesday. Hopefully they all do really well since I'm giving them away to everybody. I know KOP did very well on earnings, so I know it's up over 7%, or it was yesterday at one point. I also run a subscriber-only trading room so that you can go in and we look at those diamonds in the rough. I let you know whether I think they're doing well. Do they look lined up well to go into the future, or should we just forget about them? We talk about all of that. I take your symbol requests. I also do a free trading room, and you can subscribe to my YouTube channel. It's YouTube. I'm at decisionpoint.com. So Decision Point without the dot. Decisionpoint.com is my YouTube channel. I would really love to have you subscribe. This is where I post my free trading rooms. You can also go there and be in the trading room live. If you look for this on my homepage, this exact ad, just click on it. You'll be able to register, and every Monday you can go into the trading room with me and look at these PMOs and what they're doing and where we're finding strength and where we're not. I also look at your symbol requests, so we can take a peek at those. And actually, if you have a few, it looks like I might have just a few minutes to take a few symbol requests. Just throw a couple in the question box and I'll take a peek at them. So what I do is I tell you when earnings are. You can see this one was going to report today, so I made sure everybody knew that. Stock Charts runs various scans every day that are predefined. I tell you which of those scans came through on. And then I give you the daily chart, tell you what I'm seeing. In this case, pure strength. PMO is above the 0 line with a crossover buy signal. And really during this period, we had diminishing strength. We really didn't see a complete loss of strength because price stayed above support that whole time. So this one was lined up very well on the breakout. Then I do a weekly chart because I think you need to see the weekly chart to know what the intermediate term look is of your trade. A lot of times these weekly charts aren't very positive, so we want to keep those trades that I give you as short-term trades, not intermediate term investments. In this case, AMWD looks really good, even in the intermediate term, with the exception of that overbought RSI. But I'm not overly concerned about the overbought RSI because you can see it's had periods where it can hold on to that overbought condition for quite some time. So I think AMWD is looking very good. Intuit was another one. And here we have a period of pure strength going on. PMO is flat above the 0 line. And in fact, right now, at that point in time, it was getting ready to give us a crossover buy signal. Not sure what's happened to it since Tuesday. I think it had a bad day yesterday, but I'm not sure. But you can see relative strength, all of this. I give you the whole write-up and tell you why these stocks are looking good to me. This one I do know reported on Wednesday morning and did very well on earnings. We had another period here of diminishing strength, but now we're getting ready to see some pure strength as the PMO is ready to cross above its signal line. And finally, the last one, Tempur-Pedic. Here's another one that has experienced diminishing strength. Notice price straight across, diminishing strength. But now we're getting ready to get that crossover buy signal, and that's a sign of pure strength coming on this breakout for Tempur-Pedic. All right, I will look at a few simple requests before we leave, but I just wanted to make sure you could see what it is I do. Here's a decision point alert for you. We talked about the trading day, looked at what the Magnificent Seven did and how that might have affected what we had going on yesterday. We have our scoreboard, our market scoreboard tells you what our intermediate term trend model, long-term trend model are reading right now. We give you the background of what happened on the day. We look at the S&P, like I said, primarily. I look at a 5-month candle, I look at a 1-year chart, and we discuss everything on there. There's my free trading room again. New highs, new lows. I look at what we call climax analysis. If you get our report, you can read about climax analysis. Our short-term Swenlin trading oscillators are included. Our intermediate term breadth momentum and volume momentum indicators are included. And then we have our participation indicator chart. I've talked about my participation indicators, and if you sign up for my free email list, I will be doing a presentation, I believe next week, yes, on chart patterns, but I have other presentations coming up, and one of them will be on participation. So sign up for that free email list on decisionpoint.com, easy to do. And again, I don't inundate you with email, I promise you that. So this is our participation indicators and what we're seeing as far as stocks above their 20, 50, and 200-day EMAs. Right now, our big concern with the market are these negative divergences. You know, price is much higher than it was back here. So wouldn't you think you'd have more stocks above their 20-day EMA and more stocks above their 50-day EMA? But we don't. Our silver cross index has been in decline for some time. That's a negative divergence. So all of these things do keep us cautious, but we also are taking advantage of what's happening in the market. What we've been telling our subscribers to do is to get those stops in there, make sure you have them, and let the market stop you out right now, because a lot of us are running on profit. I hope you are. And this way you'll be able to take advantage of any upside that's left in the market and protect yourself to the downside by using those stops. And I think right now is definitely a good time to have stops going. The conclusion, if you don't have time to read all the stuff I just wrote, if you read my conclusion, you get everything you need to know. I also tell you how exposed I am to the market. And then there you go, Bitcoin, the Bitcoin ETFs, interest rates, the 10-year, bonds, the dollar. I mean, you get everything in here. And like I said, really easy to read. I don't write a whole heck of a lot on each chart because I don't need to. It's no point in confusing you and making things hard. Here's gold. Like I said, we cover gold, and I cover gold miners. And there's crude oil, and that's the finish. So DP Alert is the one that's going to be this report. It's $50 a month, really cheap. I mean, all of my reports are. And the diamonds, where you get the 10 stock picks per week, and ETF picks, I should say, that's $80 a month. So really not a bad setup there for you. Let's go back over here. If I can make this work. Why isn't it working? There we go. So let's come back here. Here's the information for my free trading room. So like I said, I do those on Mondays. They're at noon Eastern time, so join me for lunch. I go through the market, so we look at those charts that I was talking about in the DP alert. We then, we have a special topic usually every day, and then we cover symbol requests for the last half. So you'll be able to see how we can trade these different symbols as they come in and identify pure strength and pure weakness. So want to try us out? Try out the reports. You can get our bundle package, which is both of those reports. And if you use the coupon code DPTrial2, you will be able to get 2 free weeks of both reports to try out. So you can get a sense of whether it really fits your trading style or not. Or if you'd like, you can get 50% off your first month. Just use the coupon code SAVE50, and there you have that. All right, looks like we have only about 5 minutes left. Let me see, I promised a few symbol requests, so let's go over and do that real quickly.
Can I make my favorite request?
Yes, of course.
The SPY ETF.
The SPY?
Please.
Okay, you got it. Let me use one of my marked up charts here. Actually, I think the 5-month candle is better. I'll talk about both. So right now, what's going on with the PMO on the SPY? I think it's pretty obvious. We have pure strength. There's nothing to tell me that there's weakness coming in. We did get a PMO sell signal yesterday, but ultimately the PMO is flat and moving sideways, and it's well above the 0 line. There's pure strength in this market right now. We can't ignore that. The problem I have right now are those negative divergences that I pointed out earlier, but the other is this rising wedge that's coming up on the SPY chart. The wedges are really our favorite chart patterns. They almost always do what they're supposed to. You get head and shoulders, you get some of the double tops, and those, they don't always work out. Wedges almost always work out. And a rising wedge is a sign of an upcoming breakdown of that rising trend. So it doesn't mean that we're going to fall apart and end up, you know, way down at the top we saw back here in 2023. I don't see that at this point. There's too much strength based on the PMO to expect that kind of a decline. But certainly the market is due for a pullback, maybe small like we had back here. Maybe we're more pure strength and we're going to see just see more of a consolidation period. What we're kind of trying to keep an eye on is what's happening with that Magnificent Seven. It's really what's driving these indexes, and you know, it's just important to know what they're doing, which is why we do keep an eye on those in our DP alert report. All right, let's see if I can find some here. Boeing, there we go. There's one that looks good to do. All right, Boeing is showing pure weakness. The PMO is flat and it's well below the 0 line. This is not a stock that I would be interested in getting into. Maybe we're going to get a reversal here because this is a pretty good looking support area. But at this point with this PMO, it is a buy signal, but I would see that as more diminishing weakness. I don't see it as leading into a big rally at this point, just based on the PMO. Stochastics are looking good right now, but we're really not getting the, you know, we're not getting the price action we should. I mean, we got one good day and today it's not doing much. You can see relative strength wise, it's trending lower against the market, something I don't want in a stock that I own. The RSI is negative below that net neutral 50. And then look at the death cross that is getting ready to happen here with the 50 moving below the 200. I would set your stop. If you have this, you could hold it. I would set my stop probably at about 4.5% on this. I wouldn't want it to go much lower than that because pure weakness going on, it could turn into something much worse. All right, let's see here. Zion. And that should be it. So I don't want to run late. Okay. It's starting to enter a period of weakness right now. I wouldn't say it's pure weakness necessarily, but it's a period of weakness. The PMO has moved below the zero line. This is not a good setup. Now, it could rebound itself here off of that 200-day EMA, and stochastics are hinting that maybe, just maybe, that'll happen. But I don't see the PMOs telling me, even if we get some upside here, it's not going to be very good. So at this point, I don't like what's going on with the Zion chart. Again, I think you could hold this though, and I'd probably be setting my stop at about 6%, I think would be a good stop level for this one at this point. All right, that is it for me. I have enjoyed my time here. I do want to, again, make sure that you have the information on my, let me get the, the sharing got paused. Hang on, there we go. So there's the information again, if you wanna get my, the first month for 50% off, just use that coupon code SAVE50. Or if you wish, you can use the code, I don't have it working right now, but you can use the code DPTrial2, and that will also get you what you need. That's me. You can find me at decisionpoint.com, and my email address, if you have any questions or you want to learn more about my reports and find out more information, just feel free to email me, Erin at decisionpoint.com.
Thank you so much, Erin. Great information. Thank you for fulfilling my request. We always love your analysis of the market. Your insight is incredible. You are truly gifted, and I just want to thank you so much for sharing how you leverage the price momentum oscillator to find the strong sectors and tickers. And thanks again for participating in our event today and sharing your insights with our audience. Ladies and gentlemen, Miss Erin Swenlin, and you can find her at decisionpoint.com. I've put her links in the coupon codes in the chat box. Erin, thank you for being here. We hope you come back and see us again.
Absolutely.
All right. Have a great leap day.
Thank you.
You're welcome. Ladies and gentlemen, that brings us to our next presenter, who shares a different way of investing that allows you to hold assets rising in value during bear markets. He believes that investing should be about capital preservation first and growth second. With over 25 years of investment experience and data working with 20,000 self-directed traders, he's confident that anyone who wants to make money in all market conditions and with less risk will naturally gravitate to this exciting yet logical method. Ladies and gentlemen, here to present how to make 2-time higher annual returns trading one ETF is Mr. Chris Vermeulen, founder of thetechnicaltraders.com. Welcome back to Traders Corner, Chris.
Hey, thanks, Rob. Always a pleasure. I take it you can see my presentation screen there?
I believe it's your splash screen.
Yep, perfect.
Cool.
All right. Well, thanks everybody for sticking around. Erin had some amazing insights, and she brought up some really great points. Actually, stockcharts.com is where I got started like 25 years ago. So I don't use it anymore, but it is amazing, and yeah, definitely an awesome platform. But Erin brought up a really good point, which I'm going to touch on later here in this presentation about the markets, and how she talked about how we are in a strong trend, no doubt, but the majority of stocks are not performing very well, and it's definitely the market's tipping its hand, telling us that it's not that strong, but it is going up. So I'm going to talk about how you can generate pretty high returns trading one ETF and one asset class at a time, which I'll cover. This is what I believe is kind of an industry-breaking investment style that the financial industry really doesn't want anyone to know. In fact, advisors are starting to do this a lot because it makes them look like a superhero. And they realize, you know, if this was into the whole market, if the financial system started to go this way, the stock market probably wouldn't move the way that it does. So we're kind of trading a very special strategy here that allows us to be very nimble as individual traders, or an active investor or advisor can take advantage of this market. So it really doesn't matter if you are a passive investor or active trader, you know, or retired. If you just want higher returns with the least amount of volatility and the lowest level of stress, this strategy, I think, is going to really open your eyes to how simple the market can be when you look at it as each asset is its own investment, and you do not always need to be in all of them at the same time. So let me quickly go through the disclaimer here. Access to this, excuse me, this webinar is for educational and informational purposes only. We provide educational services that are meant to teach you the risks and reward of trading and are not implying or guaranteeing any profits. Past results are not necessarily indicative of future performance. Trading securities and options involves risks, so do not trade with money that you cannot afford to lose, and consult a licensed broker or financial advisor before placing any trade to ensure it's suitable for your personal circumstances. So I'm not an advisor. This is just for entertainment and educational purposes from that standpoint. So overall, the general market is traded in two ways. People are trading both of these strategies in a lot of cases. Both of them are generally low return and very high risk. And if you're doing both of these, then this is definitely a strategy that I'm going to show you how you can really step back from what's going on and do something different. And the two most dangerous strategies that people are doing are active trading and the buy and hold. There are numerous studies, as much as we don't want to hear this, there are numerous studies across North America, Brazil, Taiwan, and they all have come to the same conclusion. They show that 97% of active traders who trade for 300 days or more, so a full year and change, lose money. And that is the case. I have been following and running newsletters here since 2001. And I'll tell you, it is a rotating door. You can have a winning strategy, give people what they need, and they have great ways to skip trades, not get out of trades, not get in, get out at profit targets. They have a great way of blowing up their account with their own trades outside of strategies they're using. Active trading is almost guaranteed over time. You won't make any money or you'll lose money. And it is a tough sport. The other side is the buy and hold. You pretty much never see anybody retire 20 or 40 years younger or sooner with the buy and hold. The buy and hold requires a volatile ride. You're guaranteed to have some very traumatizing years. It takes time to make money. It's the way the financial systems have been built, so people just keep dumping their money into the markets, in with advisors. Advisors get a % of your money every year, and they don't have to do anything other than give you a call or send you some chocolates and just say, don't worry, you'll be fine, just wait it out. So both of these are very dangerous strategies. And the buy and hold, specifically, if you were like 45 plus age or retired, the last thing you want to do is go through a 5-10 year bear market phase without any real growth. So that is kind of what I want to touch on, as something that actually fits between this strategy. And I'll get into some of the nitty gritty, but I also want to share something with you that at the end of this presentation, you'll be able to get this downloadable PDF of some of these charts I'm going to be covering today. The PDF actually has more than this, and it really opens your eyes to where we are in the market, what's going on, and how to take advantage of it and see the markets from a very different point of view. So a little bit about myself. I'm located up north here in Collingwood, Canada, just north of Toronto. I'm married, I have 2 kids, a boy and a girl. I'm an entrepreneur. I've been a technical analyst since 2001 when I realized that fundamental analysis doesn't work. During a bear market, even if companies are very strong and growing, their share price still gets cut in half or a lot more than that. So I have been focusing strictly on reading charts, sentiment, cycles, all of those things to get a gauge on what direction of the market's going. And I only hold things that are moving up or I'm benefiting from them falling. I will not hold anything that's going down, and I could care less about news. the Fed, interest rates, NVIDIA, all that stuff doesn't matter in terms of how we follow the markets and how we trade. And I've been doing this since 1997, and I've published 2 books, one called Asset Revesting, which I'll be talking about today, is this strategy, and Technical Trading Mastery, 7 Steps to Win with Logic. Little flashback of what my lifestyle is like. I have built a beautiful dream home on the water, semi-retired at the age of 27. I say semi-retired because I did exceptionally well, and money hasn't been a concern. I do all kinds of different businesses and projects that have systems in place and run. So I still work, but everything I do are all things that I love. And I love the markets. I love investing. I love real estate. I love inventing things. I will never stop working, because to me, work is fun. But here's my family. We've got Mirabelle, and she is just turned 14 years old. My wife, Kristen, and Ben, and my daughter horseback rides and competes. My son is a serialpreneur and just can't get enough of cereals. But long story short is, if you can manage your money, if you can leverage the markets, leverage your money and your time, you can retire and make a ton of money, especially during a bear market, which I think we are slowly working our way towards, and we'll get more into detail there. I was also at the NASDAQ a few weeks ago. We took one of our companies public, Hover. We're a vertical takeoff and landing aircraft company, so that was a pretty exciting experience to go public. So I've done a lot of different things and own a lot of different investments, and that's what keeps things pretty fun and unique. All right, so let's jump into problem number 1 of more or less trading and investing, and that is managing risk and positions. And I have sold courses and newsletters for 20-something years, and I can tell you, as soon as you say I've got a course on managing risk and positions, or emotions, nobody wants them. It sounds boring. People right now are probably saying, ugh, another boring presentation. I don't want to listen to this. The thing is, if you nail these 2 things, if you can just actually manage your risk and your positions properly, everything else in the financial markets just seem to fall into place, and it feels like you're on a good luck streak all the time. And this is where the money is made. If you're out there hunting for stocks and trades and all that crap, we need those, yes, but it all comes down to managing risk and positions, and it's not about taking more trades. It's about actually taking good trades and then managing them properly. So I came across the managing risk and position, or managing risk, at a young age. I had many different life events that caused me to realize how serious this is. When I was 16 years old, I got my pilot's license. I remember when my instructor said, "Hey, Chris, hop in the plane, turn on the radio." He says, "You're doing your solo today." And I remember the fear shooting through my body. It was fear and excitement. And I remembered when I took off, wheels left the ground, and I'm up there all alone. Everything went out the window. I was singing, I was laughing, I was crying. I didn't know what to do. I couldn't believe I was actually in the plane alone. And that was when it really hit me. After the runway had passed me, I'm like, oh my gosh, I have to do a series of things to pass this test. And I fell back to a checklist. And of course, you got it strapped to my leg, and all I had to do was follow it rule by rule, step by step. And before I knew it, I was back on the ground, taxiing off the runway, and my instructor said, "Chris, you're now a pilot." And that was one of the biggest life experiences I had, and I still have ever had, is learning to fly and going up on your own to come back down in one piece. And that was when I learned, I was only 16, and that was when I learned that, hey, if you just understand how things work, you have strategies to follow, and you don't have to go off emotions and panic and try and figure things out as they happen. Things are actually pretty sleek and pretty boring, and it gives you time to do stuff. And the strategy I'm going to show you, we see trades coming days before they happen. We see targets getting hit. We see potential stops getting hit. We see trend changes happening days out. So we see them coming. There are no real big surprises with this strategy. There's 5 to 12 trades with this strategy a year. May not sound like a lot at all if you are a busy, active trader. But if you're a passive investor, you're saying, holy crap, that's way too much. I just want to leave it with my advisor. And here's the thing. It's the sweet spot, we move our money around from asset to asset, as you'll see, just enough each year to make sure we're only invested in the assets that are going up. And that's what really sets this strategy apart. It's in no man's land. It's in that zone that is actually hard for most people to follow because it's so boring and slow that people just, it doesn't hold their attention. And it's too active for somebody with an advisor who doesn't want to do anything. And we solve that problem with automated trading. So this strategy can be automatically traded in your brokerage account. I don't charge anything for the auto trading because I believe it's the best way for people to make money if they get themselves out of the way. But anyway, long story short, another experience I had about risk management was my parents had done exceptionally well. My dad retired in his early 40s, and we lived pretty high on the hog. And my dad got back into the entrepreneur space because he's an entrepreneur. Eventually got into bed with the wrong investors who ended up taking the money and vanishing, and he had to go bankrupt along with all of his investors. A lot of them were family, local friends. It was a devastating scenario. And one day I heard my mom screaming, then I heard my sister screaming, and I go running in. I realized my dad is on the bed shaking, foam coming out of his mouth, the scariest thing. I remember my sister looking back at me saying, he's gonna die. And like the fear was incredible. And this was because of stress induced from losing all your money, losing friends and family. And we had everything, but it all got put into the basket and lost it all. And so losing money, especially in a bear market phase, it has been proven that bear markets are killers. I think there was 87 suicides in 2008 to 2009, directly linked to falling stock prices. So this is serious, and that is what really connected with me to make sure no matter if something bad happens, it's not going to be enough to put me into that type of financial state, that mental state. And so we need to be aware, because I believe there's a 30 to 50% correction coming, and it might drag out for years. So we need to be aware for this. And of course, I already touched on the fundamental side. I've lost a lot of money trading fundamentals. If we just follow price action, we know if it's going up or if it's going down, or if we don't want to be in it because it's a choppy, noisy chart. So that is kind of that in a nutshell. We'll kind of move forward here to how do we manage risk. And managing risk is about understanding market structure, and then we can apply technical analysis, reading the charts and the price trends, and then we can manage those positions. And all these things kind of compound onto each other to do that. And so market structure is pretty darn simple. Stan Weinstein, I think, teaches it the best. He talks about there's 4 stages in the stock market. If you know what stage you're in, you know what type of assets or stocks or sectors or currencies or commodities you should be trading. You'll also know what type of strategy you should probably be trading, because each stage does require a different strategy. And that's where a lot of people go wrong. They do the same thing all the time, and they are wondering why they have massive losing streaks, and then they have these amazing winning streaks, and then they give it all back again. And that's because they have no idea about the underlying trends, the stages in the markets, or they just don't know how to identify them. And the key here is to look at the stock market like the ocean tide. When the tide goes up, it lifts all boats. Well, when the stock market is in a bull market, it's going up, it pretty much lifts all stocks. When it's in a stage 3 top or a stage 1 basing formation, it's like changing its trend, its tide. It's kind of choppy and not really moving anywhere. A stage 4 is the tide going down. Most stocks and most assets go down, and we can make a lot of money from falling prices. In fact, the market falls 4 to 7 times faster than it rises, meaning we can make as much money in 1 year as we could possibly make in a 7-year bull market. And that is one of the reasons why I was able to retire early, and all this stuff builds up together to build a very strong nest egg, and gives you the most wealth you've ever had at the beginning of a new bull market, a new economic cycle, meaning you can buy real estate, businesses, amazing companies that are at fair value or undervalued, and big dividends. So that is really critical. And I believe we're in a stage 3 top right now. keep focus on this price action where you have a rally up, you have a crack to the downside, and then a consolidation. That is really the key price action of the general markets. And I pulled this off the news. This was about a week or so, January, holy time flies, it was about a month ago. Anyways, this headline news that just showed up on my router's feed is to me telling me we're in this stage 3 top. We're starting to see banks cut their dividends. Banks aren't all that dumb. They realize that they're about to go into a wave of house foreclosures. People are going to start not paying off their loans and their debts. So that is very bearish. We have passive equity funds asset has eclipsed the active traders. The COVID bubble of everybody piling in trading stocks, trying to be all fancy and make a ton of money fast, that is over. Everybody is now just flipping over and saying, just put me in the buy and hold. This is what the market does. This is what the financial system is built on, is trying to get everybody to do the same thing. And then they're all going to get slaughtered and hold all the stocks near the top. And then they lose everything. And then they go back to saying, oh, I got to trade my own money. This is ridiculous. I give it away and I lose it all. So this is one of those stages. Job cuts starting to pick up. So we got all kinds of stuff starting to move. Actually, a good example of this, if we actually take a look at the ARK ETF, take a look at the weekly chart of the ARK ETF here. We can see stage 1 base, stage 2 blow off phase, and then we went into this complacency move. It got hit real hard. People were thinking it was going to start a new bull market, and it broke down into a bear market, and now it is in another bear flag. In fact, I see the ARK ETF, people think it's putting in a big bottom. It's actually a big bear flag at this point that is pointing to about $16 to $18, which brings it back down to the price tag we saw back in 2016, 2017. So there is a huge, huge correction still to be done. And if you don't zoom back far enough, you don't understand what's going on. It can be very, very painful for this market. So this is kind of the emotional roller coaster that most people go through. And if you are a technical trader, you follow a strategy like I'm going to show you here, we can live this optimism, belief, thrill, euphoric phase twice through this cycle. So the problem that most people have is we're in this complacency stage. People think the stock market is starting a new bull market. People are moving into the ARK ETFs. They're moving into the Russell 2000. While those are still dramatically underperforming, people are starting to get very bullish. The SP 500 is at new all-time highs. The NASDAQ's at new all-time highs. But those two indexes are covering things up. And this is what Erin brought up earlier. The majority of stocks are not trading above their 20-day moving average. And if we were to pull up the SP 500, this is the SP 500, and we'll just take a look here. You can see this is the equal weighted. So scratch out the heavyweight techs. The SP 500 is coming up to a massive double top or a complacency move. 2007, 2008 top, the market did the same. It came up, it poked to a nominal new high, and then sold off 54% after that. So the majority of stocks are not at new highs. We're putting in potentially a massive double top. If we go and look at a broader market like the Russell 2000, take a look at this chart. It is got the signature pattern of a stage 2, and then we had the blow off move and the crack to the downside. We're in this complacency move. It might push up a little bit higher, but overall, the most portfolios are struggling. They're nowhere near their highs. And this is a giant bear flag that points to another substantial drop. So if you were to take equal weighted SP 500, which to me is the ocean tide of the stock market, we just need to know what that is doing in a nutshell. If we take the equal weighted version of that plus the Russell 2000, if this will load, and this is the general market. This is a perfect stage 3 topping phase right here. We are in this complacency move. The market is doing what it does, sucking everybody in. I know people who are buying NVIDIA on phone apps who have never bought a stock before. I know people are piling into the stock market who missed out on last year's rally because they thought the market was going down. They now have FOMO. So the market is doing what we have been wanting, and I still want to see happen. The stocks go up more, suck in more traders, and then eventually sell off and provide an opportunity. So key here is to understand there are different strategies that need to be traded during different stages, but that doesn't really matter so much because we need to get into the nitty-gritty of the markets. And that is position management and understanding technical analysis. If we can identify when the market is strong, we get green bars. We want to know when to hold and own stocks. This is the SP 500 daily chart. When the market goes red, we do not want to hold stocks. We want to move somewhere else to something else that is going higher in value. Could be bonds, which bonds have not been in favor for a while. Could be the US dollar index, which did exceptionally well last year. It was something we traded. It rallied 18% while the stock market moved down like 24%. Even when the market goes sideways, we can move into things back in this window. It would have been the dollar or bill, another ETF where we just earn daily interest until the trend confirms a new direction and starts to go back up. So we know when to be in and then when to go to a different asset class. In a downtrend, this is 2022. Well, we know when there's an uptrend in place. We also know when it changes. And when we're in a bearish phase, the majority of the price is down, a falling tide. You get these very short-lived little trends, and then you get very long, stretched out downtrends. And you want to be in something else while these are falling. You could bet against the market and use an inverse, or you could go into the dollar ETF, which rallied each time this sold off. So there's a bunch of different ways you can play that, obviously options as well. All right, so let's just take a quick look at the current market conditions. If we take a look at the QQQ, we had a buy signal back in November. It continues to hit our targets and continues to push higher. When we look at our sentiment analysis, whenever we're in a strong uptrend and we get these red bars, these red bars are when investors and traders are dumping their shares. We can gauge how panicky they are. We can also see where they're rotating their money to. And when these investors are dumping their shares and they're betting on downside with put options, inverse ETFs, they think it's going to roll over and die here. We see the market go the opposite way. And the market loves to apply maximum pain against people who are putting on leverage plays against the market. That's why you do not want to bet against the market. And these red signals are generally strong buy signals for us. This is people panicking. And when people are panicking, we should be getting excited. We do the opposite of the general public. So letting emotions drive our decisions. There's a article I did talking about what is your personality type. Now, if anybody knows what the Myers-Briggs personality test is, or they know their Myers-Briggs personality, that's pretty awesome. There's 16 personality types. This is really critical. It's worth Googling. You can type in the technical traders personality type and it should show up. But long story short is there's 13 out of the 16 personality types do not bode well for financial success. If you are one of these 13, which is 81% of people, then you're naturally going to be emotional. You're going to be buying and selling at the wrong time. You're not going to be able to take partial profits. You don't get out of losers. All the stuff that majority of people suffer from as an investor or active trader. There was a research report done by Employment Benefit Research Institute, and they actually came up with 81% of individuals run out of money in retirement because they don't know how to manage their money. And it was actually after I read that, I actually ran the numbers on the personality article that I wrote, which was 13 personalities out of 16 aren't good for traders or investors. And it happens to be 81% as well, which blows my mind that they match up. And that's the whole reason why I want to talk to you about this is you need to go find your personality type. You need to then check out if you have an S or an F in your personality type. There's 4 letters to it. If you have an S and an F, or an S or an F, you're going to be struggling as a trader, and you're going to need to figure out how to overcome those problems. So if we take a look at things as an active trader, because you're active, you're going to have a lot more emotions. You're constantly going to be suffering from thinking you need to make more trades to make money. That is like one of the biggest misconceptions. People always come to me and say, "Oh, it's not enough trades. I won't make enough money." I'm like, well, you'll probably make way more money if you actually do good trades than a whole bunch of emotional trades. But everybody wants more trades. It's like a game, it's an addiction. More trades means more risks, and it usually means you make less money. You also think that you always need to be in a trade. Sometimes this strategy, we're in cash 30 to 40% of the year, which may sound crazy, but that's how we make 2 to 3 times the annual return of the buy and hold with about 6% drawdown, almost nothing compared to the 40% drawdown of the buy and hold and 50% pullbacks most active traders see in their accounts, who are getting heavily positioned in certain spaces, precious metals or Bitcoin or uranium or whatever it is that they're hot into. They always get overweighted and take a massive hit eventually. So all these things kind of are the major problem of the active trader. And I'm going to show you how we can get around that. Now, if you're a passive investor with an advisor, or you barely do any trading, you just kind of buy stuff, especially the blue chips, and just let them sit there for their dividends, man, there are some serious dangers in doing that, especially if you're 45 plus, because you don't have time to recover and you need to keep compounding your growth going forward. So there's some silent killers here. We're going to talk about the industry is designed to suck your money in and really just take a cut of it and let you take all the risk. If you were to go to your advisor, if you have one, and say, how much could I lose if the stock market falls 30 to 50%? They're probably going to tell you, well, you're probably going to lose 25 to 40% of your portfolio. Your life savings, somebody who's supposed to protect you, has got you in something that dangerous. And that is a real wake-up call. But the industry makes you think that's the norm and everybody else is doing it. And that's why advisors do it, because, hey, if they all lose all your money at the same time, then nobody gets in trouble. If they try to help you and are a little more active, they can get in trouble if it backfires on them. So they don't do it. They don't want to stick their necks out. They'd rather just be with the norm and take a cut of your money. So one of the biggest silent killers here, there's two actually with drawdowns. There's value drawdown, which means whatever the highest account value you have, eventually, as the market pulls back, you're going to lose that value. And we saw this in 2022. The average portfolio, the buy and hold, the 60-40, lost 24%. It's not back up to break even yet, even though the indexes are well in new highs. And that's because people are stuck with bonds in different positions and stuff. So you're going through a lot of stress. Also, the most valuable thing that people don't seem to calculate in is the time drawdown. We're going on a few years now. We're going to go on a couple of years without any real growth. You're really just clawing back things that money that you lost. And time is more valuable. We can always make back money, but you cannot make back time. If we go into a 2000 type financial crash, which I believe were actually very similar, a multi-year pullback, and it took 16 years for tech and growth stocks to come back to break even. The SP 500 took 12 years. That is a long, long time. And none of us want to waste a decade. And who cares if it's a 2-year pullback and then starts going to new highs? There's no need to ride that kind of volatility when you can profit from falling prices, profit from the new bull market, and then keep making more as it goes up. So those are a couple of the hidden problems here, the silent killers. The other is sequence of returns risk. Now, this is for anybody who is withdrawing money. You're already retired, you're withdrawing money and using it to live off of. And I want to show you a couple different examples and then kick over into what asset revesting does, the type of performance and how it works. So on the left here, we have Mike. He's the typical trader, active investor who's doing their own money. And he's taken on lots of risk. He's got some big gains, 35%, 35, 43, 16, but he's also got some big loser years, 14, 20, 25. But on average, over 10 years with his $1 million account, he averaged about 8% a year. Now he withdrew $50,000 every year to help subsidize his lifestyle. And after 10 years with his $1 million, he still had $818 left. Now, if you were to go to just a more conservative strategy where you're not swinging for the fences, you don't have any of those big years, your biggest years at 13% and then 12, and then they're all just single digits, but you don't have any massive losses. And they only make 6% on average, which is a lot less than 8, but you end up with $1.89 million, which is 45% more money than the guy who made more on average per year. And this is because sequence of returns risk, meaning you lose 14% of your capital and then you withdraw $50,000. So now you have less money, but you make 7% the next year on less money. And then you lose 20% and you withdraw more money, and now you're making 2%, but on a lower amount of money. So it keeps digging you into a hole versus someone who doesn't really lose money. If you don't lose money, then your account just naturally wants to keep growing, and it compounds a lot faster, and you don't have those down years that give you that sequence of returns risk. And so that's just the difference of being a very conservative boring trader and an aggressive trader. If we take a look at asset revesting, the strategy I'm about to walk you through here real quick is you've got the last 10 years of the SP 500. Now, this isn't including 2023. This slide is a little old, but overall, that investor only made less than 6% on average. $1 million after 10 years is still $1 million. If you use the asset revesting strategy that we're using, then you have had higher returns. We don't really have many losses, and we get a much higher average return, and you have made a fortune for doing very little and just holding assets that are going up and sitting on the sidelines when there isn't anything ideal to pick. And we do this with a really unique strategy. I use a asset hierarchy. The most volatile ETF that we play is at the top, and as we go down, they're less and less volatile. Now, they have no correlation to each other. The SP 500 is completely uncorrelated. And you can see the volatility, the 20-day max volatility, it changes and goes down as we move down this list. And so more or less, we always want to own stocks, but if they're not favorable, we want to own bonds. If they're not favorable, we look at the dollar or the inverse dollar, or we move to a cash position that pays us daily interest. And that can be seen right here, where we have the top chart is the SP 500 with the COVID crash. We were long the market. Our strategy said, hey, there's a trend change, there's something going on, exit. We moved into TLT. It actually ended up rallying 19% in 9 days. It blew past our 15% target, gapped us open at 19% gain, closed us out. And then we moved down to Bill because it was the only other opportunity at that point where we just sat in cash and we got paid out a nice dividend in here. And then we waited and we waited. And then eventually the SP 500 gave us a new signal and we rode our account up for another huge gain. So during a time where most people lost their shirts, people were panicking and losing money. We were actually during the craziest time, we were sitting in cash, richer than we had ever been. And it felt like a walk in a park. We closed out a position, we moved into a defensive play, we moved into just cash preservation mode and waited and earned interest until the dust settled and we got back in. And if we do a strategy like that, then we can get these super powerful, this thick line, this consistent growth strategy just up and to the right, and we can outperform the 60-40, the SP 500, and the NASDAQ, which most people would kill to outperform the NASDAQ. And this is going back to the 2007, 2008 market top. And you can see the risk involved with those indexes and with the buy and hold strategy, the max drawdowns versus the strategy that we use is less than 6% at this point. At some day it will go higher, but this is a very conservative strategy and it can trade and manage massive amounts of money. It's not like trading volatile, fast little things. You have to have many positions. So that is kind of what we're doing in a nutshell with this strategy and how that unfolds. So we're kind of getting close to the end of time here. Let's just see here. Let's just kind of wrap it up and then we'll jump over to some charts here, and we can maybe get some questions if anybody has some, but I can go over what we're offering you as well. So if you want to get in on this, you want to take advantage of an ETF strategy, then you can. And I should actually touch on one thing real quick here. If we go and we take a look at the overall market, the key to understand here is I see investing in the stock market in assets differently than everyone else. And it will seem shocking and extreme because it's not something you're used to, but this is what asset revesting is all about. So people who own a whole bunch of stocks, a bunch of sector ETFs, and they say, hey, I'm diversified. I got a whole whack of stuff. Well, in my opinion, all you've done is spread your money out to the fastest, most volatile different stocks. Individual stocks are the most volatile. Sectors are then second volatile. The indexes are baseline. That's the stock index, the lowest volatility. Doesn't matter what you own there. It's all the exact same trade. Stocks are stocks. When the stock market is going up, you either want to own the index or own stocks. If it's going down, you don't want to own them. So we will literally move all of our money into the stock market when we have a buy signal on the SP 500 or the NASDAQ or both. When the stock market says, hey, it's trendless or the trend is turned down, get out, we sell all of our stock positions, which is just the SPY and QQQ. We keep it very simple. And we move into a different ETF. It could be Bill, UUP, any of those things. And that's what we did back over here in 2022. We moved into UUP, which I'll just go, well, we can look here on the weekly chart. But 2022, the US dollar index just continued to scream to the upside. This is a low volatility move. Look, you could have a multi-week pullback in it, and it's a 4% drawdown on that small little move. Yet you can make 20% on moving to one of the most steady, slowest moving assets and protect your capital and grow it while everyone else you know is probably losing their shirts. So that's where we stand, very different with this strategy. We don't want to be diversified in the stock market because you're going to have a whole bunch that do really well. You're going to have a whole bunch that do really poorly. You end up with the average net average of the market, or generally worse if they're individual stocks. You're better to stick with the index, own the stock, be in the ocean when the tide's going up, and get out of it when it's going down. So that's kind of how I look at the markets. So more or less, just to kind of conclude what we've touched on here, I have shown you a different way. I know I barely scratched the surface. I don't have time to show you the full strategy and how we go about stuff. But the key here is for you to know there is a different way. Active trading is deadly. Doing nothing is deadly. If you do anything to the extreme, which both of those are, it is very, very dangerous. Asset investing is just a hair more active than doing nothing. It's just enough to catch those waves in the markets. I like to look at the stock market like the ocean, like we were a surfer, floating out past the break, waiting patiently in cash until an asset that we like, we see that set of waves rolling in. That's what surfers are waiting for, a clean set. And you can see them coming. We can hop on the one that suits our personality, our style. We ride that wave. And the nice thing about catching something that is strong is we also know when it's starting to lose power. We can carve off that wave. We can start trimming profits, move our stop up, get out of it, and then float and wait for that next wave. And that is where the money is made, being patient and managing those positions. It all comes down to that. If you are hunting for trades every day, you want a momentum trade and swing trade, I wish everybody the best of luck, but it doesn't end well. You're probably going to be a statistic, and newsletters are great at getting everybody to be active, because it's just like the buy and hold mentality of financial advisors. You know, they're always trying to make those look like they're the best decisions. Be really active, nail these moves, or do nothing and just wait, you'll be fine. But those are dangerous. They're easy to market to because doing nothing is easy for the person who doesn't want to do anything. And being really active and trading fast stuff is exciting, thrilling, rewarding when it works out, and it sucks people in. It is gambling. It's highly addicting. Asset investing is a little slower, a lot slower, but you can have it done and take advantage of these markets from a very straightforward standpoint. So I do have a Trader's Corner special offer here. More or less, you are going to get my daily videos, my analysis in the markets. I cover the charts in great detail, everything including precious metals and oil and natural gas and Bitcoin and the indexes and sectors, all that stuff. You get the end of day signals, the ETFs. So if we get a signal at the end of the day, we issue it at night. You have all night and all morning to put your market order in. You buy the next day at the open. We keep it really simple. We provide entry price, symbol, portfolio allocation. We put in, we've got targets, how much you sell at each target. We adjust the stops. Everything is there for you. And On top of that, we've got auto trading. If you just want it done for you, portion of your capital traded, it can be executed in your brokerage account. We don't charge anything for it because it's actually, to me, is the best way for people to make money. If you get in here, we just had this. We're in a massive streak of winning trades with these index trades ripping higher. And people said, I skipped this one trade because I didn't feel like it was going to be good. And it was the one trade that like is screaming our accounts to new all-time highs every week. And I mean, this happens all the time. If you're involved, you'll skip a trade, you'll put in a small position, you won't put in a position, or you don't get out of it because you just don't have the emotions, the self-control to exit and follow strategies, depending on your personality type. Auto trading is amazing. You just look at the markets. I just know we have phone calls and emails from people when the markets crash and tank and sell off, and people call us, they say, I cannot believe it. I logged into my account and I have more money than I did before this crash. And that is like life-changing for people when you realize it can be done and be done for you. On top of that, if you want to get into the nitty-gritty, we have 7 hours of technical analysis courses, live mentoring session twice a month. Come on, you can ask us anything. We go on the charts, share everything. You get the band trader strategy, which is trading the hottest stocks, the hottest sectors. This is ideal during a raging bull market when everything is firing, which they're not right now, as we've seen. And that is it in a nutshell. We are actually out of time here, but I'll hand it back to Rob. But if anybody has any questions, you can always email us at support@thetechnicaltraders.com. You can get this special offer, $15.99 for more or less a life-changing way to view the markets, be on top of things and know why and what things are moving with our videos, and also follow trades that you're excited for and that you just keep watching your accounts go up. So Rob, I'll hand it off to you, and I really appreciate everybody's time for being here today.
Thanks so much, Chris. And if you don't mind me throwing out just a reinforcing point, I love the example you give about the consistency, because the biggest thing that hurts people in retirement is having to take a distribution or withdraw for their cost of living out of that account when it's at a reduced balance. It makes it so hard to recover.
It does. It's a good point, Rob. And you know what? The problem is people don't realize this stuff until it's already happened. And that's the frustrating part, right? So it's I'm trying to let people know now before it happens, because there's, when after it happens, it's too late.
Yeah, they learn it the hard way when they're trying to recover, and a 50% loss takes a 100% gain to make up for it, all the rules of math and stuff like that. But
Yep.
Great information. Ladies and gentlemen, if you're 50 years of age or higher and you don't have time for wild movements in the stock market that can delay or even destroy your retirement, no one wants to run out of money, and we all want to live the lifestyle we envision. Mr. Chris Vermeulen has a solution for you. It's called the Consistent Growth Strategy, and I can assure you, Chris does not hold on to losers. You can learn more by clicking the links in the chat box. I put his regular website and the one with the link directly to the offer. Thanks again for joining us today, Chris. Happy Leap Day, and please come back and see us on Traders Corner again.
Great. Thanks, Rob. Thanks, everybody.
Not a problem. That brings us to our next presenter. And I told you at the top of the show, we have a great lineup, and he is no exception. He's an extremely gifted trader, software developer who became interested in day trading as a college student. He started using NinjaTrader out of curiosity to test his ideas, and now has over 14 years of experience with programming on the NinjaTrader platform. He's actively day trading futures, focused primarily on the NQ, and was able to get $30,000 in payouts during December alone with Apex. He's most passionate about futures trading, but remains committed to building the best day trading tools. He enjoys connecting with his clients and bringing their ideas to life. Here to present NinjaTrader to the next level, tools for success, is Mr. Joel Wyse of Affordable Indicators. Joel, it's always a pleasure to have you. Welcome back, man.
Thanks, Rob. It's great to be here on this leap year day of February. What a unique day.
It is. I think the rule is this is the one day that women are allowed to ask men to marry them.
Well, I guess maybe I should go out and about tonight then after I'm done presenting, huh?
Oh, until 11:59 local time.
Okay, good to know. Good to know.
But we can see you, we can hear you. Go ahead and take it away.
Well, hey, now I'm slightly distracted by that, but let's get focused. So today, I'm really excited to be with you guys here, just thinking about the possibility of some of the things I have to share. The title of my talk today is called NinjaTrader to the Next Level, Tools for Success. And so, as you can see in the bottom right corner, this is my company. I'm the CEO. I'm also the software developer. So all the tools that I'm going to show you today, I developed, and I also trade futures. And so I'm going to invite you into my office today. Here is a picture of that. This is the building right there, Suite A here in Swanee, Georgia, or Atlanta, Georgia is where I'm located, presenting from my desk inside. And I wanted to show you one more thing that has been a big part of my lifestyle lately, which at my house, this is my sauna and cold plunge setup. So I don't know if anyone else has gotten into this over the last couple of years, but it is life-changing. And so curious to know in the chat if anyone else has picked up these habits as I have. And you guys, I'll be tracking your questions throughout my presentation here all the way up until we're finished at 3 o'clock. So please participate, add your questions into the chat in the middle of the presentation, and I'll do my best to address them, or even after the presentation is over, I still have the ability to respond to your questions. And as Rob said, I have taken $30,000 in payouts. I'll just clarify that I've spent a little over $20,000 in account fees with Apex during that process. And so currently I've sort of put trading on the back burner, at least for now, to kind of focus on getting my software products where I envision them being. So I always like to be fully transparent with that. You can see the dates and the payouts that I've taken. And I know we've had presenters talk about stock trading today. We've had some futures trading, but just to be clear, I'm going to be talking about futures trading today, specifically mostly the NASDAQ and the ES. And I know we kicked it off with Norm Hallett, if you guys were here, and then Leigh Goldstein. Both those guys are trading futures. And then we also have some stock trading and options trading in between. We're going to get back into day trading futures, and I'm excited for it. So these are a couple ideas I wanted to share with you guys real quick on my trading plan. So just 6 quick points: defining your trading hours, defining the maximum number of trades that you're allowed to take. This, I believe, prevents over trading, right? What markets are you allowed to trade? How many contracts? What language are you going to be using? And then again, emphasis on your mindset, right? Reminding yourself to keep that positive mindset. Thanks, Douglas. I see you, man. Tony Robbins. Yeah, I would like to go to one of his big events. I think that would be something to do at least once in a lifetime. So that's cool, Doug. I'm glad you're here, man. All right, so continuing on, got a few questions to kick it off here, and then I'll give you an outline for the presentation, and then we'll hop into it. But I'm going to ask, would your trading results improve, do you think, if you had some predetermined areas where a market reversal can be expected? Okay, so this means support and resistance, right? Having some good support and resistance levels. I'm going to show you 2 indicators that I've created today that automatically draw support and resistance. 2 different indicators. One of the indicators I've never shown before in a Trader's Corner presentation. Next question, have you ever missed a trade entry because price is moving too quickly to get the order placed? All right, in futures, day trading, this is especially so important. Another one, do you struggle with trade exit decisions such as determining the target and stop loss prices? So I have some ideas around this today, around both entries and exits. Got some great trading tools to share with you guys. And lastly, in general, do your trading tools make day trading easier or more difficult? And I hear it every day from my clients, right, about their trading tools, specifically even their trade copiers, with issues and challenges that come into play. If you guys are familiar with these prop firms and needing to copy trades across multiple accounts? Is your trade copier making everything more easier or more difficult? Is your chart trader making everything more easier or more difficult? So we'll talk about some of this stuff, and I'm going to show you guys some of the things I built. So it's time to start trading with precision. And again, this is the concept that I love and just kind of stick with, the idea of trading as throwing darts, right? Throwing darts is a sport. It's one of the most precise sports. Ready, aim, fire. So I believe that in throwing darts, day trading is similar to where you're identifying the trade. And again, I've got tools that I think can really help you guys with this. You're identifying the trade. As you aim and prepare to take the trade, you determine your entry, stop loss, and profit target. And lastly, you're firing the trade, meaning you're submitting the entry, and then you're managing the trade as it plays out. You guys cool with that? So what's going to happen today is I'm going to showcase some of my most popular NinjaTrader add-ons for trading futures with precision. So again, if you guys don't use NinjaTrader, is anyone here that does not use NinjaTrader? If you just go in the chat and be like, hey, I'm not even familiar with that, because I think you should be familiar with it, especially if you're going to be trading futures. It's the most customizable platform out there. Obviously, I'm becoming more familiar with TradingView or Trade-Evade as well. But so if you don't use it, thanks, Tamara, I see you. So yeah, again, guys, any questions, just watching out for that. So here's what we're gonna do today. As I promised you guys, 3 sections to my presentation. I'm gonna show you guys some chart execution features for all trading plans. So what does that mean? Entry and exit in a chart window, right? Making it easy. I'm going to talk about my trade copier and risk manager that I've built for trading multiple accounts across Top Step, Apex, Lilu, Take Profit, all of these prop firms, traders at all these prop firms are using my trade copier and risk manager. And then lastly, I'm going to show you guys some advanced support and resistance methods that I've developed and most of the time I'm using on NQ. But they're also used on, for example, like the S&P or the Dow, gold, crude, really geared toward futures. Cool, I see that. Thanks for saying that. All right, guys. So we're gonna start again with the chart execution features for all trading plans, and that is my enhanced chart traders. I'm gonna show you guys some features that I've built into this that I think you're gonna love. So it's a suite of execution tools for both entries and exits, and what it's going to do is allow you to build the perfect chart trader configuration based on your unique trading plan and your needs. So let's get right into the charts here, and I'm going to showcase some of these features. So I'm not going to go through every single feature. It's literally impossible. Like, we have a half hour left today, and there's so many features built into this, but I would love for you guys to check out my website. Some of the stuff interests you. You can dive deeper on my website and make some decisions today about what you might want to purchase or stuff like that. So what I'm showing you here is the NASDAQ futures. And so on the left side is the standard chart trader that's built into Ninja. On the right side is what I've built. So I'll just point out a few things off the bat here. And I will cover these indicators later. This is my support resistance indicator, one of my indicators that we'll cover toward the end of the presentation. For now, we're just going to focus on the chart trader features. So again, with Ninja, you're going to be right clicking to place your orders, versus with what I designed, you're going to use buy and sell click buttons. So you're going to hit sell, for instance, and just click the chart. Super easy, right? Versus over here, you really don't have a precise way to pick your entry. And when you're right clicking, you're having to have another step of having to click the right selection down here for buy or sell. Cool. And then these limit entry orders are further customizable. You've got exit order display features that, again, I'll just buy market here so you can see the difference. You've got the ability to see how much the size of your profit target and stop loss compared to Ninja. There's no data with these, so I can see right away it's a $400. Can change this to 20 NASDAQ points target or stop. You've got a break even button up here. Again, you can attach to indicators. So if I'm going to buy or sell the market, and let's say I want to sell, if it comes back to this 1 minute 20 EMA, I can just hit sell. And then as I hover my mouse over the plot, it's going to show the name of the plot. And then when I click, it's going to attach it to the plot. Okay. You've got some trade executions display features that are improved, which I won't go over. It's just going to draw the trade on the chart after you've taken a trade. Bar counter, profit and loss. So there's a lot of features that I make this available at a very low price, just a more customizable chart trading solution. Again, trying to reduce the stress and decision making involved in trading. All right. So then a step up from that, I'm going to show you some more advanced features here would be, this is the basic, what I call the basic chart trader tools. We're going to jump over here to what I call my essential chart trader tools. So with this, you're going to be able to pre-plan your trade. So let's take a look at one example. Let's say that I have I'm going to start with the 20-point target and 20-point stop. It's just going to draw it on the chart. You can actually then visualize it right away. Did you guys see that? How I'm able to visualize my target and my stop before I make the entry, right? So let's say that I think we're going to be going short. I can place my sell, and now I can pre-plan. So if it pulls back up here, I'm going to get short, but I can pre-plan my target and stop and see my risk reward. So as I move this around, I'm pre-planning the trade. And then when I get filled, for instance, I'm going to then get this exact profit target and stop loss. I'll just move this down to fill this, see if we can get filled just on a sim trade as an example. So you can see that when I'm moving these around, it's actually planning the trade. You see how I'm filled, and now we have actual orders resting where we plan the trade. Now, one thing you guys might not have noticed too is position sizing. So we're in 7 contracts in this trade. That's all based on the position sizing that was happening. So there's a lot going on here, and I realize that, so just bear with me. But if I sell and I'm able to risk, I have this set to risk $200. I can turn this off, obviously, but if I want to risk $200 on a trade, now as I move this with a smaller stop, I'm able to trade more contracts. You can see the contracts changing from 9 to 10, 11 lots, 12 lots, right? It's doing automatic position sizing based on how many dollars you want to risk on a certain trade. So again, very important for prop firm trading because we're limiting our risk. We're determining our dollars risk and keeping our risk in line so we keep the account moving forward, and we don't risk more than we should, right? Because we have a specific trailing threshold in these accounts, which is typically $2,000 or $2,500. So on any single trade, you can determine how much that is in percent or dollars. You can set that risk and automatically set your size. So with position sizing, kind of pre-planning your targets and your stops, seeing your risk reward, there's also a one click. You'll see if I move my mouse right here, the entry pops up and I can immediately click. So now that's only a one click to place my buy limit order in that case. So that's some of the features of the essential chart trader tools. The position size, you can close half of your position. That's another add-on. Quickly change ATM strategies. So if you guys are familiar with Ninja, you're selecting in a drop down here to determine your targets and your stops. Here instead, you're able to just click a button with your preset top 4 ATM strategies. Thanks, Red Rum. Thank you, man. I appreciate that. Very cool feature, he says. All right, so I'm gonna go through quickly through a few more things. So like there's other modules available to add on to this. So for example, this one is called Advanced Exit Orders Management. So here, you're gonna be able to add trailing stop options, right? So you guys know with Ninja, you can actually build your own trailing stops. But what I've created here, you can actually build trailing stops based on indicators. So here I got a PSAR, and there's obviously other examples I could give, but for now I just put a parabolic SAR on here. And you can also then turn this on and off in the middle of the trade. So I'm not going to do it today, but with Ninja, either the trailing stop is on or off, right? And it's based on what you have selected here. Here on the flip side, you can immediately enable or disable. I see that somebody had to leave for work. Cool. You can immediately enable or disable the trailing stop right here, and then you can set different cuts. So I haven't configured these, but these you can rename these to parabolic SAR, EMA. You can set up to 10 custom trailing stops in this menu. That's called Advanced Exit Orders Management. For the Renko traders in the room, I've got another add-on. This is called Price-Based Entry Orders. That's going to automatically place your trade at a known close. So like, for example, if I hit green Renko, what does it do? It places the order right here because it knows that that's where the order is going to close, right? So a lot of times when you're entering after a Renko bar closes, you can get slippage, versus in this case, you're placing, you see how the stop order was placed in advance before the bar closes, because we know where the bar is going to close, right? It's always known where a bar will close when it closes. So that is a way to, again, minimize the planning involved in entering on a Renko reversal bar. So does anyone in here use Renko reversal bars in your trade setups, or with your coaches, or with your other systems that you're using? Any Renko bar traders, any range bar traders? Hit me in the question area. If so, I'd love to hear from you guys. Here's range bars, same concept. We know where the range bar is going to close. So let's say that, you know, I'm determining the trend is going to be down, right? Like right here. This was a great red Renko reversal bar. Didn't pay a ton, but it did confirm that the market almost came down to retest here. So if I wanted to get in on a red range bar, just click the button, and it's gonna, you see how the order is trailing? As the market goes higher, the order trails up because it's keeping the order in sync with the known close. So the known close is kind of a language that I've coined here. Like, we know where the bar is gonna close. So we're placing the stop order at that price. So when the bar closes, we're filled with minimal or no slippage. Range bars, again, and here you can see an example of the executions. You see how it showed these two trades that we've taken. Right here, when you hover over, it's just showing the entry and the exit, very clean. Then you hover your mouse and it tells you your profit. It says you're in the trade for 41 seconds. So that is another great feature that comes with the basic chart trader tools. So this would be entering on a bar close. So you can configure this to enter on the next bar close, whether it's up or down. You just initiate this button, and then as the countdown timer is working, it's going to get in the trade for you when the bar closes, again with your configured quantity and ATM strategy. Set the bar direction. So I only want to get in on if it's a down bar, only want to get in if it's an up bar, or any direction. And this also has a feature too where you can select a level. So if I set it to level mode, I can do this. And what's that going to do? Exactly what it says. It's going to buy on a close above this price. So that's a feature that has been requested by a lot of my customers over the years, and added it in, I don't know, maybe 6 months ago, to where you can get in if the market closes above this set price level. You guys cool with that? I hope, is anyone in the chat finding something that you're like, man, that would assist me in the way I trade? It would help me reduce the steps required to get into a trade, to manage a trade? I certainly hope so. I just took a sip of my coffee. We'll look at a few more charts here, and then we're going to talk about some trade setups. And this will be really fresh content if you've been in a lot of these presentations as well. So this here, same concept as close, but now you're entering on a bar close with a signal. So if you have a signal indicator that plots signals, you can then configure that to enter when a bar closes with your signal. And lastly, and I love hearing from Leigh Goldstein earlier, because he talks about these type of trades. We have a bracket trade, right? And so this is going to enter a buy stop and a sell stop. So as we see right here, as I click this, we have a buy above, sell below, immediately placed. These can also be at the close. So if I configure it this way, we're going to be waiting until 2 seconds before the bar closes. What does that do, right? You can adjust the number of seconds, whether it's 3 or 4 seconds, but what that does is gets the orders in before the bar closes. So once the bar is already closed, guess what? The news is already moving the bar, right? It's already moving. You're going to have rejected orders and issues. Right here, 4, 3, 2 seconds, orders are placed, bar closes. So obviously there's not a news event at 2:39 in the afternoon, but if there was, we would have had our orders placed well before the news came out, and then we're prepared with an OCO, whichever direction the market goes, to pull us in to the trade. So a lot of my customers use this on the open too, like the 9:30 open. You ever trade the NASDAQ on the 9:30 open? We'll look at that as we scroll back, but yeah, that's another way to use this as well. So that covers, man, very high level, very quickly, the features of my chart trader products. Now I want to jump into what we had said before, which is the trade copier and the risk manager. And so if you guys haven't traded Apex before, I'd love for you to use my referral code, which is going to be on my website. I'll show you that. But if you have, you know the need for a trade copier, or if you've used the other prop firms, you know about the need for a good trade copier. I can tell you guys, I'm putting all my effort into this. Like, I am putting a ton of effort into this, and all the scenarios between placing orders, whether it's on TradingView, Tradeovate, NinjaTrader. This will be the most reliable and best trade copier you've ever used. So let's take a look at this real quick. I'm just going to throw this slide out just as a quick summary, and then we'll get right back to the charts. What is my accounts dashboard? It's one window for tracking all your accounts, keeping track of all your accounts and what's going on, keeping your accounts in sync with each other. So that is duplicate account actions, which is the trade copier, and the account risk manager is the risk management tool. So there's 2 tools built into this, the copier and the risk manager. And then lastly, you're able to track that all important trailing threshold for your prop firm accounts. Compatible with lots of prop firms, by the way, not just Apex on that specific feature, because each account has to be hard coded, right? You got to detect the firm, the account type, and then all the different parameters that go into determining your trailing stop. So I'm going to pull up my trade copier here, which is right here. This is the accounts dashboard. And so fully transparent, you can see all my account values. I've got some PAs left. Again, I said I took a break from trading. These accounts aren't looking so hot. I did buy some Tradeovate evals up here at the top, which are for additional testing. Again, I want this thing to work on any connection, any prop firm perfectly, right? This is not something you guys should have to be concerned about when you're trading. You should be focused on trading your master account and knowing that all your follower accounts are going to be perfectly in sync with each other. And even with data feed issues, right? Like you have rhythmic and you have these data feed issues that come up. Again, I'm working to handle and correct, you know, all things in those situations as well. So, but yeah, the copier portion, pretty self-explanatory about how that would work, right? You're just copying trades from your master account to the follower accounts. Over here, we've got daily going loss. So again, I can click here and set my daily loss for the day. So let's say I want to set an account with a max loss of 500 and a max profit of 1,000. Now I've just set that for the master account, turn it on, and it's going to automatically liquidate my account when those values are hit. So daily going, daily loss. Also, another feature that's in here is what I call exit. Crap, what did I name this? It's either stop loss lock or exit shield. Exit shield, that's what it is. I just did this last week for a group of customers. What this does is it doesn't allow you to move your stop loss against your trade, right? So if I'm in a trade How many of you guys have done this where you get into a trade such as this, right? And I think I had a trailing stop on, sure enough. So just move that stop down. I'll turn that off. How many times we get into a trade and what happens? You start negotiating on your plan, right? And you're like, oh man, you know, my plan says I only risk 10 points on a NASDAQ trade, but if I move my stop up here, I'm gonna have more of a chance, right? I'll let it come back up and retest here. What the exit shield is gonna do is if you turn it on, it's going to prevent you from widening your stop loss, right? So another great feature in risk management that I put into the account risk manager is yeah, the ability to limit your ability to widen your stop loss or even shorten your profit target, right? Because effectively, if I were to negotiate on my profit target, I'm actually then at that point giving up on potential profits as well. So just want to point that out, but yeah, you can go look at this on my website again. The accounts dashboard page is going to summarize all the features that are built into this. Again, able to see how far you are from potentially blowing an account in this from close column. So these values, yeah, anyways. So yeah, I would love for you guys to go check this out on the website. Again, I continually update this. The most recent update came out on February 23rd. You can see right here. And as soon as I'm done with this presentation, back into Friday, Monday, back into more long days of coding to continue refining all of this stuff. So based on what you guys need, by the way, that's what's different about what I do, I think, is that I'm working directly with my customers based on your needs. So the last part of my presentation here, now that we've covered the chart trader quickly, we've covered the copier quickly. As I said, I'm going to show you this right here. We're going to cover advanced support and resistance methods. So we've covered some chart execution features, both entries and exits for all trading plans. I showed you the trade copier and risk manager that I built. If you have a prop firm, if you're using prop firms, I think every single person in here should have that. And then lastly, I'm going to show you some advanced support and resistance methods. So I'm going to show you 2 indicators that I've built around the idea of support and resistance. So let's get into that. All right. Back to the charts. So I've got 2 NASDAQ charts here. We've been looking at this one with these moving averages. I'll show you guys. All this is a 20 and a 50 EMA. So this is a 1 minute. It crossed over right here and became bearish. One of my favorite trade setups, pulled back into the red perfectly and then moved down for a nice winner, retested the low at a minimum. Okay. This here is the 20 and the 50 off of 5 minutes. So this here blue area tells me that the 5 minute trend is still up, right? So I'm trying to bias my trades a little bit based on some longer time frame stuff, right? So all day, the 5 minute never crossed down, even though we had this kind of move down here. The 5 minute, you can see here with the VWAP right in the middle, the 5 minute moving averages never did cross bearish. And then as we've been doing lately, it just seems to keep going up, doesn't it, you guys? Either climbing a wall of worry, or what's the other phrase I've heard said? Edging up. I can't remember the exact phrase, but yeah, it just seems to keep going up right now. So it's gonna be an interesting year with elections and everything else. But let's stay focused. So what is this indicator here? Key levels confluence. So what I'm showing you here is key levels confluence. Includes highs, lows, opens, closes, pivots, Fibonacci's, all sorts of things on a daily basis. So these are levels that are calculated daily. So as we scroll back through the chart today, we're gonna find that and some of these are grayed out because they're like not as important because they're several days ago. So like here you have the low of 4 days ago, the open of 2 days ago, the close of 3 days ago is not as important. But if it's something from yesterday, very important, right? That's why we have pivot point 1 here is highlighted, which is where we found the low today. Again, the actual low was also at the whole number. So I mark whole numbers like 17,900 as a potential reversal as well. And when combined with something like the high of 14 days ago, I believe that can be pretty powerful. So if we take a look here at the whole day, we did find resistance in a level right here, a high of 13 days ago. You're going to see that also in the next indicator I'm going to show you. At high of 13 days ago, double top, confirmed reversal, and then it fell hard for a nice short. But again, yesterday's high and open don't seem to be too reactive this morning for some reason, but typically they can be in R. You've got the R1, again, these pivot points, you guys are familiar with pivot point, R1, S1. So I just combined this all into one indicator. We can look quickly at the ES, but I do want to keep moving. I got one more indicator to show and then we'll wrap it up. So the ES, what's cool is we found support at yesterday's low perfectly, right before the news came out this morning. Love that. And then again, you know, R2 and R1 come into play. Definitely the pivot points matter for sure. Yesterday's close, big one. What happened with yesterday's close this morning? So yeah, that was during the news. So obviously, you know, just blew right through it during the news, but yesterday's close pre-market provided some resistance, yesterday's low. So these are what I would say is the key daily levels that I'm tracking in one indicator, kind of summarizing this. So the beautiful part about this is you don't have to like do the homework pre-market, right? Define highs and lows and things. It's already done for you. It's already done and plotted in your chart window. I'm going to show you guys the price action confluence indicator real quick because this is a new concept I've been working on. I don't recommend using these in conjunction, but they're two independent concepts of support and resistance that I think if you want to nerd out over this, you're going to absolutely love these indicators. So in 3 minutes, I'm just going to show you a quick overview of this. We'll scroll back to NASDAQ Open and take a look. So what's amazing is these different colors represent, I was going to say what's amazing is we found the high at a weekly level. All right, do you see how it says weekly right here? Yellow indicates weekly. This, I would say brighter blue is indicating at least 240-minute high or low, and this is down to 60-minute high or low. So when you hover over these levels, what you're getting is a total of hits in the level. So like this level I'm hovered over right now. In fact, let's take a look at this one up here. This level I'm hovered over right now had 4 5-minute hits, okay? Meaning it made a higher low on a 5-minute chart 4 times. And then it's got 60, 240 daily and weekly 1. But let's take a different example. Let's look at one of these levels. So here we found support here and here. You see these two levels as we're coming down, both provided support. So when I hover over this red level, what does that mean? Well, red indicates daily. What it indicates is that the highest level or the highest data in there is daily data, where we had at least one higher low. 240-minute, you can see right there, it says 1 as well, meaning we had one higher low in the 240-minute chart. 60-minute chart, 3 highs or lows. 5-minute chart, 27 highs or lows. So 32 times price reversed in that level. The last time it did was on Wednesday at 12:10. Do you guys see that on the right side of that level? So some pretty cool features in here. And again, like what I'm trying to get to is the point where I can develop support and resistance automated and then fully automate the trading off of support and resistance. So the first step is kind of like continuing to develop out the support and resistance. And then after that, develop a system that is going to automatically execute trades based on the support and resistance. So that's the idea of this project. But today, you guys have the opportunity to purchase both of these indicators at one low price, which I'll discuss here as I close. Both of these indicators separately, right? So you got the price action confluence, which is what you see here drawn on these levels. And then in here, you've got the key levels confluence indicator. Chart scaling is always a challenge for me. It's like when it gets slow, I want to manually scale it. I mean, no matter what, I'm always manually adjusting the y-axis. And so maybe I'll develop something around that too. All right, guys, so let's wrap it up. I'm going to give you my offer here and take a look in the chat. Put your questions in the chat. Haven't seen too much come through, but I hope you guys are enjoying this. Seeing some of the stuff that I've been working on most recently and have developed here on the platform. The thing about Ninja is you can develop anything. There's literally no limitations or almost no limitations on what can be developed. You know, your idea is the sky's the limit as far as like putting your ideas into a chart window. So, all right, here we go. I'm going to jump back into this and we're going to summarize the pricing. So what I'm going to do today is offer 40% off my entire website. So like we talked about, the ChartTrader tools for $9.95 is down to $5.95. What does that include? We saw planning your ATM strategy, your targets and your stops. We saw quickly changing between ATM strategies with the quick select buttons. One-click order placement, we saw position sizing, and then most recently, my risk reward features, which continue to be developed, where you can see and plan your risk reward. Sorry, not only are you planning the targets and stops, but you're seeing the risk reward, and you can even at some point be able to keep that locked in so that your risk reward is always the same as you move targets and stops around. So anyways, that little bit of tangent, but that is the essential ChartTrader tools, kind of what I've redesigned. My redesign of the Ninja ChartTrader is something more practical, more easy to use with more features. All right, and you can get started with the basic ChartTrader tools as well. So we'll talk about that. There's some other features I showed. Basic ChartTrader tools is around $100 with this discount. But some of these other more advanced features that I showed, where we talked about the trailing stops at the top, that's advanced exit orders management. We talked about the Renko and range entries, that's called price-based entry orders. Close bar entry orders on the close bracket for news, kind of like what Leigh Goldstein showed earlier today, and then other features as well, which you will see in my website link. Those are all going to be $295 each. Again, 40% off, normally $499 for $295. All right, and a few more slides here. This is what I want to give you guys the opportunity to do. So we just talked about the support and resistance suite, which includes 2 support and resistance indicators. It also includes 2 signal indicators, which I haven't even talked about, but you can see that on the website, and I'll show you the website here in a moment. But for anyone that goes all in on my enhanced ChartTrader, now what that means is you're getting every feature built into the ChartTrader all at once. So the ChartTrader includes like 10 different products. Each product that you buy kind of adds features to the enhanced ChartTrader, right? But with a purchase of the professional ChartTrader tools, you're getting all the bells and whistles. And with this, I give you the most access to me, suggest ideas. We improve the panel together based on what you need, obviously within reason, with what other traders need or ideas. But this is the way to go all in. If you like what you see, you can get every single ChartTrader feature in one purchase. And with this, I'm also going to include the support and resistance suite. So technically, this basically becomes a 60% off deal, because at $4,000, you're talking $23.95 for the professional ChartTrader tools underneath the 40% discount. But the support and resistance suite will be included. So at one purchase, you're getting both of these products: professional ChartTrader tools, support and resistance suite. You guys cool with that? Next slide. Again, if you're only wanting the support and resistance suite, if that's something that caught your eye, what you're looking at here is those 2 support and resistance indicators that I showed today quickly, right? There's so many features, can't possibly cover everything in those. And then you're also getting 2 signal indicators: the first touch, which is my indicator for trading off of moving averages. You can see more about that on the website. And then a standard Ikimoku Cloud, sorry for the typo, fix that, indicator. All right. And then lastly, again, for the trade copier, anyone that's in here, As I've said, that's on sale with the 40% off. It's $175 for the trade copier. The risk manager is also $175. It's two separate purchases here. I'll draw attention to my testimonials. I had a few recently, even at the very top of the website. And you'll see that in a moment here. I'm going to bring the website up. Here's the page right here. Whoops. There's the page right there. The link, you need to go to that particular page. Thank you, Rob, for putting it in the chat. This connects it to the Traders Corner presentation. Right there is the link, affordableindicators.com/Traders Corner. It's going to be 40% off everything. And I'm looking for your questions. Are the orders held on the computer or NT servers? They're going to be on, with my chart trader, yes, all the orders are on the server, whether it's with Rhythmic or NinjaTrader or whoever. They're not held locally. Okay, now there's some exceptions to that, like on bar close, it's local, right? Because it's logic initiated on your computer, where when the bar closes, then the order gets submitted. So if you have more questions, put them in here and I can answer them after I wrap up. But here's the website. Again, right up here, go read some of my reviews. This summarizes everything I've talked about in the presentation today with the pricing. These more information links are going to take you to the pages where you can read more and learn more. And yeah, I'm really believing that there's got to be something for every single person that's in this webinar as a tool that can really supercharge your trading on the NinjaTrader platform. NinjaTrader to the next level, right? And so, yeah, I guess that's the best. That'll wrap it up. Right down here's my Apex link. If you guys aren't familiar with that, I wish I had more time to help you get started. Norm's doing that as well. But right down here is my link to Apex. Click through that to learn more about what's offered there. But it's a great way to trade with low risk. You're not even risking your own capital. Your only risk is in buying a few accounts, a few $100 to get started, with the potential for thousands in payouts. So I don't know why I just gave that page, but we're wrapped up. So yeah, just read this page. Reach out to me if you have any questions on the website chat, bottom right corner. Right here's a great place for us to talk when this ends, bottom right corner of the website. Thank you, Rob, for having me. Always great to be here. Really appreciate it.
Hey, thank you, Joel. And if you don't mind me giving a personal recommendation, Joel did make me an offer I couldn't refuse on the indicators. And guys, you would not believe how much easier it is to just point and click, or click a button that's on the side of the chart, anything, rather than typing in an amount, adjusting the slide bar to exactly where you want to be. When the futures are moving, we know seconds can mean tens or hundreds of dollars. But
thank
that
you.
was Mr. Joel Wyse of Affordable Indicators.
Thanks for being here. And just so you guys see, the offer expires today. Don't want to pressure anybody, but I'm trying to close the month strong as well. So hopefully you'll move forward. Reach out. Any questions, I'm here to help you guys. Thanks so much for being here, for your time.
Great presentation, Joel. Thank you so much for making an incredible offer to our audience again. It really is just amazing how powerful your tools and that ability are. Ladies and gentlemen, if you want some of the most powerful indicators, trade copier, trade management tools available on Ninja, Mr. Joel Wyse of Affordable Indicators has them at a tremendous discount today. Now is the time to transform your Ninja into a Super Ninja. Joel, it's always a pleasure to have you. We know I have your full set, and it's one of the best things I've ever traded with. I highly recommend the entire system. Thank you for joining us today. Happy Leap Day, and I look forward to seeing you again.
Thanks, everybody.
And let me get our next presenter ready. It will bring us to our last two presentations of the day. Next up is a seasoned trading professional with over 14 years of experience in trading the markets. Over the years, he has tenaciously studied charts, strategy, trade plan development, and since his own enrollment in a Neurostreet coaching and training, he has found his way to consistent, profitable trading for several years now. And after facing a grueling 10 years of break-even or lesser-ish anguish, he's highly sought-after guest speaker for virtual events worldwide, tasked with educating and sharing his insights on how other traders can pull themselves out of the mire and into consistent profitability with discipline, proper money management, and a greater focus on the big picture. Here to present, copy the trades the pros make and finally get paid to trade in as little as 2 hours a day is Mr. Jim Simmons of Neurostreet Trading Academy. Welcome back to Traders Corner, Jim.
Hey, thanks for having me, Rob. Good to be here. Always good to be back, and appreciate the invite. And thanks so much, traders, for coming in to hang out. Can you guys see my screen okay? You can hear me okay, I assume?
Both are good.
Excellent. All right, let's go ahead and kick this thing off and get started here. We're going to talk about trading. We're going to talk about trade plans and results and all that good stuff. So as a precursor, of course, I need to show our disclaimer. We can't guarantee results. I'd love to be able to, but I just can't. Markets are the markets, right? What I can tell you is that our products and services are for educational purposes, and that is our purpose, is to help educate our traders so that you can become better traders, right? It's the whole point. There is risk involved with trading. Please understand that risk. Please manage your risk accordingly. We can't tell you what to trade, how much to trade, when to trade. All that is up to you, okay? If that sounds fair, give me a yes in the chat box, and we will go ahead and keep it moving here. And thanks so much, everybody, for being here again. All right, good deal. So first off, what is it that traders are looking for? Usually, this is certainly not an all-encompassing list, but should cover, you should have at least a couple of these, right? Consistent results, larger winning days, less drawdowns, more time, or reduced time rather, to success, shorter workday. I'm in favor of that one. Sense of achievement, ability to choose lifestyle, scalable income, and unrestricted capital, right? So these are the things that traders are ultimately looking for. The problem is, usually what happens is we spend more time and make less money. And that is the issue that we're ultimately looking to solve, is to be able to make more money in less time, which is really what got most traders into trading in the first place, right? So that's what we're after. More money, less time, right? You can correct me if I'm wrong, but usually that is the case. And yes, this is being recorded. So that's what we're after. So how do we get there? Well, the first thing we have to do is we have to be able to overcome the fears, the fear that it's going to be difficult. Some of you have thought about trading and went, oh, it's going to be hard, or it's going to be time consuming, or it's going to take me a long time to succeed, or it just won't work for me. Maybe it won't be sustainable. Maybe you'll have beginner's luck. How many of you have ever been to the slot machines in Vegas and you start out and you're doing really great and then you just give it all right back, right? They do that. I feel like that's a thing, but I can't be certain because I'm not in that scene. But beginner's luck, right? And some of you fear that, you know, you're just having a decent day or a decent week and it's not gonna last, right? So these are the fears that we need to be able to overcome. The trouble with this as well is that if it's not you that's feeding that fear, it's everybody else, right? It's everybody else in your world that hears you go, oh, I day trade. You do what? Why? Why would you want to do that? It's so risky. Oh my gosh, you're going to lose. It's going to be hard. It's going to be time consuming. It's going to take a long time. And they're all the naysayers, right? So not only do we have it in our own heads, but somewhere others are chiming in with that as well, right? So how do we get over those fears, and how do we get over some of the challenges, issues, and so on that we face in the trading world? One of them being second guessing your trades. How many of you second guess your trades? Either before you get in, you're scared to get in, or during your trade, you're scared to stay in, or after you go, well, that didn't work. I can't possibly do that again. I'm going to go find something else. And so you resort to strategy hopping, trying the next best thing, buying the next best thing. And look, there are some great tools out there. A lot of them will do a lot of good for you. But if you don't know how to swing a hammer, you need to learn, right? You need to have the right tool for the job. You're not pounding nails in with a wrench, right? You need the right tool, and you need to know how to use those tools. And that's where you can get educated, right? So how do we overcome second guessing trades? Well, we build trust with proof. So we have multiple live trade rooms, and we track all of our trades live. And the idea behind this is to show that, one, we're not just talking about trading, we're actually trading. And two, we can help our traders trade. So when you come into the trade room, and I'm going to actually give you these links. I'm going to paste this in the message box here. Okay, so you can actually go into this spreadsheet right now if you like. These are all of our trades that we've taken in our trade room. Okay, so stocks since February of last year, so going on a year now, and we have 72% win rate, 76% win rate here, right? Very consistent. We've logged 936 trades on stocks. Okay, so ton of activity there. On futures and Forex, but mostly futures. If you go to that first link there, this is going to have 431 trades, and you can see that it's in the regular chat box. I'll paste it here too. If it'll let me send to all. I don't know if that worked or not, but try it.
Hey, Jim.
Yeah.
Chat box, not questions box.
Yeah, I tried that first. Okay, I just making sure I was doing that in the right spot. Okay, cool. So chat box it is. So you should see it in the chat box, guys. It's in there. So this is going to have all of the trades that we take, and currently we're trading these 5 strategies on 4 different markets: MNQ, MES, MCL, M2K. Okay, so these are our 5 setups on 4 markets. So we always, well, for the most part, we always have trades, unless it's a day like today or a day like Tuesday where it's pretty slow and you take what you can get, right? But these are all the trades, and we went from 65% November, December, and dipped a little bit in January, right? Short month, and then we came back very strong in February. Really, we should see this be the norm at this point. We've made a couple adjustments, and look, it's all about getting better every day, right? That's what we're all after as traders. So 76% to end the month in the month of February is fantastic, right? It's very good. So an entire month, right? It's good. So then the question comes in, well, what about risk reward, right? What's your risk reward? Because the win percentage doesn't mean anything unless you know risk reward. These trades are at 1-to-1 risk reward, okay? 1-to-1 risk reward. So can you make money at 75% win rate at 1-to-1? Yes, absolutely. Absolutely you can, right? We've had a very good month. We've had traders left and right that are getting funded on their evaluations. They're passing, they're getting funded, they're staying funded, they're doing things the right way. How do we know it works? Well, there's the results. And if you're still skeptical, which I get, we not only track all of the trades, we actually post all of them as well. So this is a separate sheet, and I'll share this too. What the heck? This has all of our trades that we've taken, every single one of them, and they all match up to the trade log. So if you want to go in and see it, you can go see it for yourself. Okay, so we lead by example. We show the results. These are real results. They're real trades. Not only do we tell you where the trade is, we trade it with you so that you can see it. Our traders come into the room because they want to trade, not because they want to just watch us trade, right? One-on-one coaching. What about lack of belief? How many of you suffer from a lack of belief in your system, in your profitability, or in your ability to execute? We all have suffered that at some point. So what's the solution there? Well, we have one-on-one coaching that we offer. We have 3 different calls for our members: a trader success call, an onboarding call, a scale call. The idea here is we're going to help you get up and running, get a lay of the land, understand, ask some questions, give you some time to get settled in first, obviously. And then we're going to get you fully onboarded, get you all set up. Then we're going to talk about passing your evaluation, right? And then scaling your funded account. That's the whole idea here. What about emotional sabotage? Anybody suffer from this one? This is probably a very common one. Fear, greed, fear of missing out. I know nobody here has ever revenge traded, over traded. Look, on days like today or this week, those of you that have been trading the futures markets, might be really slow for you. Has been for us. Slow, slow, slow. News hits, it goes crazy, and then it slows down again. So being able to wait for your trade and seeing that not only are the right trades worth waiting for, you're going to have better winning results. We've been able to show that, right? Seeing is believing. But being able to wait for the right trade is going to get you paid. That's what it's about. So we have strategy cheat sheets that we include for our members with simple step-by-step rules that show you which chart to trade, where to get in, when to get out, risk reward, all of it is included in there. Okay, so these are all available to our members as well. This is to help you from having to second guess or get nervous or think, oh, this isn't going to work. No, it works. It definitely works, right? What about sick of losing? Anybody here sick of losing? Sick of blowing out your evals and accounts? How many of you here are struggling to pass your evaluation? Anybody here on the evals? Put an eval in the chat box if you're struggling with that, struggling to pass your eval, struggling to stay funded, right? It's very common for most traders that are in these. They're not easy to pass, right? It's easy to blow out an account. Let's face it. A lot of traders are not making money, which is the issue. So what's our solution there? We have, again, multiple winning strategies, multiple winning trade rooms, and premium indicators that are available to you, which we're going to show you here momentarily. I want to show, let me show one trade. So we've got a V1. Let's pause this here for a second. Let me share my, actually, can you guys hear my audio? Set up here. Do you guys hear that? The breakout. So let's measure this out. Do you guys hear the video okay? Give me a yes if you can hear the video. I'm going to go ahead and play it. If you can't hear it, then go ahead and chime in. So let's go ahead and watch one of the trades from our trade room. Here we go. Okay. So we've got a VWAP set up here. The breakout. So let's measure this out. And trade this on a different account. Let's get 21 by 23. And sell right here. Okay. I mean, really, I'm not saying that much of this video anyway, so that's fine. It's not a lot of audio in here. So this is a trade coming off of an order block on the other side of VWAP. This is on MCL on a 5-minute chart. So the CWAP on crude that we're looking at here, that is not a valid CWAP trade because it never broke structure. Also trading into an order block and trading into VWAP. Now, if we're trading into VWAP, that's not necessarily a concern for me, but trading into an order block is. Order blocks are very, very strong liquidity, can move the markets, and so definitely want to pay attention to those. So came pretty close. We tagged it, but didn't get the follow through. I'm going to bump this up one tick, 85. There it goes. Good. So we got the VWAP trade. It's great that we had the confluence with the. So there you go. Just a quick example of what it's like. Again, we are showing where the targets are going, where the stops are going, and we even talk about how many ticks and how many contracts. Now, obviously, you're going to size your positions according to your own risk preference, but that gives you an idea. We'll just skip over that for the sake of time. You get the idea, because at the end, stick around. I'm going to give you a pass to our trade room. Okay, so stick around to the end. We'll make it worth your while. Okay, we appreciate your time and we know it's very valuable. So thanks for being here. So private chat rooms. How many of you have been ready to give up on trading? You came to this event, you thought, well, this is a last ditch effort. There's a bunch of speakers. Let me come through and see if something jumps out at you. Okay, so look, we get it. Been there before, totally understand. In my bio at the beginning, you heard 10 years of break-even anguish. Yes, I've been there, done that. Thankfully now I'm profitable, but it took a while to get there. You know, some of you might not have support from family anymore. Some of you might be hiding gadget purchases from a spouse because you don't want your spouse to know that you're still spending money on trading. Hey, I've heard all of the stories, guys. We've worked with thousands of traders. We've heard it all. We get it. Some of you are at the end of the rope, right? And you're going, okay, it's now or never, line in the sand, let's do this. We get it. We have an amazing community of traders that work together, that support each other, encourage each other. We've got a really awesome community because we've worked very hard to sort of bring that on, right? We've worked very hard to get that type of environment for our trading community. So the bottom line is we're all in this together. You don't have to trade alone anymore. How many of you are sick of trading alone? You're tired of having to be completely on your own. You try to, excuse me, talk to friends or family, and they just roll their eyes at you because they have no idea what you're talking about. And most traders don't have anyone to talk about it with trading, you know, and I get it because I've been there. So totally understand. What about confused on what to learn? How many of you are sitting through this event going, I don't know what works. I don't know what doesn't work. I don't know what to focus on. I don't know who to trust, right? Totally get that. Most of us start on YouTube, kind of look around and find somebody who we can maybe relate to, or that we think they maybe know some things, or maybe somebody else tipped us on to them, right? There's a lot of online programs out there. You could spend a whole whack load of money trying to get to understanding, you know, a trading strategy. And so we have a philosophy in our trading. Every strategy that we put together has to incorporate every foundation of trading. If we have a strategy that is only based on structure, or it's only based on liquidity and volume, or it's only based on order flow, then what we have is an incomplete trading strategy. And it's not going to get us paid on a regular basis over and over with consistency. So every trading strategy that we put together incorporates every one of these. We have an all-inclusive trading academy that you can learn stocks, options, futures, Forex, crypto, whatever you want to learn. You want to trade it, we've got you covered. What about fast track education courses and live strategy classes? So not only do we put courses together on each of these topics, we actually go over them in live classes as well, and our members have access to that. We go into deep dive, and we'll talk more about that in just a bit here. But so some of the very important things that you should understand as a trader is things like obviously psychology and discipline. Oops, let me go back. I have a new draw tool pen thing, and it's really great, but I'm still getting used to it, so bear with me. Come on now, you can do it. There we go. So psychology and discipline, very, very important, right? If you can't manage yourself, then everything else is completely useless. You got to be able to manage yourself. Then you got to be able to manage the money, because again, if you can't manage the money, you can't make money. We teach supply and demand and order blocks, price action, support, resistance, trend lines, traps, order flow, liquidity and volume, multi-time frame analysis, structure, waves, and SMC. This will cover you on just about everything that you need to know. Really, what we decided with this program is we wanted to give you everything you need and nothing that you don't, so that you can get there quicker, you can learn faster, and you can get up to speed, okay? We talk about money problems. Maybe you're undercapitalized, maybe you can't get funded, maybe you don't have money to trade. Well, we've got you covered there. We work with prop partners like Apex and Trade Funder, TopStep, TickTick, you know all the names. They're funding partners, and of course, many of these you're already familiar with, right? What about time and effort? We talked about this at the beginning. Maybe you're spending all of your time trading and you're just not getting ahead, and you're like, I'm so tired of this. All I do is study and I just don't get anywhere. When I go to trade, it just doesn't work, right? You look at something, it's an amazing strategy, you've tested it, you've back tested, you're feeling really great, and then you go to trade it live and not gonna work, right? We have this crazy idea that you shouldn't have to wait to be able to make money as a trader, that you should be able to come in and follow our trades until you are confident in your ability to take them on your own. So you can pass your evaluation, you can make money, you can scale your accounts, all by just coming into our trade room and copying the trades. Now, obviously you want to learn what we're doing as well. You don't want to just, do that forever. It's kind of like give a man a fish, teach a man to fish, right? We're going to do both. because we believe that you should understand what we're trading. So things like trading off of VWAPs and CWAPs and trading off of order blocks. Okay, we teach you all that. What about, how many of you have ever been in a chat room or a trade room, or you've seen something online and you're like, no freaking way. This guy, every single day, all I see is win, 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 win. This guy's so full of crap, he can't possibly be doing that. It's not possible. Been there? Cynical? Plagued by disbelief? Maybe you have a negative outlook? Okay, so when we get you to that point where you're the guy that's posting win after win after win after win, or gal, and then people are going, no way, you can't. Look, we've got a certificate. We're going to validate your results. We're going to look at your results. We're going to give you a certificate. So that way the bragging rights are yours. Okay, you're the one bragging. You're the one with the bragging rights. Okay, so does this sound like what you're looking for so far? If it does, let's go over what's included. And then at the end, we're going to, like I say, we're going to give you a pass. Okay, all included: private community chat rooms, private members only chat rooms. Okay, these are where the best traders are hanging out, communicating, working together. Intro courses, futures, Forex, crypto, stocks, options, you name it, we've got you covered. Okay, intro courses. Foundation courses, basic to advanced. So this is those things like price action and structure and momentum and divergence and volume and all that. Okay. We've got foundations courses covered. We have a deep dive mastery level course on smart money concepts. How many of you trade smart money concepts? Very, very common thing to trade. We've got that very locked down. Okay, so market structure mapping. How exactly do you map the chart? How exactly do you know when you're going to go back and up and down and breaking structure? And how do you know how to draw those waves? Well, we've made a process that is 100% rules based. 100% rules based. What does that mean? That means there is zero subjectivity. You cannot break the rules with this. It's not possible. So how do we take something as vague as when to draw zigzags on your charts and make it rules based? And oh, by the way, it actually works. Okay, so that is in the price action course. Very, very advanced, but quick. You know, it doesn't take forever to get through the course, and it's a deep dive, but it's still understandable. Okay. Next, we have liquidity and levels course for things like supply and demand, order blocks, fair value gaps, breaker blocks, and so on. One of the best things that you can do as a trader is learn and understand these, and of course, market structure. If you can understand supply and demand in a way that is a deeper level, not just, well, supply exceeds demand, then price goes down, you know, not just that, but like really the deep dive of the market is coming down into a level. We expect the level to hold and push back to the upside. How would we know that? Things like, well, the market has told us it's cheap there. How would we know that? Well, it's because last time the market came to that level, it rallied all the way through and broke multiple structure levels. So that tells us the market's cheap. Well, do you think people are going to be buying the market here? Yeah. So shouldn't we want to do business there? Yeah. So we teach all that in that course. Okay, so that's included there as well. Strategy courses. You need a strategy. We've got lots of them for scalping, day trading, swing trading, training on indicators and algos. We've got it all covered. There's on-demand classes for that as well. Then, as we talked about, multiple live trade rooms. Really right now it's stocks and futures. Okay, Forex, we're not really trading too much right now, same crypto. And then options, we have courses on it, but we're not trading it in the trade room. Okay, so just so you are aware. And our trade room, by the way, is 8:30 to 11:30, and that's Monday through Thursday. Okay, that's, you know, all assets, stocks or futures. So you get access to that. So what is the total value so far? We're at 12,500. And some of you go, wow, that's a lot. Yeah, it is. And the reality is there are traders who pay more and get less. Now, we don't want you to have to do that. Obviously, you don't pay that, but we're just showcasing the value of what you'd get. What do our clients say? And we got over 1,000 reviews and counting, 1184 last time I checked it here. Our traders are happy because we take care of them, because we help them, because they're actually winning, because they're actually learning, they're actually making progress, right? But wait, there's more. Okay, so what else do you get? Well, you get any of our workspaces or templates, any of that, we'll give it to you. Things like NinjaTrader or trade ideas, or you want scanners for TC2000, or all of it, we'll give it to you. This is a big one. Very happy that we offer this, to be honest. Strategy and trade review. How many of you have taken a trade and you're watching the trade and you're like, wow, this is going to be great, and then you take the trade and it just completely does not work? And you're looking at the trade and you're going, man, I followed all my rules, I did everything to the T, and I just can't understand why this trade did not work. All right, well, if it's a one-off, it's a one-off. But if it happens over and over, something is missing, right? But how do you find what's missing? Well, usually you go back to YouTube and you start watching all sorts of videos on, oh my gosh, I'm going to watch this guy and he says this about structure, and this person says that about this, and this person says, order blocks, and this person says order flow, and then eventually your head starts spinning because you have no idea where to turn. And you just need something that can work within the context of a strategy that you already have, that you like. Cool, we got you covered. We will actually review your trade plan with you. We'll make sure it's complete. We'll review your trades with you and help you understand if it went wrong, what went wrong. If it went right, did it actually go right, or did you get lucky, right? Because that happens. Sometimes you'll be wrong and still get paid. That's fine. We'll help you review all that. That's a big deal. Most of us don't have that. Where do you get something like that, right? Usually it costs quite a bit of money. What about strategy trade plans and cheat sheets? All built out, all included with exact rules, where to get in, where to get out, risk reward, management, all of that. Now, we can't tell you how much to trade, but we can show you the rules, and then you can decide. And we have exact examples with everything charted out so that you can just see the examples and practice. So all of those come with, as we mentioned, we're already trading 5 strategies. You're going to get more than that. Okay, so good stuff. Onboarding, you want help onboarding, we got you covered. We can help you install, we can help you jump on the computer for indicators, all of that. Weekly VIP strategies class. This one, if you were to ask me where the most value is in this program, it's going to be here. This is a small group setting. We literally go through everything that you would need to know to become a really great trader. And I'm talking everything. These classes are once a week for futures, once a week for stocks. Okay, so we do that, once a week each. And then what we're going through is all of the foundations: market structure, momentum, volume profiles, order flow, all of that. So that's sort of one phase. Then we go into advanced, which is going to be things like psychology, money management, getting funded, staying funded, and then chart mapping. Where do you chart the order blocks? What about advanced order block mapping? Some of you are like, what the heck is advanced order block mapping? Exactly. We will show you. What about trade strategy? There are several trade strategies that we teach and counting. Currently, SMC order block trade, advanced anchored volume CWAP trade, fair value gaps, supply and demand breakouts, VWAP trades, volume profiles, order flow, trend line breaks, and counting. We're just adding more because there's no one size fits all. You might have one trader who wants to trade trends. The other trader wants to trade reversals. The other trader wants to trade breakouts. One trader wants to scalp. One trader wants to trade 1-to-1. One trader wants to trade 2-to-1, and on and on and on. So there's no one size fits all. So we teach you a bunch of different strategies that, by the way, all work. They've all been traded. They've all been tested. and they include all of the foundations that we talked about right here. So we got you covered there. This is once a week, as I mentioned. These classes are about 90 minutes, give or take. This week's class was over 2 hours. We were covering information on how to trade with algos. Any of you here trade algos? We went through deep dive course on trading with algos for our members. So really cool. Indicators, systems, all included. We have a sister company called Arc AI. How many of you are familiar with Arc AI? Maybe you've bought an algo or an indicator from us. We have 55 indicators plus, and counting, I suppose, but 55 indicators, they're all included. This package, I think it's actually $24.90, but we'll call it $2,500. We're going to include it in the package. So if you join our academy, you get access to everything. And when we say everything, we mean everything except for algos. Algos are still separate. Okay, but you're going to get access to all of the trade rooms, all of the strategies, all of the education, all of the indicators. Is it going to take you forever to get there? No, because we've got everything mapped out so where you can just get exactly what you need, start trading with us, and you can trade with us day one because you come into the trade room and trade with us. Trader success, funding, scale calls. These are 3 private one-on-one sessions with an instructor. So we will go over whatever you want to cover. Okay, so really important there. One-on-ones are very expensive. So we wanted to include a component of one-on-ones into this program. Cool. Good stuff. Total bonuses. If we add up the value across the board here, we've got about another 13,000 in value that we've been able to package in. The total value there is $26,000. And again, there are traders who have paid more and gotten less. Look, that's a lot of money. Obviously, you wouldn't pay anywhere near that for this program. Okay, but I'm not here to sell you anything today. What I will do is give you a free pass to the trade room. Okay. What I do want to mention though, even though we're not covering pricing, is we do something like really weird, which is if you're not satisfied, we'll give you your money back. The what? Yeah. So we'll give you a full refund. There are some requirements. We don't want you to be a lazy bum and just say, well, I paid for it and I didn't make anything. Well, yeah, because you didn't do anything. Well, of course you're not going to make money. You got to actually trade with us. You got to learn the setups, right? Okay, so we got some benchmarks, some things you have to cover. You have to show up for the trade room, or at least watch the recordings, but gosh, show up because we're trading. And if you want to trade, why not trade with us? Complete the online education, at least, the subjects that you need to learn. Participate in the VIP classes. Complete your instructor calls and submit your trade plan for help. What we are saying by offering this guarantee is that if you complete these things, we're telling you, you should be successful. Now, we can't guarantee that, but what we can guarantee is that if you do these things and you're still not happy, we'll give you a full refund for whatever you paid to join the program, and we'll even give you $500 for having wasted your time. You can use this to buy indicators or algos with us. It's a credit, okay? We will literally give you your money back. We're not doing this for the money. Sure, we need money to keep the lights on, so to speak, and to keep staff and all that. We do this because we want to help traders. That's why we're in this business. If we weren't doing that, we wouldn't be in business because traders would see right through that and be like, these guys aren't helping anybody, I'm out. We wouldn't have a business, right? So we are helping traders. We know we can help you, and we're willing to put our money where our mouth is. Okay, so as far as deals, we'll go over what our next steps are. So first thing I'm going to do is give you the link to our website. Oops. There we go. Okay, I'm going to paste it in the chat box. Okay, so it's coming in the chat box. That's our website. If you go to the website, enter your name and your email. Okay, enter that here, click for access. This is going to send you links to our trade room. It's that easy. So what, the pass is for like a few days? No. So the pass is for like a week? No. A month? No. A day? No. For good. What do you mean for good? I mean, you can come to our trade room anytime you want for good. It's free. We've opened it up. Our trade room is now public access, available to everybody, trade rooms. So click here, sign up, you get your pass. You come to the trade room, you trade with us as long as you want. For a week? No, for good. Come in and trade with us for as long as you want, because we know if you come in and trade with us, you're going to have the results that you want. You're going to start learning. You're going to get better. We see it all the time. We're not making this up. You're going to come in, you're going to see it, you're going to want to join, and then you're going to join because it's a great program and we're helping traders. You know, by the way, it works. So that's what you got. That's my offer. You can't beat free. Okay, so what I'm also going to do here is, oh, Brian, send us a message. We'll get you covered. I don't know what the deal is there. I'm going to give you another link. And this is another way that you can get into the live trade room. So I'm going to paste this in the chat box here. So if you do have any sort of trouble getting into the trade room, here's what I want you to do. I want you to go to YouTube. I want you to find Neurostreet and go to live. And there's a live trade room. And this is literally from today. Now I've got it muted because we don't need to hear me twice. My gosh, that's ridiculous. Okay, so here's our trade room. And you could come in and watch us trade. So here we are, taking a trade right here. This is from today. And it actually dictates for you, which is really cool. I didn't realize that that would happen, but I think that's amazing. So there's the link for YouTube. So just come into the trade room, trade with us. Yeah, you don't need Discord. We're not in Discord, not trading in Discord. We're trading on Zoom is where it's hosted from, or just go to YouTube. Go to YouTube and just find Neurostreet and then click the live, and then it's in the chat box. So just click it. Okay, so trade room hours are 8:30 to 11:30 Monday through Thursday. Okay, so we'll be back in on Monday. We won't be in there tomorrow. Okay, it's in the chat box, guys. Do you guys have that? You should have the chat box. If you don't, just send a message to support. If you go to our website, it's just look up Neurostreet Trading Academy, and you'll find us. And then send a message to support, and we'll give you the links. Yeah, no worries. As for the funding, I don't know yet. It is coming. I just don't know when. It's still in process. We're putting it together. TickBlaze is our new trading platform, and this is going to be live hopefully in March, hopefully, maybe April. Okay, April's probably realistic. May is probably pessimistic. March is probably optimistic, but it's coming. We've acquired a trading platform. It's really amazing. It does incredible stuff with quants and algos and all sorts of stuff. And we've formatted it to be really great for retail traders too. So it gives you the best of all the worlds. I don't see the link. Is it shown on the slides? No, it should be. Well, I mean, you just NS Trading Academy. Just go there, and that'll get you the link to the trade room. Yeah, and Rob posted it there as well. So you've got the link. So, I mean, it doesn't really get easier than that, right? So what's the process? Come to the trade room and trade with us. Where are we at here? This was there. Come to the trade room, trade. I don't know why I went back to the slide, but whatever. So let me give you this link again, because I see there's a bunch of people in the other one, and let me post so this is the link for the futures trade room as well. Okay, these are all our trades. In the month of February, we had like 10 days of trading in a row without a losing day. It was great. And then this week they were like, not so fast. We had a losing day this week. So ridiculous garbage, I know. Yeah, unbearable. How can you even come back and trade the next day? Simple. We made all the money back the next day. Problem solved. So yeah, so this is really great. We'd love to have you there with us. We are actually trading the markets together. I'd say we probably take anywhere from 3 to 5 trades a day is probably a good average. And so you're going to catch some trades with us. And they're good probability. Yeah, Jay, we'd love to have you. So come into the trade room, check it out. And then if you're interested beyond that, and you want to find out more, what'll happen is we'll book some time together and I'll go over everything with you and make sure you get really great pricing so that you don't have to spend a fortune, and you've probably all spent money, right? So yeah, let's save you some money so that we can make you some money. Sound good? That's the approach here. Cool. What other questions do you have? And then we'll wrap up. We're just about done on time here, so good to go. Anything else? Makes sense? Go back to the links. Bonus. There we go. Oops. That one. Cool. All right. I don't see any other questions coming in, and I want to be respectful of your time. First off, again, thanks so much for sticking around and hanging out and being part of this presentation. Really glad to have you here with us, because if I was talking to myself, that'd be really weird. Although it does seem like I'm talking to myself sometimes because there's nobody else in the room with me. So,
Hey, I'm in the room here with you.
Well, that's true, right? All of the ARC indicators are included. Yes, in this.
I was just going to tell you had that question rolled in.
Yeah, good. Very nice. So
Jim,
cool.
I got to tell you, I love your demeanor, just the way you talk, go through things, present them, and kind of the overall attitude that's portrayed by your, everything makes sense kind of presentation. But
yeah, that's awesome. Thanks for sharing. Yeah, this is how I am in the trade room too, guys. I'm the same all the time. Like, this is what you get, like it or not. So no, it's good.
But those setups and strategies look great. Ladies and gentlemen, if you're interested in avoiding all the common pitfalls that traders fall into and learn how to stop failing prop firm evals once and for all and finally achieve consistent results, then Jim Simmons and the team over at Neurostreet Trading Academy have a solution for you. He and I have both put his links in the box, an offer for a few free days in there to test it out. And who knows, maybe you make some money and you can pay for it with it.
There you go.
This is Mr. Jim Simmons of Neurostreet Trading Academy, a true professional and expert, guys. Thank you so much for sharing this opportunity with our audience, Jim, making them such a generous offer. Great presentation. We can't wait to see you back here again.
Yeah, thanks so much, Rob. Always good. Appreciate it. Have a good one, guys. Take care.
Hey, happy Leap Day to you, sir.
All right, thanks. Cheers.
Well, ladies and gentlemen, I mentioned at the top of the show that we had a great lineup, and I hope everyone's listening closely because our last presenter is a graduate of Syracuse University and has been trading the financial markets for the past 15 years. He wears several hats over at Right Line Trading. He's a trading coach, assists with the optimization of trading strategies and indicators, provides logistical and technical support, and is always ready and willing to assist the Right Line Trading community. Here to present AI Auto Trader Self-Learning Technology is Mr. Rory Powers of Right Line Trading. Welcome to Traders Corner, Rory.
Hey, Rob. Thank you very much for that great introduction. I really appreciate you guys having me. Thank you.
No problem.
I just want to confirm that you could see my screen and you could hear my voice.
I'm looking at a guy much more handsome than you inside of the little bubble, and I can see the Right Line logo and beginning of the PowerPoint.
Okay, great. All right, so let's get started. I know it's been a long presentation, a lot of valuable information. I had the privilege of being able to listen in on most of it, and I just want to keep your attention maybe for 30 or 40 minutes because I think I've got something here that is extremely exciting and valuable. My presentation today is on our AI Auto Trader. And if you've seen me before on Traders Corner or in another event, I've got some new information to share today. The system, the optimization process continues. And as software developers here at Right Line Trading, that's what we do. The system is based on mathematical modeling, and we've integrated with the assistance and collaboration of a world-renowned AI lab. We've integrated a self-learning component of artificial intelligence that I'm going to be going into very shortly. So let's go ahead and get started. I'm going to make it very short and brief, and then I'll give you a great opportunity to get aboard. I just want to take care of the CFTC requirements and just let it be known that I am not a licensed financial advisor. There is significant risk in trading. If you're not familiar with the risks associated with trading, please consult with a licensed financial advisor. With that being said, I want to just take a minute and recognize my team here at Right Line Trading. Right Line Trading, our mandate and our vision is to develop innovative trading strategies that help predict the future direction of price. And man, we all know how valuable that information can be. We also want to build a community of traders that help collaborate and support one another in our trading journey. And we're in this thing together. And we want to do it most importantly with transparency, honesty, and integrity. And I think one of the main things that distinguishes Right Line Trading from a lot of our competitors is the fact that we trade our systems in a live market every morning. With our software, the mandate, the goal being to help predict the future direction of price. Those powerful trading signals that help predict the future direction of price can be leveraged really in just about any financial instrument. Currently, we have 3 live trading rooms, plus we also stream on YouTube Live, our AI auto trader. But we have our futures traders, Mr. Craig Emery. David Kushner is a professional prop trader. He successfully manages and trades 6 funded accounts. And then we have our options traders, Mark Sachs. David Wyse is just a brilliant options trader. He, over the last several years, has maintained about an 88% win rate day and swing trading options. Behind the scenes, we've got a very educated and talented group of staff members here. Brock Miller, very briefly, he's our college student. He's getting his degree in computer science. We have Charles Sider. He has his master's degree from UCLA. He's an engineer. He's the engineer on the team. And I can't tell you how many mornings in the meeting, I've wanted to pull the hair out of my head because he makes sure that all the I's are dotted and the T's are crossed. Everything is meticulous with him. And he's a very valuable asset to the team. Mr. Sergio Luque Rodriguez really brings to life our, sophisticated mathematical modeling equations and brings them to life on a computer screen. Sergio has his master's degree from a university here in Florida called FIU. And last but certainly not least, Mr. Mark Miller, who heads our team, has his MBA from Cal State. He's a U.S. Army veteran, and he's instilled those core military values of transparency, integrity, and honesty into all of the facets, all of the departments here at Right Line Trading. So Rob did a beautiful introduction. I want to just take a second just to tell you a little bit about myself. I'm a graduate of Syracuse University. I reside in South Florida. My wife and I are the proud parents of 2 beautiful children. We have a 5-year-old and a 1-year-old. Both of their birthdays are in March coming up. My little one, who's turning 1, her birthday is actually tomorrow. And our other little one, she will be 5 on March 9th. And this is a picture of myself. Other than trading, I've been trading the financial markets for just over 10 years now. And my other passion besides trading is saltwater fishing. And you can see here I've located a little bit of a honey hole down in Key Biscayne. I'm right by the Florida Keys. And this is a nice grouper that we caught last week, about a 14-pound grouper, about 25 inches. That's a red grouper. And he was delicious. So with that being said, the genesis of the AI auto trader was we learned the hard way in our trading journey that trading is full of potholes and challenges. It's not as easy as it's originally presented to us. I know in my inbox I have hundreds of emails that really talk about winning trades and how much equity that the trader has built over the last 6 months or year, and they make it all sound very simple. However, we come to find out after we fund our account that it's really not as simple as they make it out to be. So in our trading journey, we've all experienced problems with consistency. If I listened to Chris a few presenters ago, and he talked about these emotional errors that, genetically we're predisposed with personality traits that just don't lend well to being a good trader. We trade with emotions. We make impulsive decisions. We revenge trade. We overtrade. Me personally, I'm a trader that likes to squeeze his stops. I'll see my trade, my P&L will turn green and I'll start winning a trade. And it's like a reflex. I go right to the stop and I drag it up and I squeeze it too tight. It'll come down, give me a head fake and stop me out, only to continue in the direction that I had the position, where I would have made a very nice, handsome profit on the trade. And then, on the other side, on losing trades, I bail out. Nobody wants to see the red of that P&L, building up to the negative side. We get a little nervous. We start twitching in our seat a little bit. And we'll close the trade only to see it mature and go in the right direction that we had to begin with. So, those emotional errors that we make as traders, we don't think about it, but if you add them up over the course of a year, 2 years, or 5 years, it adds up to a really substantial, significant amount of money. I could tell you in my trading journey that I've probably quit trading 4 or 5 times. I just got so frustrated with it that I said, you know what, it's just not for me. Forget it. This is not, this isn't something that I'm going to be successful at. And that was the genesis of the AI auto trader. That feeling that it's just not for me, and I just can't do it. It has been my team's commitment since we started this to bring this to an end. Because listen, all of these emotional errors and trading with indicators that lag price, it all leads to a very lonely place. And I think we've all been there before, to a blown out trading account. And that is a lonely, desolate place. So that was the genesis. And we've narrowed it down to 2 things that create trading success. Number one, we need the proper tool set. The proper tool set, and I want to build a little bit of a foundation here. Those of you who trade futures are very familiar with NinjaTrader 8, I'm sure. NinjaTrader 8 is an extremely powerful futures platform. If you're not familiar with NinjaTrader 8, it's a free platform. It's 100% free. Most of the prop trading firms do support NinjaTrader, and they give you a free license key to Ninja along with a data feed connection. Or you can go to NinjaTrader's website and you can download their platform for free and fund an account, and you can jump into the game very quickly and easily. So that's what the AI auto trader runs on, is NinjaTrader 8. Okay. The second component that we've identified to create consistent results is we want ideally software that can automatically get us in and get us out of trades to maximize our profits. Left to our own devices, we can find a way, I know I sure can, to muff things up. Making split-second decisions in a very fast-moving market on a sophisticated trading platform, there's a lot of things that can go wrong very quickly. I think we've all experienced those situations in the past. The AI Auto Trader eliminates that. And I want to quickly highlight some of the benefits that go along with using our AI Auto Trader. First, the AI Auto Trader, it removes all of the emotional trading errors. It's going to help build consistency in your trading. It trades a diversified portfolio of strategies, and it follows in the direction of large institutional money. The way the system has been built is it looks at a disparity between uptick and downtick. It looks at a multi-time frame assessment of momentum and trend. And it takes a couple of other factors into consideration before entering a trade. But the important thing to understand is that when large institutions are rotating their equity from one asset class to the next, our software sniffs it out, picks up on it, and will jump into the trade where it defines risk to be at its lowest. So the benefits from our AI Auto Trader, it's going to automatically keep you into the trades in the right direction, following with institutional money. It's going to automatically place your stop and your profit targets in the most ideal places. These stops and targets are optimized dynamically now. Okay, this is part of the new information that I want to share with you. The biggest knock with auto traders has been that once market conditions change, they're no longer successful. You might first get it and it does well, but once market conditions change, it gets stale and it no longer works. Well, that's no longer the case. We've integrated an artificial intelligence component that will dynamically, right in the middle of your trading session, change where the location of your stops and your profit targets are based on the data. So the profit targets and stops are optimized. So there's no more cutting your winners short, and there's no more mismanaging your trades. Once the strategy has been enabled, it's going to execute and manage the trades on your behalf. So I want to very briefly, and then I'm going to show you the workspace and some of the results, but I want to very briefly go over a few of our most profitable strategies that the system leverages. The first one that I'm going to highlight is called the retirement plan. The retirement plan, and let me tell you, it's named retirement plan for a good reason. With the results that this strategy has been achieving, if you've ever dreamed of retiring, this will put you one step closer. I assure you of that, and I'm going to show you why I say that. This strategy has just been crushing it. It has a risk to reward ratio of about 4.5 to 1, almost 5 to 1. It's risking 46 ticks to make 180. So if we're trading one E-mini, and all of the results that I'm about to show you, our ATM strategy was one contract. Okay, one E-mini contract. Can you trade micros? Absolutely. I always get asked that. Can this system trade micros? Yes. Can this system be used to trade prop accounts? Yes. And it has features that really lend very well to prop trading. But I don't want to lose my train of thought. The retirement plan trades on a 2-minute data series, risks 46 ticks to make 180 ticks. And the results that we've been getting with this strategy, well, from January 10th to February 15th, The strategy made in just over a month, just under $6,000, $5,816. Around February 15th, we integrated the new component, the AI component that adjusts the profit targets and stops. And you could see my trade performance here from February 14th to February 28th. And this is trading the retirement plan. It took $4,741 in winning trades. The max drawdown on it was $706. So if you are a prop trader, this is going to minimize your risk significantly. The stop starts off at 46 ticks. However, the way we have the system set up is the bot is going to run simultaneously with what we call a drone strategy. There's a second strategy called the drone for the retirement plan that runs, and they both share the same database, and they share a closed loop system. And I'm going to explain a little bit about how that works in just a few minutes. But dynamically, it will adjust based on the maximum forward excursion and the maximum adverse excursion of that drone strategy. So the drone strategy is going to see on a winner how much heat that it actually took in order to achieve that profit goal. On a losing trade, it's going to see what was the maximum forward excursion. How much did I actually make before it stopped me out? And it's going to adjust your stop and profit targets accordingly. So your risk to reward is going to range anywhere from 3-to-1 to 5-to-1 on this strategy. And if I go to my my analysis, you can see this equity curve over the last couple of weeks has just been outstanding. It's just a beautiful equity curve. So this is part of our portfolio of strategies, and the retirement plan is one of our best strategies that we're currently running. It's on a 2-minute data series. The next strategy that I wanted to highlight is called our cash register. Our cash register is a very slow, methodical strategy. It trades a 5-minute data series on the E-mini. It doesn't take a lot of trades, and it runs on a 5-minute. This strategy was developed in collaboration with Mr. David Wyse. David Wyse is our professional options trader that I had alluded to earlier. And one of the core principles of his trading methodology is he looks at the relative strength versus the SPY. The SPY, of course, is the ETF of the S&P 500. Well, the ES is our futures S&P 500. So he's very well versed at trading the S&P 500, in his case, the ETF. The strategy looks at the market internals, the VWAP, momentum, a couple of different conditions. It trades on a 3-to-1 risk to reward ratio. And over the last 6 months, it's been extremely consistent. I could show you here what from January 4th to February 15th, it made $4,236. Always finds a way to stay in the green. Very little drawdown. And that's really what I like. I don't really like to trade strategies that are going to give me any significant drawdown, especially if you're a prop trader. You just can't have it. But in the last couple of weeks, from the 14th to the 28th, very consistent, about $1,273. One thing that I forgot to show and that I wanted to show, on my retirement plan trade performance, let me bring that back for just a second. If you notice here, and as futures traders, one of the biggest things that really hurts us is our risk to reward ratio. This is the 30 range. That's the next one that we're going to go over. But on my retirement plan, Let me see if I can find it. Here is this one. On my retirement plan, if you look at our risk to reward, the average winning trade on the retirement plan was $863. That's trading one E-mini. The average losing trade was $180. So with that AI, artificial intelligence component, minimizing our risk on these trades, when it can pull your stop in, it will. I've seen it work in real time. And if it notices the market is really trending nicely and moving nicely, it's going to pull your risk in where it starts at 46 ticks. I've seen it pull it into 15 and 12 ticks and still go on for a 180 tick winner. So it's a very sophisticated system that's going to make your risk to reward ratio something that's going to work in your favor instead of be a detriment. So that's a huge component to the success of this system. So let me keep moving. And then the last strategy that I wanted to highlight, excuse me, I'm just getting over the flu. But the last strategy that I wanted to highlight is also one of our most powerful. We call it the haymaker. We call it the haymaker because it can get you out of the trading session extremely fast. It runs on a 30 range data series. And just like the retirement plan, it has an amazing risk to reward ratio. It's 4-to-1. We're risking 40 ticks to make 200. So you're risking $200 on a trade to make 1,000. So we really don't have to win that many of our trades to be successful. If we have a 40 or a 50% win rate, we're going to do just fine with that 4 or 5-to-1. And this haymaker, let me tell you something, has been delivering. The haymaker on my performance here was the one that I had just slid over. Just recently from the 14th to the 29th, it's up right around $3,000. And it has our average losing trade at 177 and our average winning trade at $804. Okay, so these are not scalps. These are trades that you're in the market, for sometimes 10, 15, 30 minutes. And it's letting the trade mature, and it follows along in the trend that those large institutions create. So really nice equity curve on the haymaker as well. Slants up to the north very nicely with a minimal drawdown. So the nice part about the strategies is we can control exactly how much risk that we're willing to take. We can put in the parameters of the strategy that, hey, if I lose $400, which would be 2 losing trades on the haymaker, then I want to stop trading for the day. I'm a firm believer in capital preservation. If I'm up $1,000, I'm going to turn my strategies off, and I'm going to try and do it again the next day. But maybe even more importantly, if I take 2 losers, and that's just my personal risk tolerance. If I'm down $400, I'm also going to disable it, and I'm going to live to fight another day tomorrow. I just had a bad day, and you know what? It happens in trading. We're not going to have green days every day. And if someone tells you differently, I would take it with a grain of salt and do your due diligence. So I want to show you the workspace really quickly on my other screen. Let me see if I could switch monitors. Sharing here. Okay. So this, I don't know if you could, I have my note, the webinar notes. I don't know if that's blocking my screen, but this is our workspace right here. And I listened to Jim from Neurostreet just a few moments ago, and he was also mentioning that they have a YouTube live stream, and I really I really think that that's a great practice, and I really respect that transparency, because we know as traders, especially when we're vendors and we're trading our system in a live trading environment, when we have a bad day or we take losing trades, it's like having a pimple on the end of our nose. You just can't hide from it. So it takes courage to get in front of a live audience and trade this system. And Jim mentioned that he does it on YouTube Live. And I also want to mention that we also do it every day on YouTube Live. Okay, this isn't buy the system and hope it does well and pray for the best. We're extremely transparent about the system. We invite you to join us. It's also on our YouTube channel under that live section. You're more than welcome to see this system, which is an absolute powerhouse of a system. Trade these financial markets. You could see on my control center here, if each one of our bots has a drone that's attached to it. And what I'm going to get into, this is a workspace here. We've put images in the background of the charts. Really, it's for when we're on YouTube Live, we just kind of did it because we're streaming it live on YouTube. But that's not the chart templates that you would receive with the system. The chart templates you would receive with the system look something like this here. Let me see if I can open this out. This is a chart here from the 30 range haymaker today, and you could see some of these trades. They're beautiful trades. The entry, the trigger is when the RSI line crosses the 20 or 80 line, and we have market internals and a multi-time frame assessment of trend. That's the background color of my chart. So this strategy took an entry right when my RSI line crossed the 20% line. You could see the entry on my chart, and it went all the way up, and it hit my profit target. I'm assuming that was at 180 ticks. So it wound up finishing the day with this long trade. It took another long trade, and it hit my profit target of $1,000. So this is the chart template that would actually come with the system. And I just wanted to mention the YouTube Live and show you what to expect when you get into YouTube Live. We're running all of the strategies on a live market every day. So let me go back and continue, because I want to. We don't really believe in offering a black box system where you don't have a clear understanding of how the system works and why the system had taken a trade. Our members are really doing outstanding. We have a great Discord chat group. I happen to be one of my personal friends. His name is Leon. He's a truck driver out of Massachusetts, and he trades the system on his prop accounts. He got funded in one day trading the haymaker, made $3,000 in one day. And in fact, one of our other newest members from Nigeria, Daniel, his first day trading the system was up $2,900 on his Apex accounts, and that was just this week. So with very little experience, it was actually his first time trading a prop account. So the system is very powerful, and you'll see that if you come join us on YouTube. From January 12th to February 13th, that haymaker was up $11,495. Now listen, this is not a back test, and I want you to understand that. I've been in some other presentations where they'll show you from a strategy analyzer this back test that has these phenomenal numbers that over the course of 10 years, and it's just not real. These are actual trades. That's why we've kind of opened up the analysis, and you could see day by day, session by session, what the cumulative net profit was for that session. And those are all based on a one contract strategy from January 12th to February 13th. Okay. So what is the secret sauce behind our success? I've been on Traders Corner in the past, and I've always said that it was coming. It was coming. Well, guess what? It's here. Just last week, we released our self-learning component to the AI Auto Trader in collaboration with a very prestigious AI development lab. We've developed a closed-loop system that helps gather data from previous trades. And it gives the system the ability to constantly optimize the stops and profit targets. It runs on a continuous loop and this self-learning closed loop system. And the AI Auto is always enhancing and optimizing its inputs. The way it works is the closed loop system. Every single one of our strategies has two components to it. It has the bot and it has the drone, okay? They're both running together. You would enable both of them together. The drone is going to, the actual bot and drone will take the trade together. The drone has stops and profit targets that are extended a little wider. And it's going to run through the same database that your active bot is also running. And what it's going to look at is the maximum adverse excursion, the maximum forward excursion, based on the current trading environment. Okay, we've all seen a trending market. We see what it looks like. It's a nice, beautiful, big pathway up to the sky. But we've also seen when the FOMC comes out and they're going to read their minutes, prior to them releasing the minutes, the market is very ranging and choppy. We can't have our stops and profit targets in the same locations when it's a choppy or a ranging market than we would have for a trending market. It would get chopped to pieces, and those were some of the mistakes and some of the issues that we've had in the past. This closed loop system has been our solution, and it constantly optimizes the location of your stops and your profit targets based on current market conditions. So that's the main benefit of this self-learning AI model, is it has the ability to adapt to changing market conditions. The nice young lady, one of the staff members of that AI lab, she talked about, she discussed with us how the model learns what they call pattern recognition, and it starts forming a bias. The more data that this system accumulates, the more powerful that it gets, the more accurate the output becomes. So when you first get it, it's a good idea to let it run in sim for a week or so. Let it accumulate data. Let it start forming a bias. You'll start seeing in your P&L that there's 5 or 6 or 7 strategies that are just blowing the doors off of all the others. And those are the ones that we want to focus on. Sure, there's going to be strategies in the red. But the most important part is we're going to focus on those 4 or 5 or 6 or 7 strategies that are giving us consistently profitable results. And those are the ones we're going to rotate into our funded accounts. So, of course, it's going to lower the risk and improve accuracy when we're able to dynamically adjust our stops and targets. So that's really the main benefits of that self-learning component. I wanted to just take a quick look and see if I was going to open up one of the strategies. If I bring over my control center, and one of our most successful has been the AI, the 30 range AI drone. If I disable it and I open it up, you can see in the components of the strategy, and I'm not going to really get into a lot of the minutia now because it's been a long day, but I wanted to point out that it gives you the ability to set your daily loss limit and your daily profit target. If your risk tolerance is you don't want to take more than a $500 drawdown or a $300 drawdown, whatever it might be, you can put in whatever you want it to stop trading at. If your loss limit for the day is $300 or $400, you put it in there, and at $400 it stops. This one today ran at a $500 loss limit and a $1,500 profit target, and it hit the $1,500 profit target. So I just wanted to point out that it gives you that ability. You can also put in how many contracts you want to trade. Once you've built up some equity and you feel comfortable and you've gained some confidence in the strategy and you want to scale up, the sky is the limit. We're trading instruments that are extremely liquid. We're trading the S&P 500, the NASDAQ. There is no bid-ask spread. They're extremely liquid instruments. And if you're going to trade 3 or 4 or 5 contracts, it's not going to cause you an issue getting the fills. So really the sky's the limit with these. But all of my examples today were based on one contract. So if you do decide to come aboard today, I just don't want you to be intimidated by the technology. Sergio developed a tool actually that we could do the installation in about, 2 minutes flat. It's incredible what he developed. It will automatically put all of these strategies, the bots, the self-learning loop, drones, separate folders, all of the accounts, they're all instantly put into your Ninja with a special tool that we've developed. So the installation takes under 2 minutes now. We have 3 or 4 guys with degrees in computer science that will share your screen and get this system up and running same day. You order today, we'll get it installed today, tomorrow at the latest. So don't be intimidated by the technology. The only thing that you're going to have to do once it's installed is disable and enable the strategies and have the ability to switch it from a SIM account to a live account, which is very easy. The other bonus that we're offering today is we have a 2-module masterclass, and I really I encourage everyone to watch these. We know that maybe 30 or 40% of our members like to get under the hood and have a clear understanding of each one of the inputs. So it probably will only appeal to 30 or 40%. But I think the more you understand how it works, the better that you'll be at trading the system. So I really encourage you, if you do decide to come aboard, to watch these. I think they're 45 minutes to an hour each. They go through all of the parameters of each strategy in Module 1. Module 2 teaches you how to make your own strategy on any instrument that you want to trade it on. So they're really great information that's part of it. So the special offer, we always try to do, for Traders Corner, we always try to do something special, and today's no different. We're going to run this special through the weekend, so don't miss out. Sunday is the deadline. We'll be on YouTube live tomorrow, either myself or Mark Miller. We'll be hosting the session. Please come and join us. Let us put our money where our mouth is, and you can come see the system perform on a live market. I think it will blow your mind when you see this. What kind of gets lost in the message? And I just want to, real quick before I go over the offer, just mention that this system is trading all of the index equities, okay? The NASDAQ, the Dow, the Russell, and the E-mini. And it's also trading precious metal with gold and energy with crude oil. So it's trading 6 or 7 instruments at once on 3 different time frames, okay, in a fast-moving market, and it's following the rules and not breaking the rules one time. It's getting into the trades only when the software defines it as the lowest risk, and it's not making one human emotional error. I've been talking to traders for 10 years, and one of the most common questions that I get now is, what am I better off doing? Am I better off trading a discretionary system or the automated system? And I think to myself, well, 95% of the people that buy the discretionary system, a year or two later, come back and buy the automated system. Why? Because they failed, just like I did. To be a successful trader on a discretionary basis takes a special person. Emotionally, you have to put yourself in the zone, very similar to Michael Jordan. With these automated strategies, it gives you a powerful tool, a powerful edge over all other retail traders. So I think the answer to that common question, unless you're one of those people that is extremely disciplined and can trade with zero emotion and doesn't make many human errors in a fast-moving market, you can make split-second decisions. If you're one of those 5%, then go with the discretionary system. If you're a normal human being like myself who makes mistakes constantly, save yourself a lot of heartache and trouble and get yourself this automated strategy. Technologically, it's the most advanced out there. So the special offer today, we're doing a coupon codes. We have a monthly, annual, and lifetime option. The monthly option, it normally is $6.99 per month. And I've had some traders say, wow, you know, that's a lot of money to spend per month. And it definitely is, sounds like a lot of money. But it's all relative, okay? If you look at that nice truck driver out in Massachusetts, Leon, who turned the strategy on and made $3,000 in one day, then him paying $600 or $700 a month, you know, is very money wisely spent. For this special offer, use coupon code SAVE $200 and it'll be $4.99 a month. On the annual, we're bringing it down from $33.99 to $23.99. So just $200 a month is what it breaks down to. $200 a month, you'll have the full portfolio of strategies, the new technology. You'll join us every day on YouTube Live. You'll be in our Discord chat group for the entire year. And last but not least, the best value is going to be the lifetime license. If there's some people that just don't like recurring fees. You know, I kind of think about the dentist. You know, it's going to hurt for a second. You know, that's what she tells you right before that root canal. The $39.99 is going to hurt for a second. But you know what? After a minute or two, and you've got that system running on your machine, man, you're going to be so happy that you did it. And you're going to have it for the rest of your life. This is a system that has the potential to return amazing dividends on a lifetime basis. So for a lifetime license, for those that do not like recurring charges, it's a 50% discount for this Traders Corner special. Normally it's $79.98. We're doing it this weekend only for $39.99. $39.99, you'll have a lifetime license. Any future technology that we come out with, listen, that collaboration that I mentioned with the AI lab is ongoing. Okay, I assure you, Right Line Trading is committed. We are pouring resources into this system to continue to make it the most powerful automated system available to retail traders. So join us now while the price is good, because there is a good chance that it will continue to go up as we continue to make the system more powerful. And last but certainly not least, I did want to mention our Discord chat group. Listen, we believe that there's power in numbers. Being part of a community of traders is really very valuable. We have a beautiful Discord chat group. We have the general chat channel. We have all these different channels, the strategy resources where we have the tutorials. If you're having a tech problem, we have Calendly links for all of our IT techs that you jump on their calendar. They're on your computer the same day. And we have several channels for prop traders, technical trade talk, software updates. listen, there's power in numbers, and I'll tell you what I mean by that. It's very valuable to be in a community of traders to see which strategies are working well for other traders. Okay, sometimes even more important, in my mind, is seeing what's not working for other traders. That will prevent you from heading down that same dead end. You're not going to repeat their mistake. So there's power in numbers, and we have a great community. There's over 200 traders in there on a daily basis that are all sharing information. So the Discord chat group is most definitely included in this special offer. Let me just check the questions real quick. Listen, if I don't get to your questions, I'm just about out of time. Please put your name and your number in the chat box. I see it. Nobody else does. I'll take a screenshot of it, and I will give you a call. If not this evening, I will for sure give you a call tomorrow. So if I don't get to your question, please put your name and your number in the chat box, and I will do my best to answer your questions. Thank you, Eric. Thank you, Raj. I do have a question regarding the lifetime license. If you buy a lifetime license, are any future updates and new strategies or add-ons added automatically? That's a good question. The short answer to the first part of your question is you will have access to all future updates and add-on markets. Will they be added automatically? No, we would have to physically go on your PC, either send you the update or remote in and add it manually. They wouldn't automatically be added. But good question, E. They absolutely will come. And man, do we have huge plans for this system. Where we've come in just the last 12 months, it's just incredible, and it's a testament to the hard work that my team has put in. I'm not a pro trader. Without knowledge, can I trade? And you're in Canada. Raj, with Canadian traders and NinjaTrader 8, there are a couple of pathways. You have interactive brokers who supports Ninja. You also have prop firms that'll support Ninja. And I also want to mention that you could trade these strategies with little to no experience. It helps if you do have experience, but out of the box, we have a number of strategies that are going to blow your mind. Okay? Absolutely, you can use this in the UK. If you're overseas, I'm glad you brought that up, Mr. Patel. Mr. Patel asked if he can use it in the UK. Yes, we've actually hard-coded into the strategy parameters to where the times that are in the strategy templates all look at New York time, regardless of where you are in the world. If you're in Australia, the UK, or New York City, your strategy parameters are all going to be at New York time. So you could trade this anywhere on planet Earth that you have an internet connection and a live data feed. Okay. All right. Well, I mentioned the YouTube Live, and I really don't want to take too much more of your time. We've got a beautiful new website. If you order, you'll get instant access. You'll be in the members area of the site. You'll have instant access, and we encourage you to come aboard. I want to take just a moment to thank you for joining me, and thank you, Traders Corner, for having me. One last message. If you're like me and you've struggled in your journey, this is a solution that has the potential to be a game changer. Give it a try. I think that you'll be quite pleased you did. Thank you for joining me, everyone. God bless you and your families. And I think Rob mentioned that he had to leave. So I'm just going to leave this up and running for just a moment. Yes, we do accept PayPal. I see your phone numbers coming in. Thank you, Douglas. How do you access YouTube Live? Thank you. While I have an extra minute, what I'll do is let me bring up YouTube, and I'll put the link right in the chat. Come join us tomorrow. I think you'll be pleasantly surprised you did. on our YouTube channel, this link I'm going to put into the chat box will bring you right here. And the one that's coming up tomorrow, tomorrow morning, you'll see it. It'll say live, and you can click on it. These are some of the recordings of the previous sessions. And man, I'm telling you, this system is the real deal. Wait till you see how powerful it is. So I'm going to put this in the chat box. And my special offer is also in the chat box. And Gene, I will send you an invoice through PayPal. Okay, everybody, listen, I see a bunch of names and numbers. Most likely I'll be giving you a call tomorrow. So thank you very much, and God bless you all. Have a great weekend if I don't talk to you before the weekend. I sure will, Pat. Thank you, everybody. Thank you, Traders Corner. Bye-bye.